Good morning. Starting a little bit early here. Just settling in, let some people join the chat. We got some good movement going on. Just finished setting my stuff up here on my end. Let's see here. How's everyone doing this morning? AMC is doing quite well pre-market. That up almost 11% right now. Good morning, everyone who's joining. Good morning, good morning. Look at this, AMC. Let's check out GameStop pre-market. GameStop up 16%, up to 104. We might have quite the open here. I know many of you are in on AMC, so we'll keep it on that the majority of the time. Good morning, everyone. If you're just joining, if you wouldn't mind just clicking that like button, help push this stream out to more and more people. Help the old YouTube algorithm. Good morning. Good morning, Karen. Good morning, James. What's good? These stocks are darn good. Let's see here. Almost to 12%. Just over 11% up. Pre-market, we have about 11 minutes before open here. Good morning, everyone. Yeah, 153,000 subscribers. Yesterday was my second largest subscriber increase in a single day. So thank you to all my new subscribers. Morning, Chris. Good morning, good morning. Welcome. We got some craziness going on this morning. Hopefully it stays up around these levels. Grab your coffees, grab your sparkling water. Sparkling water ASMR. Let's check out GameStop. Up 20% now pre-market to 108. Wow. Thank you, Annette, for the new subscription. I appreciate that. Thank you, Pistol Pete. Grab your Earl Greys if you have them. Good morning, everyone. I don't know, this might be the day here. I know pre-market in the first hour can be pretty chaotic, but looking a lot better than yesterday anyways. Yeah, chamomile, whatever kind of tea you like, or coffee. Near 20% increases pre-market. We got 8-9 minutes before open. Yeah, this could be the day. Let's see. AMC's up 12.5%. We might see just a rocket right when these open with all these other people who are seeing these rates start to increase, who are just trying to hop on that train. Some brokerages allow people to trade after hours. Someone asked how pre-market works. A lot of big institutions can, but some brokerages, like Charles Schwab, I think you can trade till like 8 p.m. Wells Fargo, you can trade until I think 6 p.m. Eastern. And then I think TD Ameritrade, you can trade 24 hours if you sign up for it. I might be wrong there. How did I sleep? I slept like 5 hours. I was here until like 10:30 last night. Got up at 5:30. So it was fine sleep, it just wasn't long enough. What's my opinion on how mainstream media would cover the rising of GameStock or AMC? I mean, we'll see. We can see if, let me pull up CNBC real quick. We got some time here before open. See how they're explaining it. They were kind of just ignoring the stocks yesterday. Well, they're just on commercials, so that's real cool. Half the time they're on a commercial. So we'll go back to this for now. What would mainstream media have to say about this? They would just send us to commercial. So just about 21% here, up to 108. What do you guys think? Are we just going to see a rocket right here in the beginning? It might just shoot right up. Someone asks if the squeeze is over. I mean, the true squeeze hasn't ever even started. So it's more a matter of when does the thing start, and we just don't know exactly as of right now. It's all a matter when the short sellers start selling off their positions in a significant way. Not too bad. We got 5 minutes here before open. Things are looking pretty good. Good morning, everyone who's just joining us. Still in commercials. Oh, saw a nice little bump up here. I need to get some more coffee in me, though. That's the main priority. Someone sent me an AMC meme yesterday. I'll check my email in a little while here after the pre-market and the open settles a little bit. But if you have any content, articles, videos, memes to send me, email them to me at maxmahershow@gmail.com. We'll check them out a little bit later here. That's maxmahershow@gmail.com. Do you think AMC being placed on the short seller restriction list will have a significant impact this morning? It definitely might. I couldn't find AMC actually on the list yesterday evening, though. I know GameStop is on there. It wouldn't make sense if one was in the other, with both of them showing those sharp declines. So definitely could. Don't say you're doing this live until market close today. I wish. I have a meeting at 11:30 today, so unfortunately I can't go all day. I've been debating on doing just a marathon stream tomorrow. I think we went for like 7 hours and 15 minutes yesterday, so I might have to try and beat that record. Up nearly 30% now, GameStop. Wow, to 116. My little one measly share at 101 is looking pretty good. I know most of you are in AMC. That's where most of my holdings are too. Still almost 15% up though. What's going on, Chance? Good morning, everyone. Pistol Pete's got 400 shares of GME. Wow. Good morning, good morning. What time is it here? It is just about 7:30. Let's go over to this page. We can see we have a few different pinned holdings. If you want me to pin another one, just let me know. I'll pin it here. But we got AMC, Bitcoin, BlackBerry, GameStop. Not bad here. Strong opening. I don't know. Today might be the day we see something shoot up. GameStop's up $22. We got about a minute left before open. We got sundial growers right here. Oh yeah, Express, I can add that. It says I already have it added. What's going on? Oh. We had Express too. There we go. There's Express. We should be open now. Yep, we're open. All right, now let's see if this rocket takes off. We're up 13.5% here with AMC. 882. Nokia is at just about 3%. Express up 12% so far. Does anybody still use Robinhood? That's a good question. Doesn't really seem like it. This is Webull for anyone who's wondering. You can use that link in the pinned comment if you want to make an account. GameStop's 111. Still no mention of GameStop or AMC on CNBC right now. Let's see. AMC's still up, but we're a little bit down than before. GameStop 10%. Good morning, everyone. Still have yet to see this thing rocket up. Let's see, GameStop, still up 10%. I guess we can't complain being 3 minutes in. Good luck, everyone, today. Good morning, everyone. Good morning. Thank you for joining me. Let's see if these positions go up. Check out my AMC holding, see exactly how negative I am still. What we need to do to get out of this pit. I'm down $700 on my 304 shares. Let's check out AMC here. I think a lot of people wait for the dust to settle before they start buying on any given day. Still up. Oh, some buys here. I don't know, I'm feeling good about today. I am feeling good about today. Yeah, it's a little better. Thank you, Chance, for that recommendation. Yeah, sundial's kind of taken off this morning. Up 20%. Good morning, everyone. Grab your coffees, settle in. Lots of buy orders going on here. No real huge buys or sells, it seems like, though. We got some news over on CNBC. Let's check that out. Real quick, pop over here.
Unlike, as you pointed out, AMC, unlike American Airlines, which use those. And by the way, unlike, boy, some of those holders of AMC, for example, Silver Lake, you know, they're basically looking at a big loss on that convert they did. And then it's like, wow, they got out. They made money. Another firm, I think, also was in the debt and was able, but got a lot of stock as well. They made a lot of money in AMC. And then AMC was able to at least continue to try to right-size its balance sheet. But your point's a good one. We haven't seen that offering from GameStop. One would expect even at 100, though down from the highs of 483, they'd still be happy to take the money if they could get it, Jim, right?
But David, Matt Francis, someone...
No, I didn't sleep at the mic last night. Good question, though.
Chief Technology Officer at GameStop. What I love about GameStop is their selective notion of releasing information. Their idea of being able to hide their game plan, that they don't come on. I wonder if when Janet Yellen, Secretary of Treasury, comes out, will she say, can we get them on the phone? Because, you see, I try to get them on the phone all the time. I used to speak to Paul Raines, who was the late fantastic CEO. And we know David selective disclosure. Yeah, I keep getting hung up on it because it's against the law. But, you know, David, all's fair in love and selective disclosure.
And war between hedge funds and these traders. Carl, I should mention, of course, Amazon just came up there. Amazon's actually down, despite what was, of course, a very strong quarter.
Oh, no.
Planned departure of Mr. Bezos as the company's CEO come the third quarter. As we pointed out, Andy Jassy will take over that role as CEO. Mr. Bezos will remain executive chair. But, yeah, Apple down, Facebook down. Alphabet still holding up with some significant gains after that quarter. Guys, did you see, I mean, I mentioned it, Apple issued, what, 40-year paper?
Amazon down just a tiny bit after that announcement that Jeff is going to step down as CEO third quarter.
Or at least if you want to figure out what it would be at 40 years.
Well, Dave, who's got a better balance sheet, the U.S. government or Apple?
That's a good point. You're Apple.
But you didn't talk about Boeing, David. You didn't talk about the refinance deal.
Yeah, that voice is a bit harsh, gotta admit.
The worst quarter of any major company, which has made it so that, you know, they're ready. And I think that if we open up, I have this image, David. You can correct me if I'm wrong. I think we're going to go places. You know, like maybe take a plane. Mm-hmm. What do you think?
I like the idea. I like the idea. Yep. I'm having a hard time.
Go somewhere?
Yeah, I'm soon. I think soon. Soon as in what? 3 months? 4 months? Think so? What do you think?
Sooner than we hear from GameStop, right?
Yeah.
I mean, GameStop versus flying. GameStop. I really want to focus on GameStop because I love the irrelevance of the 5,000 stores. But you know what? Chewy, David. We haven't mentioned Chewy. We haven't mentioned AMC. We haven't mentioned the Revolution. We haven't mentioned the To the Finland Station. We haven't talked about Lenin. We haven't talked about Spartacus League. We haven't talked about Trotsky. I think we just rub them all together and just kind of have like a great class on Western Civ.
I'm glad you did. I'm glad you did. By the way, speaking of communists, did you guys see Alibaba this morning? That stock is up. In part because of news about a potential reorganization at Ant Financial, which, of course, Alibaba owns 33% of, as you take a look at shares of Chewy, which have had a very good run. There's Baba. Rebounding a bit again on that news. You know, it's been around, this idea of them becoming a holding company in some way, obviously undergoing a great deal more regulation.
Does anyone know if they found the CEO yet of Alibaba? I know he was missing for a while.
Newer offerings that are coming up from companies, of course, like Ant. The question is what it's going to mean to the company's overall profitability and its plans to potentially try to re-engineer some sort of initial public offering, perhaps even within this calendar year.
Yeah, we did see that list of Chinese entrepreneurial leaders in some state media.
Got some buys going on here. A lot of buy orders going on, 3,000 shares. This is for AMC. 5,000 shares. Thanks for the hair comments. Still up 7.5 here. Sundial up nearly 20%. HCMC 14.2%. Express up 7. I mean, almost everything is up. BlackBerry is the only one showing a loss on here on the watch list, at least. I don't know. I'm just waiting for this thing to shoot up. Good morning, everyone. Who's out there holding still? Yeah, volume really jumping up here. Are we holding AMC or GME out here? I know yesterday we had a ton of AMC. All right, tons of AMC still. I have the majority AMC as well. I would just love to see this up in the teens today. All right, let's check out WallStreetBets here for a bit. Yeah, we're seeing a lot about this with silver just being in the media, but it seems like almost no one actually is buying silver. Down 59K. If you're watching and you're down a significant amount right now, like more than $20,000, shoot me an email with a screenshot and your phone number, and we'll get you on the phone and have a little chat. We did a few yesterday, and it was pretty darn entertaining. We talked to one lady, too, who her account went from $100,000 in AMC to $1.2 million. Just insane. I clipped that. If you want to check it out, it's on my channel. Another billboard. This is like the 4th or 5th billboard. Love that. Wow. Oh, here, let's check this out. Yeah, we have the short squeeze restrictions list. I swear I saw AMC on this list earlier in the day yesterday, but then I couldn't find it again later, so let's see if I can find it on this now. Hold on, I'm just going to pull this up. Bear with me for a second here. So this is opening. This is the restriction, the short sale restriction list for today. I don't see AMC on here though. Express is on there. Let's see if I can find anything else. Well, here's some more information on what's going on. The buy to sell ratio. We were checking this out yesterday. Buy to sell ratio for GameStop was like 75% buy-ish, 25% sell, and AMC was like 2/3 buy and 1/3 sell. Let's see the top orders. Oh, here we go. This is the page we were looking at. So this is for, yeah, this is for today. So they're about even to each other. Let's see the percentage. 60% buy, 40% sell, and 59% buy, 41% sell. Not bad for those who are holding, meaning there's more buy pressure. Let's check out prices again real quick. 4% still, down from about 12% pre-market. Up about 5.5% here. $800 calls bought for $22 million. Something too about this short interest is when the price is high, there's going to be even more people trying to short the stocks, which will just bump it up. So even if some people just get out of their short position, there's going to be more that join it, which will just help the potential squeeze. Got to remind myself that every once in a while. Yeah, I wish I could play music on here. YouTube would rip me to pieces for doing that, though. Let's see. Yeah, we have anyone in the chat here who bought in the 300s for GameStop? Yeah, a lot of people saying my streams are calming. I'll take it. I will take it. The coffee just hasn't kicked in quite yet. Dang, a lot of people buying in the 300s. Anyone in the 400s? I mean, it was in the 400s pretty briefly. All right, let's check out the emails here. I think I know I have a bunch to address, so I'm going to open up some tabs. Let's see here. Throw on some low volume nature sounds. That's not a bad idea. Let's see. All right, we got some articles to pull here. I will take a look at. If you have any good articles or videos for us to check out, email them to me at maxmahershow@gmail.com. Let's see. All right, let's check out some of these articles. First one just got sent here. Volume so far is 9 million, it looks like. I'm going to go back to this one in a minute. Got some more articles here. Oh, so this is an article basically trying to explain how DTCC started all this. I haven't read through this before, so I don't have a good explanation of what exactly is going on quite yet. We'll take a look at that later as well. GameStop kind of getting flat here. 3% on the day. AMC also 3% on the day. Everything else that we have pinned here is up. HCMC is jumping up. Sundial Grower still at 20%. Just sold my kidney to buy more AMC. You only need one kidney, if we're being honest. So we can see the buy and sell orders here. A lot of buying going on right now as we speak. What's the gist of AMC? I mean, we're up on the day so far. The day is still young, though. We're only half hour into the trading session here. So it's still any man's game, but I'm personally feeling pretty good about it. Got something else to check out here real quick. Oh, wow. Okay. Thank you. Thank you for sending this to me. So we can see here, I didn't notice this, but we're looking at GameStop short interest, 226%. Just to put that in context, everyone and their mother was saying this was insane. It was at 141%. So this just means we're even more heavily shorted than before. I mean, let's see. The days to cover, which means how long it would take to cover all these shorts, which basically means how long the squeeze would last of just this sharp increase in prices in 2.5 days. And I'm just not even sure if that is high enough given the increase in short interest here. That's insane. 226%. Let's see what AMC is at. %38 on AMC. That's pretty much unchanged. I think it was in the 70s at one point. But it's crazy to see that GameStop has actually gone up by, I mean, nearly double. up by 80% anyways from that 141 marker. And there was articles on Monday coming out that said that it was down to like 39%. And here we are, 226. Which honestly makes more sense because with the price higher, you can just assume that more and more people are going to try to short it. This is according to Morningstar. Wow, that is wild. Now we're pretty much flat, just up 2.2% for GameStop. Well, it says 2.3%. AMC's up 4% now. They just had a small little jump. Some buying pressure. You can see largely bought. There were 7,000 shares there, so that means someone just purchased $57,000 worth of AMC just now. Welcome everyone, welcome. If you wouldn't mind doing me a favor and just liking this stream, help push it out to more and more people, I would appreciate it so very much. We got a ton of volume going on right now. AMC predictions, I mean, it's impossible to know for sure, but I wouldn't be surprised whatsoever if we finish the day out in the tens, potentially even low teens. I mean, that would be a very significant increase in price. In order to get to 12, we're looking at a 50% increase on the day, which isn't impossible. I mean, we've seen that happen a few times in the last week or so, but obviously I can't make any guarantees. This is just entertainment purposes only. Here on the Calming Stock News channel. Oh, let's see what they're talking about here. They're talking about the 2-day lag with clearinghouses over on CNBC. Basically the issue why all this chaos happened with Robinhood.
Volatility trading, because we're talking about market makers. I mean, that's the other piece of the story, right? And what we saw last week, the fact that they basically got destroyed on volatility. It's not the first time we've seen something like that play out, especially where implied volatility is concerned. We've seen other examples in other markets and other parts of the market over the last couple of years. If we were to look at that, or you were to see regulators have increased scrutiny, how would that play out, if it would?
Yeah. Well, I do think increasing margin requirements, Reg T hasn't been revisited since 1974, which sets the initial margin requirements for equity transactions. I think rehypothecation of collateral, as I mentioned earlier, that's part of it. That's one of the reasons why you can have, short entrance at 140 on GameStop, 140% of the actual number of shares outstanding. Why we allow these chain maybe once, but allowing this chain to occur is really beyond me. So we need to get leverage out of the system. The growth in margin trading, the growth in derivatives trading by retail and institutional traders means there's smaller and smaller amounts of money can have a huge impact on price. That creates the volatility. Raising those margin requirements, I think, would slow it down a bit. Having a transaction tax too, I think, would slow it down a bit, at least on the high frequency trading side. So those are other structural reforms that I think would be warranted. And again, they're going to.
So just for some context here, a big reason why, at least Robinhood is saying why they limited trades, and we saw limited trades at so many other brokerages, is because of the amount of cash that they had to hold in order to do these trades and the amount of risk there is to so many of their users doing these extremely volatile trades that they're literally risking going bankrupt if a stock crashes on a super volatile trade like that.
Again, monetary policy has driven this. They've done so well during the pandemic as they did during the Great Recession. The regular guy, the little guy, is seeing this and saying, well, why not me too? I mean, I think that's a lot of the dynamic and passion behind Robinhood. And I get that. But I think the answer really is to try to slow this down for everybody and repurpose these markets back to where they should be, which is raising capital for real value creation in our economy.
Right, right. And finally, Sheila, I wonder, you've already talked about leverage, but when you look at all the reasons why retail has boomed, home equity, low debt service, savings rate,
Yep.
we're looking at more stimulus checks on the way. Is it your sense
Yep.
that the GameStop episode is not going to be the last one, at least in the medium term?
Yeah, I'm not sure why Vlad didn't just come out and say, like, hey, we don't have the cash to handle this kind of thing. Here's exactly what's going on, instead of just saying we're trying to help traders by limiting the amount of volatility. Like, just be honest. Enough of the lawyer speak, like, just be legit.
And I think that's a bit unfortunate too, because what's going on behind that is payment for order flow or internalization, the broker actually trading against their customer. So they're getting lower quality execution, but that's not really transparent. So I think the people who want to get involved in the stock market, good. Look for long-term investors. Short-term, somebody's paying. And there was an article on the FT today about how the brokers, the traders, the institutions that were paying for order flow for these Robinhood orders are making that they're making a lot of money off of that, and that's coming out of the quality of the execution that the Robinhood customers and other online brokers do the same thing. It's not just Robinhood. So that payment for order flow is another area I hope the SEC will tackle with the new
Yes.
leadership.
Yes. It's a fascinating turn in the story, Sheila.
That it is.
It's good to see.
There's no Tarzan painting updates as of right now. If you're new to the stream, one of the viewers yesterday started painting me as Tarzan battling the hedge funds. So hopefully we have that today before I finish up the stream to show everyone.
You have known Mr. Jassy for quite some time. He has been a regular on Squawk Alley. Break it down for us.
Yeah, I mean, Morgan, I think it's fair to say, I know it's fair to say, I've spent hours talking to Andy Jassy over recent years. We do sit down at least once a year around.
Let's see here. AMC still up 3%. GameStop 1.5%. Is this stream sponsored by LaCroix? It should be. They should sponsor me. Been drinking it the last three streams I've done. All right, let's check back over at Reddit. Wish this was still the case. Now we're about flatlined again. And we saw a tweet yesterday too that I think they said all of their theaters are now open. So if you're trying to support AMC, you can go and watch a movie. Another billboard. Imagine people who don't know what's going on. They see this billboard. There's like, okay, this is absolute nonsense. Someone paid good money for this. Billboards are expensive. Like someone could have paid, I don't know, $5,000 for that. WallStreetBets is bringing back billboards. I do wish there was more AMC talk here on WallStreetBets. It's almost all GameStop. All right, let's see what this is going to say. Hedge funds are driving down the price by 40 to 50% because of low float. And guess what? We can do the same as long as we all buy an average of 1 to 2 shares in the same day. We can potentially cause this entire situation to blow up. Imagine a situation where at least half of the subs buy at least one stock in the same day. Guess what happens? The couple hundred of shares in the short ladder attack don't matter anymore due to the low float. We could easily see a price increase of over 200% in a single day. Interesting. That's kind of what I did yesterday. I was like, oh, it's at 100. Might as well just buy a share. Although I'm strapped for cash, I just got my paycheck, so I'll be buying 100 shares. Yeah, no kidding. Different version of strapped for cash. I'm strapped for cash, so I'm just going to buy $10,000 worth. Yeah, this subreddit has really made me realize the crazy portfolios so many people have and are willing just to like throw $500,000 at something like GameStop. Yeah, this is a good point. GameStop has 69.75 million shares. If every WallStreetBets Redditor with, I think there's like 8.3 million, owns 10 shares, not even 10 shares, we own 100% of the company and the sell price. Imagine Reddit just taking over, like WallStreetBets taking over the board of directors at GameStop, like literally just steering the ship. Yeah, are there still people who are seeing restrictions on Robinhood for buying shares? I know they have total share restrictions. Let's see. Clients can buy 350 shares of AMC, higher than the earlier restriction of just 75 shares. Robinhood clients can now buy 1,000 shares of Express instead of 200. However, if a client owns more than 1,000 shares of Express, they can not buy any more shares of the embattled retailer. I know I saw a chart. Maybe it's here. Oh yeah, so these are the total shares you can own, I think as of right now. This is on Robinhood, that is. I mean, you could max out this and then go to Webull and max out that if you really wanted to buy more shares, though. Let's check out prices here. Flat on GameStop for the day. AMC's up 5-ish% though. GameStop's down a tiny bit, 80 cents or so. Volume of shares, I think this is it. Now I think this is just volume of shares on Fidelity, but you can see it's still 60% buy, 40% sell. Not bad. You would think there would be more buying pressure. Of course, this is just Fidelity. Now this says GameStop is up 3.3%, but I don't think it is. Also just changed. It's up 1%. Yeah, if someone has any information on how could we have more buys than sells, yet the price isn't significantly higher, or it's basically flatlined? How can we have, a 40 to 60 ratio? If you have an article or some explanation of that, send it to maxmahershow@gmail. It just doesn't make sense with supply and demand. If there's more demand, you'd think the price would push up more significantly. I mean, 60 to 40, we're talking 50% more buy demand than sell demand. Someone asked what's up with BlackBerry. I mean, we're down 1.6%. Looks like there's some buying pressure going on right now, though. I know a lot of technical traders look for, I think, the three green candlesticks, but I don't really follow the technical aspect too much. Let's see. Sorry if you guys hear some background noise. I got a bunch of employees who just got to work. You got to be the first one to the office and the last one to leave, right? Let's see here. Let's see. Oh, they're out there talking about GameStop right now. They should just be on the stream, I guess. So we see Express is getting a lot of buy orders right now as well. They were up 20% on the day. Now they're only up 4%, though. AMC looks like they got a little bit of a bump. Some more buy orders here. Oh, thanks for the compliments on the mic setup here. Getting good audio has been the hardest thing for me to do as far as YouTubing goes. I just had the most audio issues forever. So whenever I get any audio compliment, I'm like, thank you so much. Yeah, I own a moving and storage business. I'm in my warehouse right now. I just have a studio. Like, my full-time job is owning a moving and storage business. But luckily I have it all delegated out, except for, every once in a while I have to meet with a supplier or a big customer or something like that. So I have a GM who handles all the day-to-day and office workers and things like that. Someone says, I like your voice, ? I don't know, you tell me, I guess. Sundial Growers up 22% on the day. I should have listened to some people in the stream yesterday a lot of people were saying, go in on Sundial. I think what will happen with cannabis is there's going to be like one or two really big winners. There's going to be like the Coke and Pepsi of cannabis. And then after that, there's just going to be this long tail of a bunch of kind of smaller winners afterwards. I'm 25 years old. I bought this moving company when I was 19 years old. Well, going back a little bit before that, it's kind of a cool story. I moved to Arizona and I started a pool cleaning business. And as I was growing that pool cleaning business, I was working part-time at a moving company. Then eventually I quit the job at the moving company because my pool cleaning business was big enough to sustain me and I could do that full-time and pay all my bills. And then about 6 months later, the owner of the moving company, he came into town. I'd never met him before, and I wasn't even a part of the company anymore. But he was looking to sell the company because the new manager just was doing a poor job, and they were losing money at this point. And he had like 5 different locations for his moving company. And some of the employees were like, oh, hey, we should talk to this guy. He used to work here. He started his own business. He might be interested. So I met with him, and we worked out a deal. I went and, talked to some lawyers to make sure it was all on the up and up, because it seemed like, I was only 19 at the time. I just wanted to make sure I had all my T's crossed and I's dotted. But I ended up purchasing the business, basically an asset sale for the price of the trucks, pretty much. And I took it from $5,000 in sales the first month to it grew 1,400% in the first 15 months. And within 2 years, I had 4 locations across the country and like 92 employees at its peak. And then I eventually sold off my out-of-state locations and just focused heavily here in Arizona, opened up a storage facility, which is behind me, and just trying to maximize the profits here. And I sold my pool cleaning business as well for a nice profit. So it was a pretty exciting story. A busy 5 years. Now there needs to be a pool boy painting. Yeah, if anyone wants to make a pool boy painting, make it suitable for a stream, though. Oh, lots of buy orders coming in here in Sundial. Holy crap. AMC up 4%. Yeah, if anyone is looking to start their own business, pool cleaning business, I mean, you can start for like under $1,000 as long as you have a vehicle under $1,000. And something that's really awesome about pool cleaning businesses is they're really easy to sell. Like, you can sell the accounts for about $1,000 per account. So I did this twice where I built up routes and then sold the accounts. The first time was especially the big winner. But yeah, I mean, you could spend a year, build up 50 accounts and sell it for 50 grand, and you make money the whole time you're gaining the account. So, or honestly, it's just a good job to have, to be a self-employed, because I know pool cleaners who make $80,000 to $120,000 a year just working 5 days a week. It's a pretty awesome business to be in if you just want to like work for yourself and be outside. It gets a little bit lonely. That was a problem I kind of ran into with employees that would get really lonely out on the route by themselves all day long. But if you don't mind that. But my customer acquisition was about $35, and then I would sell the account, eventually for $1,000 or about $950. So I was 30xing my money on the customer acquisition and making money every month until I sold. It's pretty awesome. How did I learn that business mentality so young? Well, luckily there was a lot of people in my family who were self-employed, so it never seemed like impossible to me. Like, it never seemed like a crazy thing to own my own business, or at least work for myself. So I think that helped, just not having the limitation. Because I think a lot of, like, even at school, a lot of people, they just say, like, you need to get a job, you need to go to college and then get a job somewhere. It's almost like it's not an option to start your own thing. So I think I was lucky in that I had family members who owned their own businesses, even if they were small. And then I grew up in the middle of nowhere, Minnesota, and I knew if I wanted to grow something big, I had to go to a bigger area. And so that's what I did. I moved to Arizona. And right now I'm in the process of purchasing a much larger business. I've had a few deals that fell through, but that's just how it goes. But I'm constantly looking for a business to purchase, probably something in the electrical industry. This application is Webull. You can use that link in the pinned comment to open an account there if you so please. I know a ton of you have used it so far. You'll get 4 free stocks, and I think I'll get 2 free stocks. So it helps me out, helps you out. You can try that if you want. How much do you get paid for cleaning one pool? It's averages between $100 and $120 a month. So you show up, 4 times a month. You make between 25 and 35 per cleaning. And once you get good, you can do about 3 to 4 per hour, including drive times. Someone says electrical companies have a low profit, 8%. Yeah, I wouldn't buy one that has 8% profit. But I would seriously look at one that's 12 or so or more percent net profit. And also I wouldn't buy a company that isn't doing, more than $5 to $7 million a year in revenue. So of course, 12% of 5 to 7 million is pretty significant. But it's pretty rare. Pretty rare for a larger business to make much more than 12% net profit. Do I think Amazon is going to keep going up? I mean, the fact that $1 trillion company can increase in price so much, and it's not like their earnings have increased in line with their stock price. I mean, it's insane to me, but also at the same time, it's like we were listening to Mark Cuban talk about this yesterday. I think the mentality has kind of changed where people almost don't care so much about earnings anymore. It's almost like a placeholder of value at this point, just to bet that the stock is going to go up and bet that someone else is going to pay more later instead of focusing on cash flows, which is really interesting to me because, well, I personally think that your portfolio should be based in cash flowing investments. That's the Warren Buffett approach. Buy these companies that produce cash, then I have more cash to buy more companies that produce cash, and then eventually you're worth $80 billion. Thanks to everyone who's joining this stream. If you wouldn't mind just clicking the like button on the stream, that way we can help push this out in the old YouTube algorithm, and subscribe too. If you're into business, into news, if you like things broken down in a more easy to understand way, it's free to subscribe, and you can always unsubscribe later if I annoy you a month down the road or something like that. It's a no risk investment. Yeah, no kidding. If AMC could just, or if Elon could just tweet about AMC, we would all be doing better right now. Someone asked about silver. I have this iShares Silver Trust pinned down here. But every time I talk about silver, there's a million people who just say, silver's a scam. We don't care about silver. So I have it pinned down here if you're interested. I don't own any silver shares. I have, like 5 ounces of physical silver, but not because of anything that's going on currently. And I think I have most of it because of a bet. I betted it was weird. I had a bet with a buddy. We were playing Frisbee golf, and I think it was like a $40 bet on who would win. And he gave me 2 ounces of silver instead of $40. So that's how I got a lot of it. Good morning, everyone. You ever think about getting into real estate and rent to tenants? Yeah, I've thought about it. I own my house, and I'm so cheap that I actually rent out rooms to roommates. Just because I can't miss out on it. I feel like I can't miss out on any monetary opportunities. So I kind of house hack. I bought a big house when I was like, how old was I? 20? Yeah, 20 years old. And I've just rented out the rooms to people, and it pays for my entire mortgage plus some, actually. Even considering utilities, I think my living payment is around like $100 a month because of it. So it's really hard not to do it, even though I don't really need to have roommates. I guess I'm just one of those people who doesn't really mind having roommates. And I'm never really home anyways, so. Who pays in silver? Yeah, that's a good question. But you know what? I was like, I guess I'd rather take the 2 ounces of silver instead of $40. It's kind of cool. But it's just sitting somewhere now that I don't even know exactly where it is. Will GameStop go up? I mean, that's a good question. We can look at the buy to sell orders here. Refresh this. So this indicates to me that I think it would go up, judging by its majority buys to sells. Unless this trend changes. You see Amazon is 44% buy, 56% sell. Sundial Growers, which a lot of you have been talking about, up 25%. See, if someone has some article or something to explain how is it that Sundial Growers is 61% buy, it's up 25%. GameStop up 59% buy, and it's basically flat. Okay, yeah, Daniel in the chat said those 21,000 buy orders could have each been for one share. The 14,000 sales could have been for 100 shares. Yeah, that's true. That's definitely an option. I mean, we can't say for sure, but definitely could be a reason. AMC's kind of in the same boat too, but I guess the amount of shares purchased for one order of GameStop is definitely going to be less than AMC. What is I guess that does make sense in that Sundial Growers, their share price is so small that obviously you'd be buying far more shares. But we also saw this yesterday where there was more buys than sells, but the price went down 40%. I don't have Dogecoin pinned because I don't think it's even on here. Yeah, it's not on here. We can take a look at it though. So here's Dogecoin. It's actually up. I mean, my prediction for this, based on nothing but just how I feel, is I think we're just going to see a new level of Dogecoin because it's surprisingly stable. And I think with this recent hype, it's going to jump up and then maybe settle and just be flat after that for a while until Elon tweets about it again or Jeff Bezos starts only accepting Dogecoin on Amazon. Yeah, it's another potential explanation that a hedge fund doesn't use Fidelity. Yeah, I wish we had more up-to-date data like this for all the buys and sells. I'm not sure if that's possible to have it real time, to be honest, with all the different brokerages and clearinghouses, but I would sure would be nice. AMC up nearly 5%. Also, thank you to everyone who subscribed yesterday on my stream. that was the second most subscribers I've ever gotten in a day. It was like 4,000 and some. So thank you to everyone who subscribed. Somehow my record is like 8,000. There was just one day where a video just blew up. So that's going to be hard to beat, but maybe someday. Thanks for the sub, Justin. Appreciate that. All right, let me check out the emails here real quick. See if we have anything good sent in. All right, we got some memes here. We have someone who sent me a screenshot how they have 29,000, just about 30,000 shares of AMC, and they're down $350,000. I guess I can show this because it doesn't have any personal information. So even if the short push doesn't work when the restrictions get lifted, it'll go up. A lot of theaters are opening now. Okay, cool. He said I can discuss this. So let's take a look at this real quick. So here's someone who is down pretty significantly on AMC, but just about 30,000 shares. They're still up overall, looks like. Let's see. Or no, this is from the other day, it looks like. But they're down 30%. 30,000 shares. Still holding. This person feels that the long-term outcome is good no matter what. Since they're opening theaters now and people are fiending to go and watch a movie in a theater. Fiending to just go and do anything, really. Oh, here's an interesting site. Furion777 sent me this. So we have, it's isthesqueeze.com. All right, let's see here. Short interest. 51.72% of float by S3. I mean, we were just looking at that that other site that said 221% short interest. It's hard to tell, what exactly is correct and what isn't. I know I've seen some people say that we don't know the actual short interest until the 9th. Not sure exactly. So it says shorts have stopped exiting their positions and are maintaining a level of short interest about 50% of the float. How often is this site updated? As often as data is updated. Interesting. Are your roommates your parents? No. Oh, AMC just shot up. Now we're up 8.4%. Bunch of buy orders coming on. I hope this gets other people to jump in and buy. We'll see here if there's any real significant buys. Oh, 10,000 shares right there. So someone just bought about $85,000 worth, if that makes you feel any better about your position. Now we're up 9.3%. Oh, wow, we're seeing a rally here. How's GameStop doing? GameStop's up now 8%. They were just flat a little bit ago. 500 shares. I know a lot of people like to see that in their technical analysis. 21,000 shares. That's about $170,000 that someone just bought in a single purchase. Are any of you who are watching now buying additional shares of AMC? This is Webull. You just have to make an account, and then you can go on their app. You can use that link in the pinned description if you want. Up just about 9%. A lot of people buying AMC. Yeah, we talked yesterday about how BlackRock, who they have, I think it's the biggest asset management company in the world. They have like $6 trillion in assets. They just filed a disclosure report yesterday showing that they own 6.3 million shares of AMC, and that's up from their latest September disclosure by 60%. So up by about 3 million shares. Now, we don't know when exactly they bought it, if they bought it yesterday or if they bought it, a month ago, but they own a very sizable portion of this. How do we know they are still short in GME? We can just check out short interest and kind of surmise based off of that, and also buying volume. You can kind of surmise. It's hard to know for certain, how good that data is. I mean, as we can see, we've seen anywhere from 140% short interest to 40% short interest to 220% short interest. So we got some more sells going on here now. Still up just about 8%. Yeah, short interest on AMC is around 40%. Where was that tab? Oh no, this is just the increase. It increased 15% in short interest. I don't think this has the total short interest. This is shortsqueeze.com. I like this site a lot, though. Oh, this was the one that told us. Yeah, so on here you can see it says total short interest for GameStop, 226. I mean, if that's accurate, that is an insanity. Okay, so this one says 38% for AMC. Yeah, I mean, if this is accurate, 226% short interest. I mean, more than double the shares shorted than there are shares. That is just insanity. If that's, I mean, it's Morningstar. I hope that's accurate. What microphone is this? This is an Audio Technica mic. I'm not sure what the model is. Sorry, I don't know offhand. So many people saying this is like ASMR. I don't know why it sounds like that. Stock ASMR. ASMR to listen to while your stock portfolio tanks. Everything is green on our watch list right now. Sundial looks like the biggest winner, 25% up. Oh, BlackBerry just had to change because I said it. Yeah, I need to upgrade my streaming setup a little bit and I need to have a second screen so I can work on pulling something up while I have a page up. But this is like my third or fourth live stream ever. Yeah, I'm glad you guys like the calm approach to this because it's much easier for me to be just even keel than be the hyped up Jim Cramer. Especially if I'm going to talk for hours on end. Someone says they like the breathing noises. I don't know why you would like that. I try to avoid the like swallowing and breathing noises as much as possible, but I don't know how people avoid those altogether. We're seeing a tiny little rally from 8% up to 8.5% up. Another 14,000 shares purchased. What does that come out to? About $200,000, I think. So that was way off. 119,000. But that's someone who is willing to put $119,000 towards this fight. Am I going to break yesterday's stream record? No, I'm not. I unfortunately have a meeting at 11:30 I have to go to. Maybe tomorrow. I don't know. What do you guys think? Should I try to do like a live stream marathon tomorrow? Yesterday we went for 7 hours and 7 hours and 15 minutes or so. I think I could do 10 hours if I really wanted to. Wall Street ASMR. Someone says check out Fire TSE. I'm not sure what that is. Is this what you're trying to look up? Let me know what the ticker is. Oh yeah, AMC's up 10%. I look away and it jumps up. Nice. I probably missed some big buy orders here too. 2,000 shares. Someone says 48-hour live stream marathon. I don't know about that. Is there a reason to not have a Webull account and a Robinhood account at the same time? Not really. I mean, I have multiple brokerage accounts. We have Sundial on here, right here. Sundial's having a good day. Stream some Call of Duty at the same time. Someone was saying the buys are real heavy on AMC. We're still looking at 60% buys, 40% sells. Let me check the emails real quick. If you have anything interesting for us to take a look at, shoot me an email to maxmahershow@gmail.com, maxmahershow@gmail.com. Could be a meme, could be a good video. Could be an article. Someone says they accidentally emailed maxmaher@gmail, and someone said she was assaulted by a lot of emails yesterday. I have no idea. Or said he was assaulted by a lot of emails. I have no idea who that is. So sorry to maxmaher@gmail. Oh, that's funny. Yeah, there's like 7 Max Mahers in the world. And well, I'm probably friends with them on Facebook because I'm pretty sure I'm friends with every Max Maher on Facebook. You know, if you got the same name of someone, you just got to add them on Facebook. Yeah, there's only 7. It's an uncommon last name, even though it doesn't sound uncommon. Everyone says it wrong. Everyone says Maher. It's Maher. Let's see, someone just sent me another email. We got someone who's down. So Moo just emailed me, says they're down 22,000 on AMC, but they have a loophole on how to buy 100 shares. Shoot me another email, Moo, with your loophole so we can figure this out. Someone says, keep the stream going during your meeting, then come back. I'm always scared of walking away from the stream because I just don't want to make anyone bored. The email is maxmahershow@gmail. Someone says Maher Chevrolet. Is that actually a thing? I need to look this up. Wow, this is actually a thing in St. Petersburg. I know you guys probably don't care, but... And this is the original Irish name, Maher. That's how my ancestors spelt it, and his is the same, but then he changed it to be more American friendly, I guess. Yeah, you guys don't care. And I don't blame you. No, I'm not related to Bill Maher. Sorry if you hear background noises. I got guys loading up stuff in the warehouse right now. What kind of shampoo you recommend? I got a bunch of questions like this yesterday. I don't know what the name of the shampoo is I use. I need to get a shampoo sponsor, though. That's what I need. AMC still floating around 9-10%. We really want to see this up like 50%. I think if we see it go to 20%, we'll see it go to 40% because people will want to hop on that hype train. I mean, basically what you see is as soon as the stock goes down, everyone's like, you guys are dumb for holding, it's going down. And then as soon as it goes up, everyone's like, oh, let me get in and ride this wave. AMC prediction at close. I mean, I keep getting questions like this. I can make predictions, but who knows if they're going to be right. It's just, I mean, my guess is as good as anyone's. But with the current trend, I mean, I don't think it would be unrealistic to see it around $10 at close. And then maybe a 20% chance that we see it around $12, $13. Oh, sorry about that. I wasn't paying attention. Yeah, someone says instead of a short ladder, we need to do a buy ladder and everyone just buy a share. I bought $1,000 worth yesterday. Maybe I should do another challenge today. Yesterday, when we hit 150,000 subscribers, I bought $1,000 worth of AMC. I should have maybe shot that goal a little higher. Yeah, so that loophole to buy more shares on Robinhood is you can buy an options contract. Oh, this is to buy 100 shares of GameStop. You can buy an options contract, for example, at a strike price at $60, which costs upfront premium of currently $4,078 as of right now. I've written this email, and then exercise the option to purchase 100 shares of GME at $60, which will cost you $6,000. So you'll have 100 shares at the cost basis of $60. So it's kind of a loophole way to get 100 shares on Robinhood if you really want to, or you can just use a different brokerage. Let's see, we got someone who's holding 13,000 shares of AMC. Thanks, Salty Shackles, for sending this in. We'll take a look at this. Someone who's holding 13,000 shares, 84,000 pounds, I think that is. Down 44K. Yikes. Average price of $13.13. Dang. That is some diamond hands right there. Diamond hands. So many people on this streams with just massive holdings. Someone asked, how do we see when big amounts of shares are bought? You can see on this scroller, like that's 4,000 shares, 620. You can also see the sells. I'm seeing more large buys than sells, though, in the times I'm looking. Oh, I suppose you need to see it. Sorry. This is where you see the buys and sell orders. But I got a few more emails for us to take a gander at. Okay, we got Comparison chart. So we got a comparison chart here of AMC, GME. You can see they're basically one-to-one with each other, which makes me feel good in the sense that if one goes up, the other probably will as well. So if you're one of those people who just is buying AMC because it's the cheaper choice, you can feel kind of good knowing that. Oh, sorry, knowing that if GameStop goes up, AMC will probably go up too. And actually, AMC looks like it's holding on a little stronger than GameStop in the recent past, in the last short period, anyways. And I don't have the overlay here, but we were comparing this to the 2008 Volkswagen squeeze as well, and that lined up pretty darn similarly as well. And basically where we're at right now, I can pull up kind of a graph. Let's see. Where we're at right now, it would be kind of like right here on this graph. And you can see with this squeeze, which is like the most successful squeeze in history, they went almost back down to pre-squeeze prices. So to put this in context, they went back down to about $220 a share, where pre-squeeze they're around $200. This would be equivalent to GameStop going down to, I don't know, $5 a share, and then shooting up to $1,000 a share. So this makes me feel a little bit better about the situation. Obviously, we don't know for sure what exactly is going to happen. Is there an explanation behind both the AMC and GME trends being so similar? I mean, it's similar groups buying these things for similar reasons. The fundamentals behind the company, I don't think, are very important for most buyers. So they're just going one-to-one with each other for right now anyways. Still everything positive on the day, though. That was not the case yesterday. GameStop up 8%. It's crazy that we're now in a world where being up 8% in the day is small. I really wish we just saw a situation where since early last week GameStop just jumped up 10% every day. So then we'd be at 100, 120 now, and their mind would be blown that we're at 120 instead of being at 400 and then going to 100, and it feels like a failure. Yeah, someone says, I love how this chat has no mods and no trolls and no issues. Yeah, I agree. We've had like one spammer yesterday, and that's it. When we're all trolls, there's no trolls. When the streamer's the troll. Someone says the BlackRock situation, in my opinion, is not a good thing. What do you think? I mean, the fact that they're holding the shares is good. I don't see any issue with it. The more big institutions that hold, the better. I think they're less likely to jump in and out of a position in a day or a week. Yeah, sorry about the swallowing noises. I got to drink the coffee, though. I guess I could turn off the mic. Let's see if we can find a good video that just explains short interest with like diagrams. So we can all kind of watch that together. And because I think there's a lot of people who are confused about what short interest is. Someone says, I was in the algorithm. You're in my recommended. Love to hear that. If you're new here, if you just wouldn't mind giving this stream a like so we can push it out to more and more people. Share it if you want to. Subscribe. I promise you won't regret it. I promise I won't be annoying or try to sell you BS later down the road. But you can always just unsubscribe if you want to. Let's see here. So we got, I'm trying to find a short interest video for us to all watch. All right, we'll try out this top one. I haven't pre-vetted this, so if it's not good, I'll tune out. But the channel is Gosu Trading, so if you like it, make sure you subscribe to them.
Back everyone, it's Wilson, and in this quick video for day trade and swing trades to kind of gauge the squeezes for the stock to uprise. So let's start off with saying, what is the short interest? Well, basically the short interest is the amount of stock shares that investors have sold short but have not yet covered. So it's still in the market and they need to cover. So generally when you short a stock, you're going against it and you're hoping for the stock to go down. So usually when a stock is overextended because of some hype or some news, these type of investors and traders, they get in and try to short the stock for the profit as it's going downwards, and that drops the price a lot. As long as the price keeps dropping, then you're making profits. But what these traders have to do is that they have to cover back by buying back the stock and taking their profits. So usually the short interest will tell you how many of these stocks are being shorted that's still in the market but it hasn't been bought back yet. The short interest can pretty much give you a picture of whether investors are either bullish or bearish on the market. That allows you to see the direction and predict that the direction that the stock is actually moving in. So what about the short interest ratio? What is that? The short interest ratio is also known as days to cover, as you hear a lot of traders talk about, and they use this term very commonly. It's pretty much a formula that tracks the number of shares that are shorted in the market that's relative to the available float. So float is the amount of shares that are out there, and usually when the float number is lower, and those are the stocks that I like to trade, there's more momentum because there's more liquidity in the price change and there's more price actions. Whereas if you invest in a stock like Nokia or one of these bigger, more large cap companies, the stock doesn't really move too much up and down in terms of the price range, but when the float is low, any type of massive amount of buyers or sellers can drop or rise the price really quickly. So the last component of that the ratio is calculated in is the daily volume. And as you can tell from this slide, that the formula for the days to cover is the current short interest divided by the average daily share volume, and that will get you the short interest ratio. So what can I do with these stats and how do I trade with them? Well, the first thing that the short interest ratio can help you do is it can help you identify potential short squeeze.
So I think that was actually a pretty good explanation. I think the part that confuses people is, let me just pull up this short interest page. Okay, so if we look at GameStop here, it says, let me just refresh it to see if it changed. No, it's still 226. I think the part that's confusing a lot of people is the fact that it says interest. When really an easier way to define this would just be percentage of shares shorted. And if you see 226% of the shares shorted means there's more than 2 times the shares shorted than there are shares, which is absolute insanity. I wonder if that's the highest short interest we've ever seen Wonder if there's some kind of database that holds this info, but see, this one says its short interest is 121, so it's a little different everywhere you look. I mean, that's still high. This says 78. I think that other one says 40-ish. 38. Yeah, I wish we had a graph of the most shorted ever. I mean, I can't imagine, like, there's been many over 200% ever. But you can see why AMC and GameStop were, are the big ones of this short squeeze rally, because I mean they're the most shorted, so it makes sense. Virgin Galactic, that's interesting. I haven't seen anyone talk about that. I've seen some people talk about Tootsie Roll Industries. Carvana is very shorted. That's interesting as well. We saw yesterday with Mark Cuban, who said he likes when companies that he has ownership in are shorted. It just helps him out in the long run. One thing I do think isn't the greatest ratio is that days to cover ratio. Does it say on here days to cover? No, it says it on here though. So like for AMC, the days to cover here is 0.06. The reason why I don't think it's the most accurate is because it's based on average volume. But something like AMC or GameStop right now has crazy high volume compared to average. You can see here, average today, 456 million, normal average 71 million. So I think a better days to cover ratio would be that short interest divided by that daily, or maybe the average of the last week or so. Oops, the daily. Same thing goes for GameStop. Where average volume today, 76 million. Total average, 24 million. Because if we take let's see. Interesting. AMC down just a little bit from what we were looking at before. Now it's at 7.5% up for the day. Express up 8%. HCMC up 21%. Sundial up 24%. Dang, there's a lot of people yesterday who were saying buy Sundial. It kind of makes me wish I did, but you just don't know. Hindsight's 2020. BlackBerry's the only one down here on the watch list. Someone asked if GME is shorted 226%. I mean, that was according to Morningstar, it's 226%. If you look at any news media, they say it's like 40%, which I think that's the furthest off. And if you look at this shortsqueeze.com, it's whatever this comes out to. 60. I think there's 65 million. Or no, 85 million shares outstanding. So according to shortsqueeze.com, we're at 71%. So, I mean, we're literally looking anywhere between 40% and 220%, which is a little bit frustrating that the data is so different wherever you look. It says go for 7 hours again. I wish I could. I have a meeting at 11:30, unfortunately, but that's still 2 hours from now. So you only get 4 hours of me today. But you know, my very first stream, I went for like 4 hours, and I was beat after that. But then the second one at 4 hours, I was pretty much fine. But I was beat at 7 hours. So maybe I can go 10, 12 hours next time. I think if I had another person here, I I would be able to go basically forever, just so I can have a couple minutes here and there not talking. Someone says if you go, I'm going to sell all my AMC. You better not. Yeah, let's see if we can look into a little bit of research here, like how often is look at this. How often is Puxatani Phil right? I swear that wasn't in my search history. So this says FINRA requires firms to report short interest positions in all customer and proprietary accounts in all equity securities twice a month. So that's why the next one is on the 15th. Or no, sorry, the 12th, February 12th. And it's due by the 17th. So, wow. So basically the data that we're looking at right now is based on January 29th data and then estimates thereof. We really don't know for certain, which is a little bit frustrating because we won't know exact amounts until the 12th to the 17th. But really, a lot can happen in one day as far as selling off shares. I mean, we would see the action. Someone would pick up on all that sell action, especially, someone who's, especially if we're looking at 200% of the shares, we would see these huge sell orders or tons of orders. But there's our answer. The reason why it's so all over the place is simply its estimates. So as of January 29th, I believe it was 141%. I don't know where they're getting their data from here, but it says the decrease yesterday was 13% in interest, or we should say percentage of shares shorted, just to not be confusing. So there you go. Alrighty. GameStop, a little bit of a sell-off here, still up 3 oh wow, it just dropped 1.1% now. I mean, the volatility is just insane. We can check back at any given time and it'd be up 10%, down 3%. Am I sleeping? Sorry, I have my phone down here with the live chat, so I try to be as interactive with the chat as possible because there's some good questions in there sometimes. I wasn't sleeping. I feel like sleeping though. I pause for 5 seconds and everyone thinks I'm sleeping. Okay. I mean, AMC, good for most of the people in this chat who are holding AMC. Probably 70-80% of you is doing a little bit better than GameStop. But as we saw, these two prices pretty much go 1-to-1. So, you know, if we're going to see one go up significantly, the other will go up, which is good because that just really means we're all in this. Let's check over on Reddit. GameStop appoints 3 new executives to push forward e-commerce. Now, I wonder, it was 2 hours ago, so I guess this news didn't do a whole lot. So just created the role of Chief Technology Officer. Yeah, we saw that on CNBC earlier. Yeah, if you want to follow me on Reddit, you can. I post every once in a while on there. Welcome everyone who's new to the stream, new to this channel. I'm glad that YouTube is pushing this out. YouTube really did me dirty last week. The analytics have been looking really, really good. And then all of a sudden, there was just this sharp drop off on one video. And I was like, what is going on here? I didn't see a reason why. And then I found out later, I got kicked out of the algorithm because I used the word threatened in a title in an innocent way. But, you know, their algorithm thought it was about a fight or, you know, something like that. And really messed up the analytics for about 5 days. It's crazy how sensitive it is. Here's someone who's down 59K. That's hilarious. Hopefully this is none of you who are watching. I hope you didn't put in money that you need to pay your bills. Yikes. That's a little frustrating. Robinhood has to shut down trading due to cash, but they have enough for a Super Bowl ad. I think they got like $3 billion worth of cash to process more trades the other day. Little Reddit guy here on Wall Street. Yeah, we hate to see that. The media just hops on that bandwagon train. Like now that the Washington Post posted this, you can guarantee there's going to be an article about it on every other news site that's, I mean, it literally might be word for word on whatever this article says. So aggressive on this thread. There's nothing new going on here. I'm going to check out our... Yeah, there's no Tarzan painting update yet. If you're out there, get that painting done so I can show it here. I suppose I can pull up what we have so far in the email. For those of you who are interested, someone started a painting yesterday of me as Tarzan, battling the hedge funds. Oh, here it is. This was the update as of yesterday. It's so crazy. Oh boy. Okay, let's see the other emails. Someone proposed a challenge. If I go up 10,000 subscribers in the live, that I'll buy $10,000 in stock. I don't know. We might have to go a little bit higher on than 10,000 subscribers. That is tempting. That is definitely tempting. I don't know. What do you guys think? What should the challenge be? All right, we got some more articles here to take a look at. Let's see what this one is all about. $200,000 investment. I mean, I would do 10K. If we hit 200,000 subscribers, I'd do $10,000 in AMC or GameStock or whatever, but I'm not. We got 2 hours before I have to go. So everyone and their aunt would need to subscribe. Everyone and their weird uncle would need to subscribe because we're at just shy of 154,000. So we'd need 46,000 people to subscribe during this stream. I mean, if we hit 200K, yeah, I'll buy 10K of whatever. Whatever you guys decide, I'll buy 10K. Okay, so we got a lot of people saying it's doable. I don't know if it's doable. I mean, yeah, it doesn't. It's free for you, and it might cost me $10,000. So, if you want to see me spend $10,000, I guess subscribe. Or don't. I don't know if I want to spend $10,000. I'm a man of my word, though. As begrudgingly as it would be to spend the 10K, I would do it if we hit 200,000 today. Okay, let's see here. This is short squeeze stockbrokers and hedge funds face proposed antitrust class action. Yeah, this was against a whole bunch of defendants: Robinhood, E-Trade, TD Ameritrade, Mellon Capital, Citadel. The thing is, Sequoia Capital. Isn't that Peter Thiel? Wonder what, how they're in on this. Anyways, this is nothing really new. It's just because of the fixing the market. The problem is with this antitrust class action, like Mark Cuban said yesterday in that AMA, you'd win, what, $5 to $20 if you were affected by this. So it's like, it would hurt them, I guess, but individually, we wouldn't win a whole bunch. Someone says, is the ticker symbol AMCX? No, it should just be AMC. Let's see. Why did I say if either GameStop or AMC go up, they will both go up? Well, it's a lot of the same investors. Let me show you this graph. I got to pull it up, though. I don't want to give away anyone's email address. Let me find this. So you can see they're basically not exactly one-to-one, but 90% similar to each other. And it's just because people are buying the exact same thing. You know, people who are buying GameStop are also interested in AMC or vice versa. And there's a lot of people who are just interested in this whole short squeeze movement. So they might buy AMC if GameStop's going up or sell if it's going down. We're just going to see these go together because they're in the same situation short-wise, even though fundamentally they might be a little bit different. $10K for $200K. I mean, I guess so. I'm a man of my word, but like I said, we only got till 11:30. That's just under 2 hours from now. So you better get subscribing, I guess. I don't know. See if there's anything going on in CNBC.
Thanks so much, Carl. David, thanks so much for joining us. I have to say, in addition to running your venture fund, you were also COO of PayPal back in the day and have had many various companies since then. But I want to ask you now about your blog post that you just put up this week. It was entitled, "GameStop was a warning, elites are weaponizing censorship to keep the outsiders out." Now, David, I want to note that your VC fund, Craft Ventures, did invest in Reddit. Tell us your thesis around the Reddit GameStop short squeeze.
Yeah, thanks, Julia. So what we saw, it was very interesting. In addition to the fact that that WallStreetBets, the Redditors, that their ability to trade was frozen at a crucial moment, their lines of communication were also disrupted. And so what we saw was an organized effort to try and get their message boards taken down. It succeeded in the case of Discord. It didn't work in the case of Reddit. Reddit stood up to the pressure, but we saw Discord invoke the principle of censorship to take down the discussion board of WallStreetBets. And I think it's a really good example of the slippery slope that we're on here, where just 3 weeks ago, censorship was justified on the grounds of preventing an insurrection. Okay, I get that. But now we're using censorship basically as a weapon or to stop outsiders from communicating on a trade. And I'm very concerned about continuing to be on the slippery slope and where it goes from here.
But it's worth noting, though, that these are companies that are enforcing their terms of service. These are not countries that are censoring the people. These are companies that are deciding to say that we are, this is someone who's violating our terms of service. So I'm curious, when you talk about this idea of censoring networks and how much your perspective is sort of shaped by the fact that you're an investor in Reddit. How does that play into things?
I'm a very small investor in Reddit, along with 100 other companies. It really doesn't affect my decision on this. I mean, I'm glad they stood up to the censorship in this case, and if they didn't, I'd certainly be criticizing them along with Discord. To your point, you're right that the First Amendment does not apply to private companies, and frankly, that's what concerns me, is that we used to have a thing called the town square that was on public land in this country, and you could go there and speak up, and you were protected by the First Amendment. But now the town square has been privatized. It's owned by corporations, and it's been now centralized in their hands, and they can get together and deny us our free speech rights. And I kind of wonder, how much of a First Amendment sort of free speech right do we have in this country when big corporations can just take it away without any protections or due process whatsoever? That's exactly what concerns me.
David, what I don't get about this is that there's a lot of talk about the public square being privatized, but the internet's still the internet. I mean, people can get online and post whatever they want on their own page, or even use tools that are not owned and monitored under those kinds of terms of service to organize discussion groups. It's just that they're choosing these platforms like Facebook, right, like Reddit, like Discord, I suppose. Because they work better. So, I mean, if you want to have that kind of open conversation, the internet still works for that. Maybe it doesn't work as well as you'd like it to, but don't investors like you fund companies or ideas? It doesn't even have to be a company that can get around that?
Sure, and I was an investor in Facebook, and I think the creation of these companies was a great thing. What concerns me is the way that they're regulating speech now. Look, the First Amendment doesn't just contain a right to speech, it contains a right to assemble. Where do people assemble today? They assemble today online, on the internet, inside these giant social networking apps that have gigantic network effects. And if you get shut out of these apps, what is your effective free speech right in this country? If you get silenced and basically ghosted and deplatformed, you don't have a free speech right.
Well, it doesn't cover the right to assemble on private property, though. I mean, I think that would be the point in a public space, right? Like, you can't come to my house and assemble, or into my business, you know, in violation of the terms I set up for my business, and say that it's the First Amendment, right?
No, but there are cases in California of protesters protesting on the private land of shopping malls, and the courts upheld their right to do that. There's a Supreme Court case called Packingham, which basically said that the state could not deny access to social media on the part of certain criminals. And so I think there is some legal justification here for saying that big tech companies shouldn't be able to shut people out with any due process of law at all.
I guess, David, the question is, if you're going to have regulators tell tech companies how they should manage.
Yeah, you would just think there'd be some kind of like appeal process or something for these social media sites. If someone gets banned, maybe there can be a jury of their peers, or maybe some liability that the companies hold. It's like, you get that it's a private company, they can kind of do what they want, but you know, you'd think they should also be liable if there's damages caused if they're wrong, because social media is so important to people's lives now.
I'm not talking about small sites, okay? I'm talking about these gigantic internet companies that are monopolies. I'm talking about the Googles and Apples and Amazons and Facebooks. And especially when they come together and make the exact same decision at the exact same time, that's like acting like a cartel. I call it the speech cartel. I mean, again, if all these companies come together and deplatform you at the same time, how can you not say that's an infringement on your free speech rights? And I would just like there to be some protections around that. I don't want big tech to have all the power.
I'm curious what your perspective is on this push that's really a bipartisan push to revise Section 230, which would certainly impact Facebook as well as Reddit. Where do you come down on that, and what would you advise to regulators as they evaluate that?
Yeah, I think it's a great question.
That's enough of that for now. Let's see. AMC down a little bit from its highs. Still up 6.7% though, so I guess we can't complain too much. GameStop still kind of floating around the same. Almost got 2,000 people in here. Welcome everyone who's new. I guess we're doing, if I hit 200,000 subscribers today, I'll buy $10,000 worth of stock begrudgingly in AMC or GameStop or whatever you guys want me to buy it in. Someone asked about the GameStop short interest at 226. Is that right? It's an estimation. We were actually just looking that up. And the last time the short interest was actually reported was the 29th of January. So anything after that is based on some estimation of shares bought and sold since then. And the fluctuations are anywhere from 40% short interest to 220-some% short interest. Yeah, I also just posted a video on this latest stimulus update if you're trying to get some info on that. Posted that about 6 minutes ago. You want to check out the volume? This was here. Let's see. So volume, it looks like we're still about 59% buys and 61% buy. You can see even that is kind of one-to-one with each other here. Got anything else worth noting? Neo, 62% buy. I just don't think that this is over with. You know, even if we don't see a squeeze today, it's not over with as long as people are willing to just be patient. Because eventually the shorters will have to buy back these shares, and if we can hold it at a high enough rate, that's when the squeeze starts. Of course, this is just Fidelity's. I'm sure it's pretty darn similar to the market as a whole ratio-wise. Institutional investors wouldn't be part of this, though, but we would see some really big sell-offs if some institutional investors sold. A lot of buys right now. Don asked, why no transparency on daily short interest? We were looking into that, and it's just because of when it's reported. So FINRA requires firms to report short interest on their positions twice a month. And you can see the last one was the 29th of January, and the due date was the 2nd, which was yesterday. So any date after that is estimations. So we just don't have, instant reporting. It's kind of crazy how some of these systems are so behind the times, like that 2-day clearinghouse issue. That should be an instant thing. And thank you for the super chats. Sorry if you hear noise in the background. Got workers loading stuff out of my storage warehouse over here. 2,000 people in here. Hello, welcome everyone. Good morning. Good morning. Guess we're in late morning kind of right now. Tarzan in the background. Yeah, at least that's at least a happy noise. Someone, I don't know, singing a note or something in the background. It's much better than yelling or angry noises. AMC down a little bit. I would just love to see some huge buy orders. This is on Webull. You can use that that pin comment to make an account, and you'll get some free stocks if you so please. I know a ton of you have used that. It's basically free money because you'll get like $30 worth of free stocks. I think I got a couple of shares of Ford when I opened my account, pretty sure. But like $30 worth of free stocks. In your opinion, do you personally believe if we ride this out, we'll win the battle? Yeah, if we ride it out, we absolutely will win the battle. It's just a matter of will we ride it out. One of my concerns is the attention span. Like, are we willing to, right now we have 2,000 people who are very interested in where these stock prices are going. That can't last forever, where these thousands and thousands of people so interested in where these are going every single day. Eventually people will get bored. At least some people will. And just a matter of how long can we hold without that interest going away. And thank you for the super chats. Did all those vaults get built for your storage? Not yet. I bought 50 of them, and I think like 10 of them are built. Or just kind of building them as they come. They're a lot of work to build. So we pretty much fill up what we need and then build like an extra 5, and then we'll just keep on doing that. Someone says your voice is so soothing compared to other stock market live streamers I've been watching. Yeah, thank you. Yeah, it's especially if your portfolio's down, I guess you don't want to watch someone who's like making you anxious. Here's a buy for 5,000 shares, 8,000 shares. This is an AMC. 2,000 shares. Now we're up 8%. We just jumped from 6% to 8% fairly quickly. Seeing some big buys here. We just need to see this get above that $10 range. 1,000 shares, 1,300 shares. A lot of action. I'd be willing to bet GameStop's probably pretty similar. Yeah, you can see they just pretty much go 1-to-1 with each other. Everything's up right now. This is on Webull. For those who are asking, you can use that pinned comment. And while you're up there, just go ahead and click that subscribe button. It helps me feed my cats. Let's see how my positions here are doing. These are all small positions for me. Mostly positive, though. The market must be positive today as a whole, I'm guessing. What do we need to have before the squeeze buys? I'm not sure what exactly you mean, offline market. Like, what do we need to do? Buy and hold, really. It's kind of lack of action is all you need to do. Yeah, someone said VW plummeted for 5 days before the infinity squeeze. Like, put that in perspective, and they plummeted to pre-pandemonium prices. So they were at around 200. They shot up. Let me pull up this graph just so I can get the numbers right. But just thinking about like the stress, I have a lot of tabs going on here. I feel like this is like a psycho move to have this many tabs open, but oh well. Okay, so from around 200, shot up more than double to it looks like probably 425, 450-ish. And then someone just said it was 5 days of lows back down to 200. So you imagine all the people who bought here, bought 300, 350, maybe at the peak 400, 425, and then it dropped down to 225. That would be equivalent. I mean, it dropped 50%, but it would be equivalent to GameStop dropping to $5 or something for 5 days. Can you imagine the chaos for those 5 days? And just about everyone, I'm sure, sold. And then the very few who, I guess, no, actually, this was Porsche. So they were just more willing to wait it out, I suppose. I'm sure there were some individual investors, but it was largely Porsche. This is on Reddit. Oh, this is what I was trying to find earlier. Come on. So this is an overlay with the Volkswagen is the dark blue, and GME is the light blue. Overlaid. Bottom line is, it's not going to be, they're going to do everything they can, these huge short sellers, to not lose. We'll just keep that up. Oh, we just saw a big jump in viewers. For those of you who are new here, I guess we're doing a challenge. If I hit 200,000 subscribers, I'm buying $10,000 worth of AMC or GME stock begrudgingly. So, I don't really want to buy $10,000 worth of stock, but I got to put that offer out there. So do what you will with that information. Thanks, Kyle, for the super chat. I appreciate all you. If I'm looking down, I'm not sleeping. I'm just looking at the chat. Yeah, I know it's a huge ask for subscribers, but that's what we determined earlier in the chat. People were saying, hit 200,000, you buy 10K. And I said, all right, fine, I'll do that. Because yesterday we hit 150,000 and I bought $1,000, but that was we only needed to go up 2,000 subscribers or so to do that. We can see AMC is still floating around 7.5%. We really just need to see some like 100,000 share buy orders here. GameStop up 7%, which is a little better than it was. We're seeing a small trend upwards. So Zachary, he asked I bought AMC at an average of $11. If this doesn't rocket, is it worth keeping long term? Can AMC hit averages above 15 like they did pre-COVID? So I know that at one point they were at the 30s. Let's just see. We were also looking at their assets yesterday. They have like $13 billion in assets, and their market cap right now is $2.85 billion. So I feel like if there was a sell-off, even where, you know, at liquidation, we're at more than the current stock price without diving into it too much. But yeah, they were around 35 before. So kind of how I'm looking at it, I'm not saying you should also look at it this way. This is, of course, just entertainment purposes. But how I'm kind of looking at it is very worst case if you just hold, you know, for 5 years or something like that. Even if we saw a crash, we'd probably be all right. But really scaling this out to 5 years, you can see this dip that we're in. If it were to continue upwards, looking at this dip a few years from now, you won't even think anything of this. You just think it's insignificant, even though it seems like the end of the world right now. Someone asked how many days do we have to hold, any expiration dates for the shorts. We just don't know. It's all a matter of how long they're willing to just sit there and lose money for. I don't know. It's like, how long are they willing to do that? We really don't know. A lot of people thought last week, but you know, we found that they're more hard-headed than that. Could start tomorrow. It could start 2 weeks from now. Welcome everyone who's new to the stream here. If you have an interesting article or video or story to tell, go ahead and email me, maxmahershow@gmail, maxmahershow@gmail.com. I'd be willing to take some calls too, like if someone is down like more than $25,000 on their position, or maybe you saw a huge growth. I'd be willing to take some calls. Talked to some people. Yesterday we talked to a lady who was turned $100,000 into $1.2 million on AMC with her retirement money. Pretty insane. I have it clipped on my channel if you want to see that. Welcome everyone to the stream. Someone asked, what do I mean by how long they can continue to lose money? So when you borrow shares to short, so when you short a share, you're borrowing a share from someone who's a shareholder. Basically how it works is, I did an example of watermelons in a video of mine I did. Let's say watermelons are $1 per melon. We call it price per melon, PPM. but you have some knowledge or some insight that watermelons are going to go down to 70 cents per melon, ppm. So you go to someone who has 100 watermelons and you say, hey, can I buy those 100 watermelons for $100? He says, or no, can I borrow those watermelons and pay you an interest rate to borrow them? He says, yeah, sure. And then you go and sell those melons. And then you're betting that you can later buy those 100 melons back for 70 cents per, so $70 total, and then return the 100 melons to the original owner. You get to pocket that 30 cents per melon, and then minus interest that gets paid to the original melon holder. So the people who are shorting shares have to pay interest on their shares shorted, and the interest goes up the more shares are shorted. So it gets more expensive to short the more shares that are shorted. So there's my analogy, price per melon. So you're saying we should buy melons. It's not financial melon advice. So someone's saying Portnoy put $700,000 into AMC. This guy's all over the place, if that's true. Let's see if we can. Let's see here. 5 minutes ago, breaking news. Well, this doesn't look like he bought anything. He announced that he sold at a $700,000 loss. Yeah, a lot of people were saying, what's your problem? Because, I mean, the reason people are saying, what's your problem, is because he was like, I don't care if I lose $2 million, I'm staying in this. And then he lost $700,000, he sold out. So, whatever. I don't know why this is really even news, if we're being honest. Let's see, I just got an email about this, so let's check out. He might have bought back. Let's see. Someone just emailed me, Mike Portnoy bought back in AMC. His name isn't even Mike. We're going to call him Mike Portnoy for now. Let's see. Fox Business. Yeah, so looks like Mike Portnoy bought back shares of AMC after losing $700,000 in the following squeeze trades. Why is this running? Oh, is this an interview with him? I guess we can see what he has to say for a minute here. Good old Mike.
I mean, I was jumping on the train trying to make quick money. No, that's what I was trying to do. I'll still do that if the opportunity presents itself. But it certainly opened my eyes to what can be done when the little guy starts getting the hammer.
Have you thought of changing course and going towards stocks that have really strong profits, strong growth, they're organized, they're well-maintained companies? Have you thought of making a switch to investing on fundamentals rather than the shorted stocks?
This is as of yesterday,
well,
I think. Okay, let's see here. So it looks like he bought Nokia, Naked Brands, and some AMC, maybe? I don't know. Again, I don't know why we even care, if we're being totally honest here. Someone said here in the super chat, thank you for that. So more or less, if we don't hit $40 a share, just play the money long term. I have the money to lose, so I don't need to hit it right away. That's kind of how I feel with the money that I have invested in it. It's not like money that I need to pay my mortgage or anything like that. But of course, I don't want to tell you that it's going to go up even long term because we don't know, for certain what might happen. But yeah, I'm not super worried long term, just for myself. So GameStock, almost 4%. AMC still around 8%. I guess I'll take 8% on the day. Wonder what I'm at personally, how much I'm down. Let's see. Probably like around $500-600. I'm down $719.54 right now. $11 average buy. There was a few more emails to address, so let's check those out. So we have some more updated graphs of GameStop versus AMC. You can see GameStop is just kind of a more exaggerated version of AMC, which is crazy to say, but I guess AMC is the less volatile bet here. I guess I'm in the way if I do that. So this is as of open today, and we can see they've pretty much scaled with each other 1-to-1 since then. Let's see if how the buy and sell orders are doing. There's still the top buys and sells in all of Fidelity. It's crazy how much volume there is. 60%, so it's gone up 1% of buys, and come on, 61%. So it's really unchanged. A lot of orders though. All right, let's see the other emails. Thank you for the emails that you're sending me. They've been surprisingly good. You never know when you put out your put this out to a stream. So I guess Popeyes has a promo code for meme stocks. So if you want to go to Popeyes should sponsor me for this. If you have a good meme, you can go ahead and email it to me too, maxmahershow@gmail.com. Let's see here. Someone says user sentiment in Europe is 100% buy right now. And someone else asked, does it matter which institution we buy stocks from? Some of them are just limiting how many shares you can own. I know Robinhood is limiting that, but it's quite a few shares. But depending on how many you're trying to buy, I haven't had any issues buying anything with Webull. Schwab has been fine recently. I know TD Ameritrade people are saying they haven't had any issues either recently. So now it seems like most of the problems have been kind of smoothed out a little bit. Welcome everyone who's new to this stream. What products do I use? I don't know what kind of shampoo and conditioner I use. I really need to look at the bottle. Oh yeah, we passed 154,000 subscribers. Thank you everyone who's subscribing. Now I can feed my cats. Welcome everyone who's joining. If there's an article or a meme or If you're making a painting of me, go ahead and email it to me, maxmahershow@gmail. Or if you got a good story, if you're down a good bit or up a good bit on one of these stocks, send me a screenshot and your phone number. We might give you a call as well. If you have a cool story about how you bought, I don't know, $1,000 of AMC last year and now it's worth $100,000 or something cool like that. All right, let's see. I just got emailed a fire AMC meme, it says. We'll be the judges of that. All right, let me know if this is a fire AMC meme or not. It's not bad. Let's see here. Alrighty, let's get back to the stocks page. Okay, AMC now almost 9%, so we've seen a little bit of a rally there. Some more buys. Looks like there was some significant buys here. And I can never find GameStop. There it is, about 5%. How do we see members of your channel? So I just started the membership thing like 2 days ago or so. But if you're a member, there'll be like an icon next to your name. Should say join somewhere on the chat there. If AMC got squeezed, how high do you think it would go? I think 50 would be conservative. We were talking about this the other day, and there was people who have estimates from 100 to 250. 250 would be pretty insane with how many shares outstanding they have. Like, they have so many shares, especially compared to GameStop. Let me see. Let's see. Oh, DAMC. So they have 287 million shares. GameStop, I think, has like 85 million. So it's a lot more, or no, 69 million. Should be 69.42, but that makes it harder to squeeze for AMC. All right, someone says check your email for memes, and it's their first time, so be gentle. I don't know. I can't promise that the stream chat will be gentle. We only want to laugh if it's actually funny, so we'll see. I'm not sure which one is you, so we'll just have to go through these real quick. Got someone who's down 1,000 on AMC. I'm almost down 1,000 on AMC. Let's see. All right, let's be the judge of these memes that I think they're homemade memes that just got sent to me. Entering into the market for the first time during the beginning of January 2021. Anxiously waiting for the market on February 1st. Kind of accurate. That's pretty similar to what I have set up right here. And the second one. Still have kidneys. It's not too late to get in. Yeah, if you have a kidney to trade for some stock. Not bad for your first time memester. Let's see any more. Sorry if you hear yelling. Got some hyped up guys here at work today. I wish I had. Apparently there's a big push for Dogecoin tomorrow. We'll see if that happens. I mean, that's obviously like as speculative as it can be. Let's pull this back over. Welcome everyone to the stream. Where'd you get your hairstyle? I just let it grow. I just don't get it cut. It's actually easier than keeping it short. You just don't do anything and it turns into this. Let's see what they got going on at CNBC. Just Amazon. Probably not interested in that. Let's check over on WallStreetBets. If GME was over, wouldn't it have already dropped to closer to the real value, not holding around 100? Yeah, I mean, it is definitely not 100% over because it's not going to hold at 100% or $100 after the squeeze is done. But that's not to say it couldn't go to 50 or to 500 again. Let's see here. Another billboard. Tweet from Tim Dillon. Down the line, don't give up hope. The only thing that stands in our way are every hedge fund, every institutional bank, the CIA, our government, the entire social media except Barstool Sports, and most of the tech world. Kind of accurate, not totally accurate. Still funny, though. Oh, there we go. If that's tweaking out a little bit. Yeah, I know there's a lot of people in this chat too who bought in at around 300. And if you're still holding, it's like, oh. I was down 2,000 at one point, and I was kind of like, I mean, how much worse can it get? We'll just ride this storm. Welcome, everyone. Yeah, sorry if you hear noise, people talking, or the occasional high-pitched squeal. I got a bunch of employees working on the other side of this wall, but they'll be done in fairly soon. Should be within like 20, 30 minutes they'll be done. But, you know, work with what you have here. Oh, we got AMC almost up to 10% gains today. Saw a nice little bump here. Yeah, someone says, so if I was a bored multi-billionaire looking to cause hell, why would buying an assload of GameStop achieve this goal right now? Yeah, I've been thinking about that. Like someone who has, you know, $5 billion or something, if they were to just throw in $1 billion or so, they would see this skyrocket and they could just pull out and, you know, double their investment or something. But I guess billionaires don't become billionaires because they do things like that in most cases. Also, most billionaires don't have $1 billion in cash. A lot of people talking about knock now. Someone says, I don't really get bright vibes from this guy. That's fine. It's probably the hair. nearly 6%. See if there's any big, lots of buys here. I wonder if there's going to be a sell-off though. Can I give my opinion on Nokia? I mean, if you're invested in Nokia because you want it to be one of the short squeezed companies, it's probably not the way to go, because the popularity definitely is not there. This is basically a popularity contest at this point, and in my opinion, that's not financial advice. It really comes down to either AMC or GameStop, and both of these are kind of flowing one-to-one. I've done this a few times, but I'll do it again because I'm sure there's a lot of new listeners here. If we go to Google Trends, we can see this will kind of illustrate the popularity. And if you want me to add another one here, let me know. But if we add in these stocks that were BlackBerry. So we can see with the search volume, AMC actually went up a little bit today. But obviously GME is first, but surprisingly AMC isn't far behind. 19% less popularity, but then from there it's a real steep cutoff. 9% knock, 3% Sundial, 17% BlackBerry. And also, this is interesting on this chart, broken down by sub-region, almost every state is majority AMC, which I find really interesting. So my play kind of just is AMC because I think more people can afford to jump in on it. BlackBerry's hot in Wyoming and Idaho for some reason. Someone says, Max, I just found you yesterday. Funny thing, my son was at work when he came home. We both talked about how we found this guy so calm, no ego. That's funny. You both randomly saw my stream. Well, welcome. It's probably because I was streaming for 7 hours. So YouTube's like, okay, we got to push this out to some people if this guy's going to go for 7 hours straight. Fortunately, we don't have 7 hours today. I have a meeting in about an hour and 10 minutes. So I won't be going all day today. I'm thinking about doing a marathon tomorrow, though. I'm feeling pretty good today. It's much easier when I start really early. So maybe, I don't know, 10 hours tomorrow. I need to get another person here to chat with. Maybe I'll get a buddy to join me or something. It's a weird thing to sit and talk to yourself all day long. But at least I got this chat. I try to be as interactive with the chat as possible. Yeah, there was a lot of people here watching yesterday. I think we were at like 4,600 or something. We're at 3,500 right now. So, also if you're on this stream, if you wouldn't mind just hitting the like button, that way it'll help push this out for the last hour or so of this stream before we finish up. I don't think we're going to hit that 200K goal, though, for those of you who want me to spend $10,000 on this stream. Thank you to everyone pressing like. Also, I just posted if anyone here on this stream is interested, I posted a stimulus update about 45 minutes ago or so with the latest stimulus news. AMC is spiking. We're hearing, almost 11%. That's some big buys here. I wonder if there was a big old purchase order or something. I don't see anything there. Good amount of green. Okay, up 10%, not too bad. Stock market Jesus, that's hilarious. I'll add we'll add this to the watch list. Dang. Up 42% for the day. That is wild. Tons of buys here. Someone just bought 20,000 shares. Wow. I know most of you are holding AMC, but I mean, we're looking pretty good. What is it now? 3 hours into market open, up 10%. I mean, even if we end the day up 10%, that's a small win. Because really, we have to think a little bit more long term. This whole thing could potentially take a month, really. Yeah, I'm using Webull right now. You can use that pinned comment to open account if you want. You'll get some free stocks. It's a pretty good deal. Up 11% now. Well, this is where we might see a rally. We might see something exciting happen here. There were some sell orders, now more buy orders. Hopefully people jump in on this train here. All right, yeah, let's strap in. Let's see if this rocket ship takes off. A little bit of sells. There's probably going to be a friction point right around $9 from people trying to sell. That would be insane if we saw 20 today. I'd be very happy if we get to 10 today, and extremely happy if we get to 12 again. Someone says massive AMC at 1 p.m. Do I know what happened with CCIV? It went up 300% this week. No, I don't, but we can check it out. Churchill Capital Corp. There's not even... Let's see. Churchill shares crossed $30 despite no Lucid Motors SPAC news. Bringing gains of more than 200% since the start of the year. However, the major move in CCIV stock comes without confirmation of a Lucid Motors SPAC merger. Looks like it's kind of just based on hype. There's no like real news. It might just be in anticipation of this news. Because a lot of times the stock market will just go in the direction that investors think it will go. It's not necessarily a change because of a reaction. It's a reaction to the expectation of a reaction, if that makes sense. Someone asked, can I talk about the pre-market AMC price, how it dropped? I mean, a lot of times, there'll be some hype right before market opens. Maybe someone will see it's up 5%, and then they'll put in their buy orders, and then the chaos kind of settles after market open. I mean, it's always a little bit chaotic in the first hour. A lot of more seasoned traders don't do anything for like the first hour a lot of times, but really nothing's set in stone, because sometimes that's not true either. But we're up over 11% here. Still not getting to $9 though. That's probably going to be another resistance point. Well, that's cool for those who are saying that this made them interested in stocks. That's awesome. I would like to mix in some more long-term type investment stuff because I really think that's where you should focus your portfolio. It's not as exciting. You're not going to see, this kind of thing very often in one day, but that's where you want to park most of your like 98% of your portfolio, and then 2% this kind of stuff. But this is the exciting stuff. Okay, I think we have. Oh, 2 of me. No one wants that. We have some more emails to take a look at. Let's see here. Oh, this might be big. So Cohen's .72 raises $1.5 billion after Melvin Capital infusion, and this was today. So Stephen Cohen's .72 Asset Management has opened to new cash and raised more than $1.5 billion in commitments in a matter of days, according to people familiar with the matter. The move comes after the hedge fund provided $750 million in emergency cash to Gabe Plotkin's Melvin Capital. That's one of the biggest shorters of GameStop, which was struggling with GameStop Corporation and other short bets gone sour. Citadel hedge funds, along with founder Ken Griffin and his firm's partners, put $2 billion into Melvin, which they basically burned that already. By the end of last month, Melvin sunk 53% after retail investors banded together online to push up the prices of GameStop. We know that. .72 is raising fresh cash because it sees investment opportunities in the market. One of the people said, asking not to be identified because the information isn't public, the firm had about $18.9 billion in assets as of October. The hedge fund fell 9% in January, the people said. Before its recent cash injection, .72 had about $1 billion invested in Melvin. A spokeswoman for the Stamford, Connecticut-based firm declined to comment. So they got another cash infusion, which just means, it's good for us. It's good for the those who are betting against the shorts, that they are just needing more and more cash to kind of stave off of this. I mean, they were shorting it when the price was, I don't know, $4 or $5. Let's see. And thank you, Tom, for sending me that. All right, we got some more memes here. Jeff Bezos meme. This is very accurate. Elon Musk kind of had a similar thing. It kind of looks like old Elon Musk. And now he's not even going to be a CEO. He's going to focus on Blue Origins, I guess, the majority of his time. I think he's chief of the board still on Amazon, or will be Q3. But he's going to focus on Blue Origins, which makes sense to me because, it seems like every single tech entrepreneur loves the idea of space, and if you get to focus on that full time, especially if he wants to try to beat Elon in his own game. Let's see. Got another meme here. Wall Street MBA is going to work today after being outsmarted by Thick Daddy 69 and Potato in my ass. Yeah, that's pretty accurate. That was a good one. Let's see what else we got here. Someone asked, what are the odds of an AMC squeeze tomorrow? And why do you think that BlackRock increased their stake in AMC? I mean, we don't know if they increased their stake because of something that was scheduled, or they think that there's going to be an actual short squeeze. They own 6.2 million shares, which is like, I think 1.5% of the company or something. Odds of a squeeze tomorrow, it's hard to say exactly. I don't want to make any firm predictions and then be wrong. Plans on another video like the Tyson one? Yeah, I would love to do more videos like that. The technical analysis, for those of you who are unfamiliar, let me just pull it up real quick. I did a technical analysis on Tyson Foods. Must have posted it 2 weeks ago. So I just posted on January 23rd, did a technical analysis on Tyson Foods and why I think it's a really good long-term buy. I'm actually up that to 11,000 at this point, but this is worth a watch if you're looking for some kind of long-term position to hold. And I really break down the financials and why I think it's a good buy. And actually, in the description of this live stream, I have this spreadsheet if you want to download the spreadsheet so you have this for your own assessments. Basically, I'm trying to determine if this company has a competitive advantage based on their financials and how healthy they are. You can see like JBS is one of the biggest meat producers in the world. That's their profit margin, 8.8%, and Tyson Foods is 13.96. So I think it's a good buy. Not investment advice, but just my opinion for entertainment purposes only. The problem is with those videos, they're not nearly as exciting. So, you know, I love doing those analyses, but people are much more interested in the short-term stuff, unfortunately. Can I go over some tips on choosing long-term stocks? Yeah, I can. If you're not interested in this, I guess too bad. I'm going to go over this spreadsheet that I have that I built a while back. One second, I got to pull it up on my drive. I use this spreadsheet to analyze all of my investments. Pull this back over. Okay, so this is my stock screener. Yeah, you can see that. There's a link to this in the description if you want this, or you can just make your own if you really want. But these are the criterias that I use for a stock screener. So on the left here is what exactly I'm looking for. Price to earnings ratio, the PDE I'm looking for between 4 and 15, price to book between 1.6 or 0.6 and 1.5, debt to equity. Over 1 is usually good, but you have to compare that to the industry averages. Current ratio over 1.5 is good. Also might want to compare that to industry averages. Market cap, I look for companies over $100 million, and then dividends, I look for things that are producing cash. But in this spreadsheet, this is actually my analysis that's up still from Tyson. It's what exactly I'm looking for. And it's not every investment has to hit every single one of these, but it's kind of the more the better. You know, when the market is really high right now, it's hard to find a lot of good deals. And sometimes you have to, if you're just trying to get a deal, you know, maybe you'll get 80% of these or so. But on all of these, it says what exactly I'm looking for. So like depreciation to gross profit, you want this low. Like I said, Coca-Cola is 7%. They're kind of like a gold standard as far as financials, but their price is always high pretty much. Tyson Foods was 17.7%, but they're so asset heavy that I'm able to kind of justify still making that investment. Because, you know, like I said, it's hard to hit all of these because it's like hitting all of these is the perfect investment basically. But my goal is to really purchase things that are cash flowing, consistent and growing earnings on a year-to-year basis, consistent and growing inventory as well as profits, which means they're finding good ways to earn more based on increasing inventories. You want your SGA, your selling general administrative cost, to be fairly straight lined while earnings are increasing. You want a nice dividend, so it's cash producing. And this is just one of the few, Tyson is one of the few companies that hasn't seen a huge skyrocket this year. And I think its valuation should be about 30-40% higher than it currently is, and it's still producing cash. Where are you guys getting all this 1 p.m. business for AMC? Let me know. So 11. Okay, so in 20 minutes, apparently, there's going to be something big, but where are you getting this buy business 1 p.m.? We're up nearly 11%. Someone says they're playing the long game on AMC. A lot of people are doing that, actually. Yeah, I'm not going to tell everyone to go all in at 1 p.m. I don't. This is just for entertainment. Let's see what GameStop, doing pretty good, up almost 9%. Pretty good. AMC still floating around 11. We can't really complain. We'll see if people start jumping on. Oh, there's a lot of buys jumping on this the buy train as it's going up. People love to jump on the bandwagon. And thank you for all the super chats, everyone. The ad revenue on live streams is basically nothing, so I really appreciate it. There's 3,700 shares. Welcome everyone who's new to the stream. We're up over 11% now, 11.25. Someone says, why don't hedge fund managers give us what we want and then ask the feds for another bailout? Everyone wins. Yeah, except for the bailout comes from us too. So we win, but then it gets taken. How long have I been playing in the stock market game? Pretty much since I was like 19, but my positions were very small until more recently because kind of my story with investing, we're at 11.5% up now with AMC. My story with investing is I was very into just finance and technical analysis when I was like 18, 19 years old. But then I realized, you know, with the 20 grand or so I had saved up, I think I had like 17 grand saved up, that wasn't going to make me rich investing that in really anything that I wanted to invest in like a long-term buy. So I took that money and just started businesses instead and just reinvested pretty much everything into businesses with the exception of just maxing out a Roth IRA for a while. But I've been interested in it for, 6-7 years now. Very interested in it. My biggest gain to date, I mean, I don't have any of those like 6,000% returns or anything like that. One of my best buy this year was Steve Madden shoes. I would try to tell everyone and their mother about that when I was looking up. This was like the middle of March. I bought it literally at its lowest, and it's up I think like 70% since then, and that was like a long-term buy. Oh, we've seen some huge buy orders here. We just jumped up to 12.5%. But yeah, I liked Steve Madden's shoes a lot. They had zero debt. They have zero debt. Very profitable, but they were down like 60% or 50% from the pandemic. A lot of buy, 13% now. We might see Open Yahoo Finance. Okay, let's see what's going on there. Let's see. Is there any news that's come out here? Dang, we're seeing some skyrocketing prices. I don't know why Yahoo Finance is any different. I got too many tabs open anyways. AMC is taking off right now. Look at that. Huge buy orders. Everyone's hopping on this train. I'm not sure what happened over in Reddit or something like that. Someone about this 1 p.m. business. Was it on WallStreetBets where you guys are seeing this? 1 p.m. Everyone's saying one share at 1. Where are you seeing this? Let's see. Top. No. DFV just tweeted him drinking beer. I like the stock. Love to see that. Someone email me this one share at 1 p.m. Where exactly we can go to that so we can take a look at it. Someone made the news. This is really cool. A 20-year-old who made big bucks in the GameStop stock surge used it to buy Nintendo Switches and video games for a children's hospital. Wow. That's awesome. We got to do the same after our AMC shares blow up. Or skyrocket, I should say. Blow up has a negative connotation. All right, let's check back here. Up 16% now. Okay, we're up over $9, which is good. Obviously, that would be a resistance point. Dang. 17% now. Wow. This is going wild. Welcome everyone who's new to the stream. Holy crap. GameStop is up 14% as well. They're now at 102. Look at all these buy orders. Tons and tons, 5,000 shares, 1,700 shares. It's going crazy right now in the chat. Up, oh, we're teetering right around 18%. We got some sell orders. Some people sold off a little bit. But still tons of buy orders here. A little bit of resistance. I mean, you can expect that when it just shot up so much. This is on Webull. You can use that link in the pin chat to open an account if you want. This is wild. I'll keep this up while I check the emails on my phone. Okay, still up 16 and a half. This chat is going crazy. Diamond hands. You guys are hyped right now. Oh, this is great. I'm glad I'm streaming right now. 4,000 people in here. Welcome, everyone. Welcome. We've been doing streams every day this week. If you enjoy these streams, just go ahead and hit that subscribe button. You won't regret it. If you do, you can just unsubscribe, you know. Might as well take a chance. We're all taking a chance on AMC. Might as well take a chance on MAX. Still up 15%. Supposedly, people are buying at 1. I'm not going to push that. I don't want to push any kind of coordinated purchase, allegedly. This is wild. You can see those buy orders are coming in like crazy. I want to see real quick, but the buy and sell ratio changed up a little bit. That's 61%, and 60% hasn't changed. Let's go back here. Hello, welcome everyone to the chat. This is wild. 3,000 shares, 2,000 shares, 3,000 shares. If it goes up more than 10% in 5 minutes, though, it's going to get suspended. Floating right around $9 a share. What's my target price for AMC? I mean, today, I was saying earlier, I don't think it'd be surprising for it to get around $10 today, and I still don't think it would be that surprising. This is on Webull. You can use that pinned comment to open an account if you want. Those of you who are just joining in, we have some other highly requested watch list stocks here too that, I mean, as you can see, everything's doing well today. Everything's up. How's GameStop? GameStop is up. I think this is the highest it's been today. No, not quite. I guess the Webull link might only be 2 free stocks. They might have just changed it then. Their deals are constantly changing, but it's still 2 free stocks. You'll still get about $30 worth of free stocks. Yeah, so it's actually 2 free stocks. I'll have to change that. Yeah, Bitcoin's up over 4%. We're still floating here right around 9%. Good time for a granola bar break. I don't know why you freaks want the mic on when I'm eating. That's so weird. All right, it's back on. I don't know. You weirdos like the sound of eating? That's like the worst noise. 9,800 shares just went through. Wow. 4,000 shares. ASMR at 1 p.m. Going all in on ASMR at 1 p.m. Tons of buy orders. I think it's going to jump up again right now. Someone says they always tune in when I'm eating. I've ate like in 20 hours of streaming, I've ate twice. Yeah, I'll buy an additional share here in 5 minutes. 3 minutes. Why not? I'm doing it on my phone though. All right. Gonna buy one more share. We'll make it 305. All right, I have the order all ready here. Bid price is 904. We'll see if it skyrockets in 2 minutes. Dang, this chat is going crazy. Yeah, what if this just does nothing at 1 p.m.? We're all going to be like, okay, that was for nothing. Yep, AMC. We got 1 minute to potential liftoff. Here we go. Potential liftoff here. Got about 30 seconds. We're up over 16%. Inching up into 17. My computer even just turned the fan on. It's, oh, geez, here we go. All right, order received, 1 share on my end. Up 18%. My holding is still down $400. I don't know. We might still see other people trying to sell off whenever everyone's trying to buy one. Yeah, Weeble must have just changed that offer. I haven't been able to change the pinned comment yet. It might be 2 free stocks now. I just don't want to take it off this screen as of right now. 18%. Ooh, almost a 19. Right here. Percentage increase. What's GameStop is still around 10.5% up. Yeah, Weeble updated their offer to 2 free stocks. I'll change that in a minute here. I just don't want to pull the screen off. 19, we're at, 20%. 20%. Oh, we're teetering right around 20%. Almost $9.50 per share. Can I get a 21? 21. Like a carnival barker. Let's see, can we get to 21? Yeah, this upwards trend here. Welcome everyone who's new to the stream. We're watching history unfold right now. Sorry if you hear some people talking outside the door here. A bunch of workers who are getting ready to leave to a job site. Uh-oh, a little bit of sell action. The chat is going crazy. Still no halts, so we haven't had any crazy increases. GameStop, 13%. Teetering right around close yesterday. Oh, 21.5. Wow. And I still haven't even broken even. I'm still down $400. I'm getting closer though. Maybe I should have bought $10,000 worth earlier. $9.5. 22% up. $23 up. Dang. Yeah, I feel you, Justin. 21% up and still in the hole. 24% up. Oh my gosh. This is insane. Let's scroll this out to 10 minutes. You can just see this. Got a quarter pipe here. Wow. Up 24%. Is there anyone out there buying right now? Look at all these. 4,000 shares. Got some sell orders. 1,200 shares. Apes together strong. Oh, now we're down to 21%, and you still can't complain too much. Everything is up over here. GameStop is now at 15% up. They just had a real big rally in the last 10 or so minutes. Wow. 16%. Okay, we're down back to the 19s. We'll see if we can keep on pushing this. 5,000 people on the stream. Wow. Welcome everyone who's new here. I'll jump around more to some analysis in a bit here. I just know everyone wants to see the ticker right now. Someone said this is the most excited I've seen you. Yeah, it's pretty darn exciting. Never would have thought so many people like the calm stock streamer. Guess there's a niche for everything. Is it niche or niche? Hear it both ways. Two at 2, 3 at 3. You guys are wild. Wish I didn't have this meeting at 11:30. $10 million in volume here, 6 million in volume, 14 million in volume. That is insane. That right there is more than the average stock volume for this for AMC in a day. Let's check out real quick the buy to sell. It's got to change. 62% and 60%. Changed a little bit. Welcome everyone to the stream. The stock whisperer, that's great. Still floating around 17%. We can't complain too much here. Someone asked if I'm related to Theo Vaughn. No. I wish I was, though. Dang. I guess this 1-at-1 business worked. See what the volume's looking like. 16 million shares of volume here. Holy. Seen some more buy action here. 17 million in volume. I think the average daily volume is average daily volume is 24 million. And we just saw 16 million, 17 million in, what is that, 2 minutes? That's absolutely insane. And volume is the amount of shares exchanged. Well, it looks like that one-at-one business worked. It's kind of settled down now. Volume is the total amount of shares bought or sold in that period. Bought and sold, I should say. Am I baby Jesus? Yes. Thank you to everyone who's been subscribing. It's been jumping up by a little bit. If you haven't subscribed yet, just go ahead and subscribe. I report on news, finance. Basically what I do is I gather information from different news sites and then pick out the non-biased portions and explain it in an easy to understand way. And I post videos on how you can make money with investments and stimulus and things like that. So if you want to give me a shot and subscribe, I would appreciate it. Thank you for the super chat. Appreciate it. DIW. I don't know how to say your username. Thanks to everyone subscribing. And also, if you wouldn't mind liking the stream, helps push the stream out. I only have about 20 minutes before I have to go to a meeting, unfortunately. I'll stream again tomorrow. But I'll stay here right until I have to leave. So we'll see if we can boost this stream up even higher for the next 20 minutes. Just call in sick. Dang. I wonder if, I don't think I have any way to transfer this now. I don't think it's possible, unfortunately. But make sure you're subscribed. I'll do a stream tomorrow. I'm thinking I'm going to do a marathon stream tomorrow, like crazy amount of time. We did 7 hours and 15 minutes yesterday. Maybe I'll try to do like 10 hours or something tomorrow. Just go wild. Do the meeting on live stream. Let me just double check the meeting is still on. Volume means the total amount of shares bought or sold in a given period. Let's see here. All right, so I'm seeing if my meeting is still a go or if I can somehow get out of it. If they cancel, perfect. But I can't cancel, unfortunately. What sort of resistance levels are we seeing between 9:30 and 10? I'm actually not sure. GME up 13%. CNBC on a commercial, of course. Up 20% here on the day. Still down. That's when you know you're down bad, when the stock's up 20% and your portfolio is still down. Live stream the meeting. If I had a way to transfer this stuff to my office, I don't think it's possible. It's physically plugged into the Ethernet. Really going to communion. Someone asked, what do you think of AMC right now? Let's let them know in the chat how we feel about AMC. Is it a hold? We feeling good about AMC? Back in 20% here, 20% gains on the day. A lot of people hold. You guys are great. I wish we had a Tarzan painting update before I had to go. I might have to show that tomorrow. One more reason to tune in tomorrow, because we should be done by tomorrow. Apes strong together. All right, you guys want me to start looking into other articles before I leave, or do we want me just to keep this up and we'll chill here for another 12 or so minutes? Can we start the... 9,000 purchase for 9,000, 9,800. Take a look at the volume. Okay. The volume, we're still getting 8 million in volume right here. Holy smokes. Let me turn this to the 3-minute. Got 2 million in volume, 1.3 million here. So this is every 3 minutes we're looking at. So in this 3-minute period, we had 2.8 million shares bought or sold. That's 10% of a typical day for this company. It's so insane. And like here, we had 5 million in a 3-minute period, and that would be 12:48. So that was running right up to 1 p.m. Let's see, right at 1. Right at 1, we had 2 million, and then at around 1:03, we had 5 million. So you can see that 1 at 1, I mean, that was basically that. All these people were people who just wanted to get in a little bit cheaper than right at 1. I don't know. Tomorrow might be the day. You know, we might have this 25, 30% run up today. And then if we see another one tomorrow, I think pretty much everyone will be at least broken even or close to or up. This chat is going nuts. Still a little bit of sell action, but we can see if we zoom out a little bit, last 15 or 15-minute segments. Look at that. That's insanity. Here's the 1 hour segments. I mean, we're just seeing massive amounts of volume here. In this 15-minute period, it was almost 15 million shares traded. 21 million shares traded. Wow. Thank you, Linda. Appreciate that. I think this is a record stream we have here. Record viewers. We were right around 5,000. Tomorrow, maybe we can get that up around 7,500. What do you guys think? Marathon stream tomorrow? You can leave me up on a tablet or something like that. I'll bring some granola bars. I'll try to go as long as I can without peeing. Make it an everyday thing. Link to next live stream. I have to pull this screen down in order to set it up, unfortunately. I'll start the next live stream around like 7:15 a.m. to 7:25 a.m. tomorrow, right before market opens. Maybe a little bit earlier if I can get in earlier, but just make sure you're subscribed, turn your notifications on. That way you can see once I start streaming. But I'll start early in the morning tomorrow and then just go as long as I can possibly take it because I don't have any meetings scheduled tomorrow. I should call in sick tomorrow to watch the live stream. I mean, I'm not telling you to call in sick to work to watch the live stream tomorrow, but, you know, maybe you should. Still up 20% here. Tarzan, Lord of the Diamond Hand Apes. I need that on a sign. You know, if someone can make some artwork that says that. What time zone? Oh, yeah. So I'll start the stream around half hour before market open tomorrow, which is around 7-ish a.m. tomorrow. Well, 7:30 here it opens, but I'll start the stream as soon after 7 a.m. as I can. If you do an 8-hour stream, just get a lot of sleep the night before. Yeah, I did 7 hours yesterday. I was a little beat afterwards. I feel great right now, though. Yeah, a lot of people watching the live stream at work or during their commutes and things like that. Someone says, got you up on my 75-inch TV, tablet, and laptop next to me. That's awesome. Let me know if you have anything that I should prepare tomorrow to make this even more interesting. This is on Webull. You can use that pinned comment. It says 4 free stocks there, but I guess it's actually 2. They just changed the offer. Their offers are always changing. I haven't had a chance to change the pinned comment, though. Look at this upward trend, though. Insane. Volume, 5 million shares. Zoom in a little further here. So if you jump in really close, you can see it's a little bit more up and down. But if we jump out, you can see the overall trend. These are 15-minute segments. So the last hour and 45 minutes have been a very steady trend upwards. Yeah, I think 17 would be tough to hit today, but if we get this around 11, 12 by the end of the day, I think we'd be in a really good position for tomorrow. I mean, I could leave this stock ticker up, but that's kind of boring, I feel like. Okay, suggestions on long-term stocks to hold for tomorrow's stream. I could cover some of that. Okay, let me see if I can leave this up. I'm going to ask my my editor if I can have this left up while I'm gone. If I leave this thing up, I mean, I'm going to be gone for, what is it, almost 3 hours. So just so you know. But I'm going to see if it's possible. I could put the audio for CNBC on with this stock ticker up. Okay, yeah, I'll do that. I'll leave the audio up. Let me just confirm. I'll be right back in a second here.
jewelry, cars, and of course, credit cards. You're up to date, Brian. I'll send it back to you.
All right, do appreciate that, Suhura, and thank you very much. All right, so much left to do as we turn the corner on the hour. What do stimulus and the Reddit-fueled rally in some stocks have in common? Well, we've got some answers to that question. And as we head to break, do not forget that February is Black History Month. We are honoring some of our CNBC contributors. And here is New England Patriots linebacker Brandon Copeland on the racial wealth gap and the importance of financial literacy.
There's a reason why this NFL player decides to take his off seasons and go back to his alma mater just to teach a course on financial literacy. The lack in access to information has caused the racial wealth gap over centuries. It's time that we finally put an emphasis on financial education in our schools throughout the country, but specifically in Black and brown communities.
Cities, born thousands of years ago. They connected us and pushed humanity forward. But they also divided us from nature, from each other, from ourselves. They forgot about people. They forgot about the planet. And we forgot what's important. It's time to remember. It's time for a revolution. It's time to redefine our relationship with nature, to reimagine what a city is without cars and roads, without smog or noise. It's time to rethink communities so that we can connect and create the way we were meant to. It's time. It's time to draw the line. Neom.
Hi, Mr. Wonderful here. I believe that startup investing is key to building wealth, but it's hard for everyday people to find access to these deals. Well, I've got good news. On Start Engine, you can discover hundreds of startups raising capital and begin building your portfolio today. For as little as $100.
All right, I got everything set up. I'm going to leave CNBC going with this stock ticker going. I'll be back in a few hours. It'll be like 2.5-ish, 3 hours though. Feel free to leave this stream up, but I'll be back a little bit later. Let me know if everything sounds all right with CNBC as well.
.com.
Get an edge. Invest like a pro. Access CNBC's live streams around the globe. Unparalleled access to CNBC experts. Actionable investor insight and ideas. Start your free trial today at cnbc.com/pro.
All right, welcome back to the exchange. Well, don't look now, but February is starting to look pretty good from a market's perspective. Yeah, we're not doing a whole lot today, but the S&P 500 remains on track for its best weekly move in 3 months. You got earnings that have come in strong, especially in the big cap tech stocks. Stimulus may be on the way of some size, but it's likely coming. And the vaccine rollout is going pretty well, and new cases are down 40% around the United States in the last 2 weeks. So how to invest in and around all of this? Joining us now is Sandy Villery, co-portfolio manager of the Villery Balanced Fund, and Jason Brady, president and CEO of Thornburg Investment Management. Sandy, first to you, got to be loving this time from a fund manager's perspective, because what we're learning is small caps, your space, are doing well, and it's kind of become a stock picker's market again. You and I have talked about this company, Pool. Guess what? They're in the pool business. You loved them years ago. You still love them. How come?
Yeah, so it really is a stock picker's market, which has been just a nice turn of events for us over the last couple of years. And so a company like Pool did quite well through the stay-at-home period. And I would say that even today, you look at their sales, 2/3 are just refurbishment and maintenance of your swimming pool. So it's not unlike a utility or a telecom. You're not going to fill your pool in. You're going to continue to treat it with chemicals. And these guys, while it's boring, they just continue to do well and put up good numbers. And every time a new pool is put in, and there's going to be 90,000 this year probably, you got to repair and refurbish that pool every 7 to 10 years.
I mean,
So
that's
like
the
it a
one
lot.
thing. You could not get a person to put in a pool. Everybody that we talked to, the Visa CEO, everybody who could was saying, okay, I'm going to make my home as good as possible. It's a 3 or 4 year backlog in certain areas to get pools. Jason Brady, we talk a lot about the U.S., as we should. We're based here, but we are a global financial network. And you believe while the U.S. looks good, there might be some better opportunities in emerging markets around the world. Specifically, where are you looking?
Sure. So I think one key in investing in emerging markets is really to maintain balance. What we don't want to get into is we're going to be all in on growth or all in on value, not just in emerging markets, but anywhere. We take a couple of names that actually have aspects of both. One, Taiwan Semiconductor, obviously participating in some of the growth in technology, being part of all of our lives, really a dominant producer, but a bit of a cyclical name over time. On the flip side, something you would think of as very cyclical, which would be Azul, a Brazilian airline, but it's actually a quality business. About 70% of the routes, they're the only flyer. So two names that look really different actually have aspects of both growth and value, and together in a portfolio can be really interesting.
Yeah, Latin America, Azul, we're watching that. One more to you, Jason. A lot of people talking about the ex-China-Asia trade, the Vietnams, the world supply chains movement. Are you a buyer of that?
Look, I think China is still a dominant player in the global economy and in the global supply chain. But there's no doubt that companies are diversifying that supply chain. And China is so large, even small percentages moving away from that supply chain, not just to Asia and other places in Asia, but also to places like Latin America, can be really valuable. So yes, it's definitely a theme. It's really all part of distributed global growth.
And then, Sandy, back to you. Caesars Entertainment, okay, the casino company. But you've owned it for a while. The stock has soared. The sort of the get-out-and-travel trade that we've talked about has done well. Are you looking to trim a little bit with this huge gain in the name, or do you believe that even at these prices and this gain, that there's more room to run in CZR?
Yeah, I think this could be a triple-digit stock, and this is one we want to be involved in some of the, open up the economy type of names. And these guys can control expenses so well that, even at occupancy levels that may not be, completely full, their profitability and margins are just expanding. So I love Tom Reeg as a manager. He's done a great job historically. And then their acquisition of William Hill, $3.5 billion. This is going to be one where they can get into the online gaming aspect of things. And as municipalities struggle, and look to legalize gaming, that's just going to be another tailwind for them. So I think it's going to look pretty good, and I think it's a triple-digit stock.
Wow, triple-digit stock on Caesars. You like Pool. Jason likes Azul and some of these other emerging markets. Great discussion, guys. Right to the point. Sandy Villery, Jason Brady. Appreciate it, gentlemen.
Thanks, Brian.
Longtime short seller Carson Block telling CNBC Pro that the crazy trading and wild spikes and all the meme stock shows just how fragile parts of this stock market may be. You can listen to the whole interview with Carson. Always interesting at cnbc.com/pro. Sign up today. All right, coming up, GameStop's new C-suite hire. Travel is coming back, and Netflix and Nap? Yeah, that's all coming up at today's Rapid Fire. Stick around.
Wondering what actually goes into your multivitamin? At New Chapter, it's innovation, organic ingredients, and fermentation.
Fermentation?
Yes, formulated to help your body really, truly absorb the natural goodness. New Chapter, wellness well done.
We need a better world of work. I'm Johnny C. Taylor Jr., President and CEO of Sherman. I'm calling on all HR professionals and managers to change the workplace. Sherman's PMQ improves managers' ability to lead successfully. Get your managers qualified today.
Stay restless with the icon that does the same. The RX, crafted by Lexus.
Lease the 2021 RX 350 for $429 a month for 36 months.
Experience amazing at your Lexus dealer.
Why did you invest in gold? Are you living in the past? In a digital world, gold shouldn't weigh down your portfolio. You see where things are going. Digital currencies like Bitcoin are the future. They're secure, borderless, and unlike gold, they actually have utility. Leave the pack behind. It's time to drop gold. Go digital. Go grayscale.
Of all the companies on the Fortune 500 in the year 2000, more than half no longer exist. Digital transformation isn't just a good idea. It's a matter of corporate survival. Enterprise AI enables organizations to use artificial intelligence at enterprise scale, solving previously unsolvable business problems to help you not just survive, but thrive. C3.ai. This is Enterprise AI.
All right, it is time now for Rapid Fire, hitting a few big stories and some fun ones that need to be on your radar. Today, it's all about GameStop, travel, and how Netflix is trying to save us from ourselves. Here now to enter the arena, Julia Borston, CNBC.com tech editor Steve Kovac, an Ed Lee media reporter for the New York Times, and a CNBC contributor. They're smiling now, they won't be at the end. All right, first up, GameStop. And it's not just about the wild stock price. The company announcing 3 new executive hires. Company appointing former Amazon Web Services engineering lead Matt Francis to its newly created Chief Tech Officer position. Francis will oversee e-commerce and technology functions. GameStop also hiring a senior VP of customer care and VP of fulfillment. Shares of GameStop turning higher this morning. The stock, by the way, remains super volatile. Ed Lee, to you. I mean, the old adage, never waste a great crisis. I'm just thinking GameStop's name, whether in a good way or bad way, they got a lot of publicity. They're trying to take advantage of it.
They're definitely trying to take advantage of it. I mean, this move, and look, I think Cohen was the guy who bought into the stock with the idea that, hey, if this company can actually figure out the e-commerce side of things and delivery side of things, it might have a way to go up, which is not the long thesis that we saw on WallStreetBets. That long thesis with the DFW guy. I mean, that guy, he was really talking about the explosion in more consoles and more console games. That's not really where the upside is. The upside is going to be in delivery, in more digital downloads, and I think if they really make that work, it might actually achieve the value. I mean, not where it's trading now, but that there's real upside. And I think that is actually interesting and is a real plan that where finally fundamentals might mean something.
Julia Borston, you probably got breaking news on the imminent GameStop movie and/or series. But what do you make of this move?
Look, I think that this is exactly why Ryan Cohen bought in. This was his plan to try to figure out how to turn GameStop from brick and mortar into what he called to be more like the Amazon of video games. Now, I think GameStop does have this advantage in that they have all these people, millions of people in their loyalty program. So they have this audience they might be able to convince to buy things online from them instead of just thinking of them as a place you go to stand in line for the latest game. Because, of course, Brian, that's just not the way games are really distributed anymore.
No, but Steve, you got to get people in the stores. That's the challenge. I mean, of course, you got a pandemic, too, but now people might poke in and say, I hear about GameStop, and what exactly is it? Haven't been in a store in a couple of years, and maybe they like what they see.
Yeah, and that's going to be the big challenge with this strategy, Brian, is the way we buy and purchase video games is really shifting from you go to GameStop, you trade in your old game and get a new physical copy. All the console makers are moving to a digital download model or a streaming model like we're seeing with Google and Microsoft. So I'm really confused. Unless they have their own app store or something like that, how does GameStop really capitalize on this next wave of the way people access the games?
Well, that's why they hired the guy. Maybe you just use it as a showroom type thing. You convert to digital. You got people to come in to play the game so they know what they want to download. I don't know. I'm just throwing it out there. By the way, Julia, Adam Driver as Vlad Tenev, can you see it? I can see it. Could be good. Make it happen.
Well, you know what, Brian, is there will be so many versions of that story told by Hollywood. You can cast many versions of it, Brian, and I'm sure some of those actors that you pick will end up playing those roles.
Yes. And to play the role of Dave Portnoy, I choose Dave Portnoy. All right, turning now to travel. Finally, there may be reasons for the industry to be optimistic about this year. A new survey from the American Hotel and Lodging Association and Morning Consult shows 56% of consumers report they are likely to travel for fun, leisure, or vacation this year. It's actually not down too much from an average non-pandemic year, where about 70% of us take a trip. Coincidentally, we showed it to you, the GOAT trade, get out and travel, solidly in the green today. And, you know, listen, without getting into it too much, Ed, I posted a poll on my Twitter. People can still respond. When do you plan to take your first 4 fun? A lot of people wrote they already have. When do you think the Lee family shall be hitting the road?
Hey, look, the Lee family, we love to travel. We usually take 2 or 3 trips a year. At least 1 or 2 of them are abroad. We are definitely not traveling this year, that's for sure. I mean, even with vaccine rollout, which, you know, it's going, but it's probably not going as fast enough. You know, and different parts of the world have different issues as well. So we don't see that in our immediate future. Maybe even not next year, or maybe towards the end of next year for us. So we are not in that 56%.
What?
I'm actually surprised. That's a high number, frankly.
I got a flight planned to Europe in June, which I'm still planning. Of course, I've been moving around a little bit. What about you, Steve?
I'll be on a plane as soon as I get both my shots. You know, this entire pandemic, I'm separated from my family who lives in Texas, about 2,000 miles away. I haven't seen them since 2 Christmases ago. As soon as I get that shot, I'm on a plane and I'm going.
Yeah, and Texas, I'm sure your family tells you, Steve, different world down there as well. All right, let's move on.
Yeah,
Topic
exactly.
number 3, and that is the very different. Outside of the Northeast, things are very different. Golden Globes nominations are out, and during a year when we were all binging our way through lockdowns, the streamers all came out on top. Netflix crushing the competition, no surprise, picking up a grand total of 42 nominations across all categories, which make up 35% of all nominations. Netflix far outpacing HBO Max, Apple TV, and others. Julia Borston, this is your world. Listen, here's the thing, and some of these shows are great. I've seen some of them, but Netflix had shows to show us. Production is all but shut down. I mean, how important was it that they just simply had a catalog of shows that they hadn't shown before?
Well, look, most of the shows that we all watched this year were made long before this year. So I think that the content that we've been viewing this year really hasn't been impacted by those production shutdowns, and there have been plenty of productions that have gone up and running again. But Brian, what I think is so amazing about these Netflix numbers, I mean, they have more than double the number of nominations this year than they had last year. And these are nominations across both film and TV. Part of that is that a lot of the films that were supposed to get distributed in theaters this year were delayed. So maybe there was less competition. But to me, this really speaks to the fact that Netflix is investing an estimated $17 billion in content last year. They are spending so much content on everyone, more than anyone. They are outspending, and they have simply more content.
Yeah.
And we're starting to see that really play out in these kinds of awards races.
Yeah, I'm kind of struggling for something to find. I mean, I'm basically been binge watching The Office on Peacock and British soccer. What do you guys, Julia, we'll go around the horn real quick. Julia, what do you like right now? This is your world.
Well, I have to say, I'm going to point out some of the news services on some of these streamers. Apple TV Plus got a number of nominations for Ted Lasso. That is a great feel-good show on Apple TV Plus. This is only Apple's 2nd year in the game. I didn't see any nominations for Peacock, but it'll be interesting to see how all these new players start to get more attention.
Yeah, we'll get in there. We just got to produce some shows, which is tough. I saw Steve, a show called The Flight Attendant, which I wanted to hate, but actually was just good. I was just like just sitting on the couch and staring at the screen.
It got some nominations also.
Which is what you want, The Flight Attendant. What do you think, Steve? What do you like?
I haven't seen The Flight Attendant, although my wife was obsessed with it. The Crown was the one I was happy to see. This season of The Crown was about as perfect television as you could get. It was Sopranos level good, and it's no shock that it swept up all those nominations. And it really, like Julia was saying, speaks to Netflix's ability to buy itself into these awards. It's amazing.
You know what? Thank you, Steve. I actually forgot. I've never seen one Sopranos. I've never seen Breaking Bad or Sopranos. Now I guess I got stuff to watch.
Oh no, you're missing out, Brian.
Ed Lee's not leaving New York till 2042 apparently. Don't get. All right,
come on.
Let's stick with. Now I got something to watch. You're getting on me about it. Let's stick with Netflix. The streaming.
I liked a lot.
There we go. Thank you. The streaming service is testing a new feature. Netflix launching a global test on Android devices that will allow subscribers to set a limit on their viewing period. So after 45 minutes, Ed, your binge, give us your show. So here's what Netflix is going to do. You're sitting there, it's getting late, you're binge watching whatever show you're going to name right now. and you can turn it off automatically so you don't either stay up till 4 in the morning like a ding-dong, or you wake up and realize you just fell asleep in front of the TV and it's still running.
This is a baffling feature to me because either there's so many people falling asleep to Netflix and it's like not a good thing, or is the idea that I'm supposed to fall asleep to Netflix? Is that where it is? I don't even know how long I'm supposed to watch a certain thing for necessarily, right? If you want to just cut it off at like, well, this episode and I'm done, fine. But it seems like a bizarre feature. And I think, you know, what's great and sort of weird about Netflix is that I think they try lots of different things all the time. They're testing things all the time. You know, the speed as well in terms of how things are fast things are playing. They're also testing sort of a linear type sense of it where something just auto plays and you're just sort of as soon as you log into the system. So at least that part's good. I don't get this particular feature though.
Oh,
yeah,
Ed,
you wonder,
I
we got to
totally
go.
disagree. I'm a parent.
Yeah, you got to tell.
I just have to say, as a parent of young kids, this is how you negotiate with kids and say after 30 minutes it's going to turn off.
Actually, you know what? With the kids, that I can see that not a bad play. Certainly, but
otherwise it plays forever. But by the way, you do wonder, guys. We got to go. They're yelling at me to wrap. If it's going to hurt their numbers, because you know, maybe a lot of their numbers are people just leaving the TV on as it runs, and we don't know. We're going to find out, I guess. Great stuff, Julia, Steve, Ed. Appreciate it. Rapid fire out of the way. All right, still to come. It maybe is no surprise that Republicans are criticizing President Biden's nearly $2 billion, $2 trillion. Guys, trillion with a T. COVID stimulus package as too big. We're going to dig into the numbers and break down the surprising benefits. NASDAQ up 0.6%, gaining a little momentum. We're back after this.
Underneath every surface that carries a Honda badge, there has always been the capacity to amaze. Rise to the challenge with the rugged performance of the Honda Pilot, Passport, and redesigned Ridgeline.
My body is truly powerful.
I have the power to lower my A1C.
Because my body can still make its own insulin.
And Trulicity activates my body to release it,
lowering my blood sugar from the first dose. Once weekly Trulicity responds when my body needs it 24/7. Trulicity is for type 2 diabetes. It's not insulin.
It isn't for people with type 1 diabetes. Don't take Trulicity if you're allergic to it. You or your family have medullary thyroid cancer or have multiple endocrine neoplasia syndrome type 2. Stop Trulicity and call your doctor right away if you have an allergic reaction, a lump or swelling in your neck, severe stomach pain, changes in vision, or diabetic retinopathy. Serious side effects may include pancreatitis. Taking Trulicity with sulfonylurea or insulin raises low blood sugar risk. Side effects include indigestion, fatigue, belly pain, decreased appetite, nausea, diarrhea, and vomiting, which can lead to dehydration and may worsen kidney problems.
I have it within me to lower my A1C.
Ask your doctor about Trulicity.
The Shark Vac Mop. The all-in-one disposable pad that vacuums and locks away debris other pads push around, then spray mops tough messes. Powerful vacuum suction. Then spray mopping for a complete clean, all with one disposable pad.
When we started our company, we simply wanted better sheets. But along the way, we've realized that softer, safer, organic cotton does so much more for the planet and for humanity. It helps your home become a force for good, because home is more than just an address. Home is our soul. Boll & Branch, organic sheets, bath, and home. Right now, try for 30 nights risk-free and get free shipping at bollandbranch.com.
Ah, a package. You know what this human ordered? A backache. Consider pain delivered. Pain says you can't. Advil says you can.
Life is busy, and sometimes odors can sneak up on you. For a convenient life hack, try Febreze Unstoppables Fabric Refresher. With 2 times the scent power of regular Febreze, Unstoppables fabric finds, neutralizes, and eliminates tough odors trapped in hard-to-wash fabrics, like couches or smelly sports equipment, leaving an irresistibly fresh scent. And for a tropical burst of freshness, try new Paradise Scent. Stop sneaky odors from lingering in your home with Febreze Unstoppables.
Care up the rest.
And welcome back to The Exchange. A new report out underscores some of the Republicans' concerns that Biden's $1.9 trillion COVID relief idea is simply too large and takes on too much debt. Lon Moy joining us now with a closer look at that report and who would stand to get what under the current proposal. Alon.
Well, Brian, Democrats designed the new COVID relief package to cast a wide net to make sure that nobody falls through the cracks. But the nonpartisan Penn-Wharton budget model found that means that a significant share of the benefits will go to high-income households. Now, their model estimates that more than a third of families in the 95 to 99% of income would get thousands of dollars in direct relief. The projected average is $4,265, though that only represents a 0.5% increase in their after-tax income. And still, the lowest income households would see a major boost as well. 100% of them are estimated to qualify for benefits, and their average amount would be $2,505, a whopping 50% increase in after-tax income. Now, the Penn-Wharton model also found that most of those $1,400 checks, about 73% of the amount, would go to savings rather than spending. Now, the White House just a few moments ago called this analysis way out of line with other studies, and President Biden told Democrats today that he's unwilling to break his promise on the size of those checks. Brian?
Alon Moy. Alon, thank you very much. And that wraps it up here for The Exchange. We will see you tomorrow, the same time, same channel. Power Lunch is up after this quick break. Have a great day, everybody.
Hi, I'm a new customer and I want your best new smartphone deal.
Well, I'm an existing customer and I'd like your best new smartphone deal.
Oh, do you?
Actually, it's for both new and existing customers.
I feel silly. But I do want the fastest 5G network.
Oh, I want the fastest 5G network.
Are we actually doing this again?
It's not complicated. Only AT&T gives everyone the same great deal, like the Samsung Galaxy S21 5G for free when you trade in.
I like to move it, move it. I like to move it, move it. I like to move it, move it. You like to move it. I like to move it, move it. I like to move it, move it. I like to move it, move it.
I like to move it.
Take your workout back at Planet Fitness with tons of variety in our clean and spacious clubs. And use our crowd meter to pick the best time to visit. America, your fitness is essential. Join now for no enrollment, $10 a month, no commitment. Deal ends February 11th.
At Southern New Hampshire University, we're committed to making college more accessible by making it more affordable. That's why we're keeping our tuition the same through the year 2021.
I knew SNHU was the place for me when I saw how affordable it was. I ran to my husband with my computer and I said, look, we can do this.
Take advantage of some of the lowest online tuition rates in the nation. Find your degree at snhu.edu.
Good night, buddy.
Arms, stay.
Sleep soundly tonight from the brand that more families trust for quality and timeless protection, ADT.
Hi, Mr. Wonderful here. I believe that startup investing is key to building wealth, but it's hard for everyday people to find access to these deals. Well, I've got good news. On Start Engine, you can discover hundreds of startups raising capital and begin building your portfolio today. For as little as $100, you can own a piece of the next great business. It's your turn to become a shark. Join me at startengine.com.
There were too many people borrowing money to trade. And playing with borrowed money can wreck your portfolio the same way racking up lots of credit card debt can wreck your life, whether you're a big hedge fund manager or whether you're a regular investor. Watch or listen live on the CNBC app.
All right, welcome everybody to Power Lunch. Along with Melissa Lee, I'm Tyler Matheson, and here is your 2 o'clock takeout. Amazon turning the page as Andy Jassy takes over as CEO just as the tech giant faces some of its biggest challenges. Is he up to the task? We'll explore that. Plus, the resilient Robinhood, the company raising capital, adding a record number of users, and spending big on the Super Bowl. even as its entire business model is in question right now. Can it last? We'll explore that one for you. And later, Scott's Miracle-Gro, winning big during the pandemic, the stock doubling over the past year. What is behind the growing gains at Scott's Miracle-Gro? The CEO will be here as Power Lunch starts right now.
And welcome to Power Lunch. I'm Melissa Lee. Stocks continue to climb back today, wiping out last week's losses. And now the S&P 500 is within 1% of its all-time high. 38.44 is the level there. This is as some of the Reddit-fueled stocks like GameStop and AMC are having a relatively less volatile day, if you can call up 23% and 18% less volatile. They are both higher today. Plus, earnings season rolls on. Today's big winner is Alphabet, the tech giant, beating on earnings. And, of course, as Tyler mentioned, Amazon turning higher after posting a solid quarter and announcing a changing of the guard. Ty.
All righty, Melissa. After 27 years, Jeff Bezos will move on to the executive chairman role at the company, passing the torch to Andy Jassy, a name not many people outside of Amazon know. He ran the company's cloud business, very thriving part of Amazon. For more, let's bring in Deirdre Bosa. Deirdre.
Well, Tyler, this is really prime timing for Bezos. He goes out on top while the company is firing on all cylinders, as we saw in yesterday's report. And he gets to avoid some of the more uncomfortable stuff, which will fall now to Andy Jassy, namely rising antitrust scrutiny and labor issues. On Monday, the unionization voting process will actually get underway for Amazon Alabama warehouse workers. An eventual union victory could provide a roadmap for other fulfillment centers across the country, potentially hurting Amazon's logistics efficiency. Now, on the regulatory front, Amazon may be the next target, and it will be Jassy who will now have to testify to lawmakers. Now, much of that scrutiny is focused on Amazon's relationship with third-party sellers, a critical but more complicated relationship that Jassy, again, will have to now delicately manage. But while Jassy will be the face of the company, keep in mind Bezos is not going far. As executive chair, he's going to be involved in the big so-called one-way door decisions. Those are ones that are not easily reversed. And he is, of course, Tyler, the biggest single shareholder. So Jassy takes over at this, bright time, but also critical one when the company's facing a lot of challenges. And as you mentioned, we don't exactly know his track record there, though we do know he has a very good track record at the company and certainly in cloud.
Yeah. Deirdre, stick around, and we'll talk a little bit more about Jassy now becoming the lightning rod. Of course, Mr. Bezos was a lightning rod of sorts for the former president as they sparred over such things as his coverage in the Washington Post. For more on Amazon's next chapter, let's be joined by Mike Isaac. He's a technology reporter with the New York Times. Mike, welcome, and Deirdre is still here as well. You know, there is that saying, it's better to be lucky than good, but best of all is to be lucky and good, which it appears Mike Isaac was. Mr. Jassy was at Cloud. And maybe Mike Isaac has been lucky and good, too.
You're right. No, I think A, I'll take that any day. But B, I think Jassy comes in with a lot of confidence just because you're exactly right. He was lucky and good. He stumbled into, he definitely had the foresight to see that cloud and AWS, Amazon Web Services, was going to be the future of building parts of the internet. Last year alone, it had $45 billion in revenue, at least, go through it. It was basically an accidental business, but it's how app developers around the world sort of build their own infrastructure, spin it up, and use it, rent their own infrastructure without having to build it. So I think Bezos can look at someone like Jassy, who's been a long time sort of trusted deputy, and know that the business is going to hum, without Bezos having to be there to make every single small decision. But like Deirdre said, he can still come back and make the giant, one-way door decisions, whatever those might be.
I'm going to come back to the lucky and good Mike Isaac in just a minute. But Deirdre, the track record of new CEOs who replace founders, iconic figures in companies, has been mixed. From Steve Ballmer on the one hand to Tim Cook on the other. Where does Mr. Jassy seem to fit on that spectrum to the extent one can speculate?
It is certainly early, so we don't yet know, but definitely if you asked, took a poll of Wall Street and you just look at simply the stock reaction, Jassy is seen as the cook to Bezos's Jobs. He is seen as someone extremely capable. He's been there for more than 20 years. He's not a co-founder, but he's the closest thing to it. As Mike was talking about, he really grew the cloud business, which has become the profit engine of Amazon. And guys, I'm not sure I'd argue that luck is any part of this. I think that Jeff Bezos is extremely calculated. I was looking back to an interview he did, I think more than 6 years ago, and he was asked about a succession plan, and he said in no uncertain terms, yes, there's someone, yes, we have a plan. So I think this has been a long time in the making. There was some speculation as to who it might be, Andy Jassy or Jeff Wilke. Jeff Wilke is set to leave this year, so clearly it's Jassy. But I think that inside Amazon, at least for Bezos and for the S team, this was extremely well telegraphed.
And of course, every founder, when they do leave, wants to leave the company he or she founded at a very good time. And perhaps this is one of the best times, despite the challenges for Amazon from a financial perspective, Mike. But I find it very curious that the market really has taken this in stride in terms of the stock reaction. I realize you're not a stock analyst, but either the market is complacent for a good reason, and they're taking a look at, Cook taking over for Jobs, or not. This is not a founder case, but Nadella taking over and transforming Microsoft into what it is today. And they're complacent for very good reason, or they're complacent and they're just overlooking the potential. This guy ran cloud. He grew it from a small business, but Amazon is so much more than that now.
Well, I think it's totally fair. I think a few things. One, Amazon after the pandemic is really, their whole business. I mean, profits I think doubled last year or last quarter at least. Bezos came back in to sort of get a handle on it as customers and orders were skyrocketing, and I think he sees it. And the other part about this is like founder DNA. How a company runs over a certain period of time. I think every company really has the DNA of their founder in it. Jeff being there for 27 years has really built the type of system and the type of processes internally that have stuck with Amazon. And I think people in tech really know what kind of company Amazon is. So if you hand those reins off to someone who can basically handle most of the day-to-day decisions, perhaps the stock market isn't, perhaps traders aren't super worried about it.
Yeah. So, Mike, let me finish with this. Deirdre laid out some of the challenges that Mike Isaac will face. If you were to look at the 1, 2, 3 top items on his agenda, what are they? And with respect particularly to regulatory moves, is he ready to handle that? Because that's going to be a big issue for him and the company in the future.
Yeah, it's totally fair. I think they're still waiting to see what the incoming administration is going to look like. There were some questions around who Biden's cabinet appointees were going to be. Are they going to be friendly to tech or not? There was a question, I don't remember her name, but there was one potential appointee who was, I think, a tech lobbyist at one point. So I think all the tech companies, including probably Amazon and Jassy right now, are really just sort of waiting to see what that will look like. As far as the future, I think continue growing the cloud business, continue sort of pushing on a lot of their services, music, and then just continue to see how logistics is going to play out and how they grow the already burgeoning Prime business, which has about 150 million subscribers.
Yeah. Well, the lucky and good Mike Isaac and the exceptionally, extraordinarily excellent Deirdre Boza, thank you. We appreciate it. Melissa.
Tyler, Amazon, just the latest tech giant to hand the reins to a new CEO following many years of leadership from the company's founder. Bill Gates left Microsoft, Steve Jobs left Apple twice. Mike Santoli is taking a look at how those companies did. Mike.
Yeah, both before and after, Melissa. Obviously worth asking what this situation might rhyme with. If you want to look at Microsoft, this is a look at Microsoft shares from the 10 years before Bill Gates initially stepped down as CEO. very similar in the sense that it was also 25 years roughly after Microsoft was founded. That's about what Amazon was founded right here. And, of course, dealing with some regulatory issues. And that was right about in there, January of 2000, of course, right near the very end of the massive tech bull market. Microsoft at the time was very dominant, also had the highest valuation it had ever had, around 60 times earnings. That's pretty much what Amazon has now. However, Amazon's valuation has come down, and the overall market, of course, for tech really did collapse right there. Take a look at Apple. This would be the second time Steve Jobs stepped down, when he was ill in 2011. And so that was actually right around here. A lot of people really did think the stock would take a bigger hit. It actually was in a great smartphone cycle, but it flattened out for a while in the years after that. Obviously, nobody was quite sure if they could continue to iterate on the iPhone side, but just massive gains since then, as we all know. So you'd have to say successful. Also looked at Oracle. Larry Ellison, also executive chairman. Similar thing. Give up the CEO role as a founder, but stay around, stay involved. That was in 2014. It's obviously not as steep a trajectory in either side, but clearly they had their day back in the tech bubble as well. And it's been kind of grinding gains since then, but no longer really dominant or at the center of tech as it was at one time, guys.
You know, Mike, you're mentioning which situation rhymes with what Amazon is facing right now. It doesn't feel like, in terms of the business environment for the particular companies, that any of these situations really line up with where Amazon is.
Not perfectly, no. Yeah. Although I do think we have to kind of dial back in our minds to how Microsoft was viewed in '99 and 2000, as if they could do no wrong, as if, you know, the world of PCs, which they had a lock on, was going to be forever. Of course, there was an order that came down from a judge that said the company should be broken up 6 months later. So, you know, and clearly valuations got compressed. But you're right. In terms of the presence in our everyday lives, in terms of the number of businesses that Amazon is now dominating and are growing very fast, it's probably difficult to find an exact comp.
All right. Mike, thanks. Mike Santoli. Tyler?
Already coming up, we will have more on the markets with stocks inching back toward record high territory. Energy, the big winner today, up more than 3%, plus Reddit-fueled stocks like GameStop and AMC, both up double digits. Is the Reddit risk really gone from this market? More Power Lunch after this quick break.
So Schwab taught me about four-legged option strategies. I'm going to go with an iron butterfly spread on that fintech stock.
Nice. I just tried an iron condor.
Oh. Only spread I've been introduced to is this onion chive.
It's time to trade up to Schwab, the firm invested in helping you become a better trader. Get commission-free online stock, ETF, and options trades. Expect more from your firm. Schwab, the better place for traders.
You need the right pieces in your portfolio to preserve capital, diversify to mitigate risk, provide liquidity, while delivering returns. Gold, your strategic advantage.
As you reflect on the changes of the past year and prepare for new challenges ahead, CNBC and Acorns can help you focus on a new game plan for your money. Get the tools you need to earn, save, lower debt, invest, and manage your financial future. Strengthen your decisions with expert advice and personal perspective. CNBC and Acorns help put the resources you need within reach. Take charge of your financial wellness at cnbc.com.
Step up, prep up to help keep you free from the risk of HIV.
Descovy for PrEP, a once-daily prescription medicine that helps lower the chances of getting HIV through sex. It's not for everyone. Descovy for PrEP has not been studied in people assigned female at birth. Talk to your doctor to find out if it's right for you.
Descovy is another way to PrEP. Descovy does not prevent other sexually transmitted infections, so it's important to use safer sex practices and get tested regularly. You must be HIV negative to take Descovy for PrEP, so you need to get tested for HIV immediately before and at least every 3 months while taking it. If you think you were exposed to HIV or have flu-like symptoms, tell your doctor right away. They may check to confirm you are still HIV negative. Serious side effects can occur, including kidney problems and kidney failure. Rare life-threatening side effects include a buildup of lactic acid and liver problems. The most common side effect was diarrhea. Tell your doctor about all the medicines and supplements you take, or if you have kidney or liver problems, including hepatitis. If you have hepatitis B, do not stop taking Descovy without talking to your doctor. Ask your doctor about your risk of HIV and if Descovy for PrEP is right for you.
Get help paying for Descovy for PrEP. Learn more at stepupprepup.com.
How language is learned.
All All right, welcome back, everybody. Stocks are inching back toward record highs as we are nearly halfway through this earnings season. So let's get over to Bob Pisani for more on the markets. Hey, Bob.
Hello, old friend. Good to see you. Look, Tyler, we're about 10 points away on the S&P from historic highs. So remember the old one was 38.55. I think that was the closing high. That was January 25th. 38.43, 44. You see, we're only 10 points away. We're just inching up, erasing a lot of those concerns about GameStop and Robinhood that we had 3, 4, 5 days ago here. Energy did well today. Banks are doing well. Tech's mixed. Alphabet's doing well. Microsoft's doing well. Semi's a little bit weaker. Heavily shorted stocks, okay, well, they're up today, but the volatility and the volume is not the same. There's definitely lower levels of concern at this point. So just take a look at what's moving the markets. I think there's 4 main points here. Number one, there is a belief that there's a little less systemic risk and concern about the Robinhood GameStop story than there was 3, 4, 5 days ago. We're back to the stimulus. That's the big story. Go big on reconciliation. I hear this from the trading desk. They think it's going to be closer to 1.9 trillion than 1 trillion at this point. That's the big motivator. The vaccine rollout is accelerating, and the earnings, well, we've got positive surprising continuing, and this is the key story here. For the fourth quarter, it's like the third quarter. They're beating by very wide margins, almost 20%. That's exactly what happened in the third quarter. These are the kinds of positive surprises. Put up those fourth quarter earnings here because we're almost halfway through the whole earnings situation for the fourth quarter, and you can see those numbers are really strong. The good thing here, Tyler and Melissa, is that first quarter estimates are rising rapidly now, and the second quarter numbers are slowly going up as well. That is exactly the kind of positive revisions we have to have. The market needs to believe that analysts are continuing to be too conservative for the actual real situation, and that's what's going to lead us to higher numbers. Remember, the market's very, very pricey right now. Earnings have got to come up here to meet those kinds of expectations. Guys, back to you.
All right, Bob. Thank you, Bob Pisani. So with stocks near record highs, are earnings justifying this market rally? Joining us now, Matt Forrester, Lockwood Advisors Chief Investment Officer, and Stephen DeNicola, Federated Hermes Vice President and Portfolio Manager. Gentlemen, good to see you. Matt, I will start with you first. A lot of people thought earnings season would be sort of a comeuppance for a market if they believe that the market was overvalued, and so far that's not the case. So what's your take on where we are now?
Yeah, not at all. Well, we just heard some news from Bob about that, but think about it. We started at the end of the year, we thought we were going to see something around a 9% decline in year-over-year earnings for the S&P 500 components. And now we're closing in on 2%, and we've still got more than half to go. So it's possible that we get to a flat year-over-year earnings picture for the S&P 500, and I think that's quite a bit stronger than anyone was looking for. And that beat rate is also quite a bit stronger. We do this practically every quarter. The earnings numbers are gamed, and we then beat them by a bit. So you expect the earnings beat rate to be in that 70% range, but this is even stronger than that. So it paints a healthy picture for corporate earnings, and the outlook looks even better as we look at the analyst forecasts in the out quarters.
Yeah, Stephen, where do you fall on the overall markets? You know, you can argue that if companies are giving guidance when they really have got a free pass to not give guidance or be conservative, that's a pretty good sign.
Look, I think these markets can be best summed up by a quote from an old Popeye cartoon when I was a kid, where the character Wimpy would say, "I'd gladly pay a Tuesday for a hamburger today," meaning we are bringing forward and discounting a lot of positivity and EPS growth that we haven't actually seen yet. So look, the markets are at all-time highs, but let's just take a step back, and to my earlier commentator, the run rate earnings for the S&P 500 in 18 and 19 was about 150 a share. So no growth from 18 to 19. Obviously, that number dipped big time in 2020, and maybe we'll wind up flat for the fourth quarter. But if you look at Wall Street consensus for 2021, so what we hope will happen, you're at about $165 a share. So about 10% higher profitability than pre-pandemic levels. And that's with very strong EPS contribution from Apple, Microsoft, Google. That's markets are up over 50% since the beginning of 2019 with the hope of a 10% increase in an earnings run rate pandemic.
I get the analogy completely, but doesn't the market always operate on that wimpy model, that it's always taking the hamburger today and paying tomorrow. And it's only a problem if you don't believe that Wimpy has the money. In other words, it's only a problem if you don't think that corporations are actually going to have that growth. When you factor in a vaccine, when you factor in a reopening, and you factor in pent-up demand from consumers who were not able to travel, who were not able to do X, Y, and Z because of the pandemic, couldn't you see a scenario in which we get that 10% growth?
Absolutely. Look, it's not that we have the 10% growth, it's we've moved 50% on that 10% growth. And so we have a multiple expansion without the earnings rate following it. So the market is more expensive. But just one point, Melissa, is that historically, we are at correlations in the market that are higher than ever before. And usually that portends a nice market rally to follow. So in the near term, I see maybe a move of 5 to 10%. In addition, the put implied volatility on the S&P 500, which essentially means negative option bets on the market, is still in the upper bands of historic levels. So in the near term, there is a real wall of worry still to climb, but we're going to have to pay for those hamburgers at some point.
We always do. Matt, I want to get to you because you actually see that there could be a 10% pullback at any moment.
Oh, sure. At these valuation levels, we can have a pullback at any time. So it's hard for a bull market to start from 22 times forward earnings with the kind of technical extension that we have today. 90+% of many sectors of the S&P 500 of those companies inside of the sectors are above their 200-day moving averages. The S&P 600 is 30% above its 200-day moving average, and the dispersion inside of the index that we saw in January was the biggest thing we've ever seen, if you ask S&P. So there's clearly a lot of volatility. I think volatility is still going to be with us, and it's because many indicators of valuation and sentiment are, pushing their historical extremes.
All right, Matt Forrester, Stephen DeNicolo, we appreciate your time. Thank you.
Thank you.
Tyler.
All righty, still ahead, Robinhood digging itself out from the chaos of last week with the help of about $3 billion, but are they really out of the woods yet? Plus, Scott's miracle growth beating earnings. The stock up 50% in the past 3 months. What are people spending money on? Well, they're spending money on their lawns, their yards, their plants. The CEO will be here to talk about it. More Power Lunch is next.
Ever better. It's when disruption hits your supply chain. And Ryder makes you ever ready with our logistics solutions that put goods closer to you and the people who use them. Ever flexible. With our e-commerce fulfillment network, you can reach your customers directly. Ever innovating, so you can manufacture new products and speed them to market with our transportation services. Ever seeing, with real-time visibility into the movement of all your goods from inbound to final delivery. Ever moving, because your supply chain requires resilience, and your world never stops. At Ryder, ever better is not a tagline. It's our standard. Discover how Ryder Supply Chain Solutions can make you ever better.
Blunders, they're how we learn. But investment blunders are a costly lesson that can hurt your retirement. Decisions like trying to time the market, placing big bets on a single stock, or letting politics and elections influence your investments. Fisher Investments has gathered the 13 worst blunders and how to avoid them in this eye-opening free guide.
Why take a chance? Let Fisher Investments send you our free guide, 13 retirement investment blunders to avoid, like running short of money in retirement, or working with a money manager who's not a fiduciary. Call now, 1-800-208-4466.
Fisher Investments has helped thousands avoid costly blunders and achieve a comfortable retirement. If you have $500,000 or more to invest, call now.
Call Fisher Investments now for your free guide, 1-800-208-4466.
Don't just retire. Retire well.
Total market coverage in your hands. Now on the CNBC app. Up-to-the-minute updates, breaking news alerts, everything you want to know when you need it. Stay connected, stay informed with the CNBC app.
The Reddit revolution put Robinhood into a difficult situation, forced to raise cash and limit trades during the market volatility. Now the company's CEO is pitching a potential solution. Let's bring in Kate Rooney for more. Kate.
Hey, Melissa, Robinhood is shifting some of the blame here to Wall Street's back-end trading systems. CEO Vlad Tenev said in a blog post that he called out what's known as T+2. That's essentially the 2-day period it takes for someone to make a trade and for the clearinghouse to confirm that on the other end. Tenev said that investors were angry and concerned, which was an unintended byproduct of what he calls the antiquated settlement process. He says the system is, quote, ripe for change. Part of why Robinhood had to stop allowing customers to buy names like GameStop last week were those higher requirements for deposits. That went up tenfold, according to Robinhood, with a total $3 billion needed as collateral on Thursday morning. What Robinhood is arguing would be for real-time settlement. Sources I'm talking to say it's not entirely clear who would be responsible for changing this. One fix could be for the SEC to let customer deposits count towards those requirements. Robinhood was able to raise a few $1 billion pretty quickly. VC backers tell me there was plenty of demand and that the convertible debt round was also oversubscribed. Those investors are mostly betting on Robinhood's user growth. One tells me that new accounts far outweighed any attrition that they saw last week. And on top of all of this, Robinhood is launching its biggest ad campaign yet, a Super Bowl commercial. That's meant to bring in new customers. Some, though, have argued that keeping up with that rapid customer growth has been part of the issue for Robinhood. Melissa, back to you.
It's just interesting, Kate, though, because while they're seeking new customers with an ad like the Super Bowl, which reaches so many millions of households on that single day and that single moment in time, you know, as it increases customers and as it lifts restrictions on trading, as it offers fractional trading for some of these so-called meme stocks, GameStop, as well as AMC, at any moment, the clearinghouses could require additional capital. I mean, they're almost exacerbating that situation of the need for a potential overnight capital raise once again.
Right, right. And that is, the user growth has been part of the issue here. And a lot of their users, the demographic tends to be younger. They tend to be the type of traders that might be on Reddit. They might be bidding up some of these stocks. So it is a big question here. Can they handle bringing in all of these new customers? And that has been part of the issue. The VC investors have looked at that customer growth and said, that is the type of growth that a social media platform might see. And it's the most popular fintech app, an app overall. You saw it #1 in the App Store. They said that was really the silver lining in all this, that despite the chaos of last week, this is still an immensely popular app and program. For that reason, they said that they were ready to double down and spend as much money as possible to get more exposure to Robinhood. And also, the convertible debt deal gives them about a 30% discount to the market price when this company goes public. So it also seems like those VC investors are betting that this is a more near-term IPO than we might have thought even last week.
All right, Kate, thank you. Kate Rooney. Tyler.
Thank you, Melissa. And ahead on Power Lunch, not your garden variety stock, Scott's Miracle-Gro, beating on earnings, soaring nearly 100% over the past year. Why the pandemic might have helped create more green-thumbed consumers. Plus, Ackman's house, why the hedge fund giant is betting on housing in warmer, low-tax cities. All this when Power Lunch returns.
I made a business out of my passion. I mean, who doesn't love obsessing over network security?
All our techs are pros. They know exactly which parking lots have the strongest signal.
I just don't have the bandwidth for more business. Seriously, I don't have the bandwidth.
Glitchy video calls with regional offices? Yeah, that's my thing.
With AT&T Business, you do the things you love. Our people and network will help do the things you don't. Let's take care of business. AT&T.
We made USAA insurance for members like Martin, an Air Force veteran made of doing what's right, not what's easy. So when a hailstorm hit, USAA reached out before he could even inspect the damage.
That's how you do it right.
USAA insurance is made just the way Martin's family needs it. With hassle-free claims, he got paid before his neighbor even got started. Because doing right by our members, that's what's right. USAA. What you're made of, we're made for.
Labradoodles, cronuts, skorts.
It's a skirt and shorts.
The world loves a hybrid. So do businesses. So today, they're going hybrid with IBM. A hybrid cloud approach lets them use Watson AI to modernize without rebuilding and bring all their partners and customers together in one place. That's why businesses from retail to banking are going with a smarter hybrid cloud, using the tools, platforms, and expertise of IBM.
Travel and tourism, vaccine optimism,
That vaccine will be a game changer.
building a corporate conscience on the path forward.
ESG, environmental, social, and governance.
Stay connected, stay informed, watch or listen.
It's not just because Boll & Branch organic cotton sheets are incredibly soft. They are. And it's not just that they're free from toxins and made by people who are paid and treated fairly. That's true too. It's because home is where the magic happens. And with better sheets made in safer ways, home makes the world a better place. Boll & Branch. Right now, try for 30 nights risk-free and get free shipping at bollandbranch.com.
At Chime, we're making banking better for everyone because financial peace of mind should be for people of all kinds. Like people working from home, on the road, up in trees. With Chime, you'll find no hidden fees. Happy or surly, with direct deposit, get paid up to 2 days early. Pour lattes or crafts, we'll spot you instead of charging overdrafts. Chime helps people who help, who hoop, MCs of the roots, like me. Cooks who flip flapjacks, whatever your zodiac, Chime's got your back. Tell your barber, your neighbor, your firstborn son. Chime's making banking better for everyone.
Nicorette knows quitting smoking is freaking hard. You get advice like, try hypnosis. Or quit cold turkey. Kidding me? Instead, start small with Nicorette, which can lead to something big. Start stopping with Nicorette.
If you have obstructive sleep apnea and you're often tired during the day, you could be missing out on amazing things. Sunosi can help you stay awake for them. Once daily Sunosi improves wakefulness in adults with excessive daytime sleepiness due to obstructive sleep apnea. Sunosi worked for up to 9 hours at 12 weeks in a clinical study. Sunosi does not treat the cause of OSA or take the place of your CPAP. Continue to use any treatments or devices as prescribed by your doctor. Don't take Sunosi if you've taken an MAOI in the last 14 days. Sunosi may increase blood pressure and heart rate, which can increase your risk of heart attack, stroke, heart failure, or death. Tell your doctor if you have a heart condition or high blood pressure. Sunosi can cause symptoms such as anxiety, problems sleeping, irritability, and agitation. Other common side effects include headache, nausea, and decreased appetite. Tell your doctor if you develop any of these, as your dose may need to be adjusted or stopped. Amazing things happen during the day. Sunosi can help you stay awake for whatever amazes you. Visit Sunosi.com and talk to your doctor about Sunosi today.
Wow. That's a low price.
Oh, wow. That's a low price. What?
Ooh, that's a low price.
You're so good at low prices.
Yeah.
That's a low price.
Damn, you're off mute, buddy.
No, low price.
Dog life.
Low price.
That's a low price. I'm kind of kidding.
With everyday low prices at Amazon, anytime is a good time to save.
Meet Tonal.
the smartest home gym that learns as you get stronger with personalized expert coaching and revolutionary digital weight, so you can be your strongest. Visit tonal.com.
Over the last, this year so far. All right, the markets are moving higher today. Energy leading the way thanks to a jump in oil. Communication services led higher by Google. And then we have financials, which have been soaring only slightly higher today. Can you still get in? The state of the housing market depends on the state you're in. How one hedge fund billionaire is playing the housing shift. We've got all that and more coming up on Power Lunch.
The Bond Report is brought to you by PIMCO, a global leader in active fixed income.
And now a mini meditation. Inhale serenity. Exhale whatever's happening here. Now bring your focus back to your customer, Tom. Salesforce Customer 360 helps you focus with a single view of your customer. Like Tom.
Who's Tom?
At Southern New Hampshire University, we're committed to making college more accessible by making it more affordable. That's why we're keeping our tuition the same through the year 2021.
I knew SNHU was the place for me when I saw how affordable it was. I ran to my husband with my computer and I said, look, we can do this.
Take advantage of some of the lowest online tuition rates in the nation. Find your degree at snhu.edu.
Municipal bonds don't usually get the media coverage the stock market does. In fact, most people don't find them all that exciting. But if you're looking for the potential for consistent income that's federally tax-free, now is an excellent time to consider municipal bonds from Henyon & Walsh. If you have at least $10,000 to invest, call and talk with one of our bond specialists at 1-800-376-4376. We'll send you our exclusive bond guide, free, with details about how bonds can be an important part of your portfolio. Henyon & Walsh has specialized in fixed income and growth solutions for 30 years and offers high-quality municipal bonds from across the country. They provide the potential for regular income, are federally tax-free, and have historically low risk. Call today to request your free bond guide. 1-800-376-4376. That's 1-800-376-4376.
I started investing when I was quite young, about 10 years old.
I have not started investing yet.
Indeed, yes, I have invested.
It's something that I'm brand new to. I find it difficult because I don't have the knowledge, you know. I think an app would help.
If I had more education, knowledge, and information.
I invest to set up for my future.
If there's any app that would make my life much easier, please send it my way.
To make my life easier, at least. That would be amazing.
Opening the book on 2020 payrolls. Could increasing vaccinations be a shot in the arm for employment and open more doors to build back the economy? January employment numbers, Friday, 8:30 a.m. Eastern. Watch Squawk Box anytime on demand.
Welcome back to Power Lunch. I'm Seema Modi. Now may be the time to start paying closer attention to Treasury yields, moving even further beyond 1% today as stimulus talks heat up in Washington. That has also helped banks outperform. The KBE Bank ETF is up nearly 4% this week and over 43% in the past 6 months versus the just 17% for the S&P 500. So how should you play the financials? Mark Newton of Newton Advisors, Chad Morganlander of Washington Crossing Advisors. It's a Trading Nation team today. Mark, first, can you just characterize the correlation between financials and bond yields?
Yeah, we have seen a very strong correlation between financials and what's happening with Treasuries. So, you know, you continue to see that. With Treasuries obviously peaked out in August, you saw yields start to go straight higher, and then ever since November, the XLF really caught on, picked up a lot of speed, and has done very, very well. So over the last year, we haven't done as well, but literally over the last month. So look at a couple different charts to put this into perspective. The XLF, you see just in the last week, as bond yields have started to tick higher again and break out, we've seen XLF catch up right away. And we saw XLF move up above 29.5. That is a very good short-term move. Banks are still doing very well. A lot of good technical price action out of JPM and Bank of America. On a weekly basis, I think a lot of it depends on whether this reopening and the economic rebound can continue. You see relative charts of just the RYF and how that acts versus just the broader S&P. Both of these are in equal weighted terms. And so I like to do that to really strip out a lot of the larger names. But this is right up against pretty good resistance. XLF also moving up towards the levels we saw back in February of 2020 last year. Right. So to really think that this group has a lot of legs ahead of it and can really run, we do need to see breakouts in this group on a relative basis and see XLF get up above its prior peak. And that might be a tall task. So for now, I do like the group short term, but intermediate term, it's got to prove itself.
All right, a lot there to digest. Chad, would you be putting more money to work in financials? I mean, the Federal Reserve is now allowing this group to resume share buybacks.
So we are overweight financials as well. We represent that in our portfolio using XLF. We think that net interest margins will continue to improve as the curve continues to steepen. As the U.S. economy continues to improve post-COVID, you also have some tailwinds. You're going to have an improvement in credit growth on the private side, as well as more additional capital spending. Secondarily, your loan loss provisions will start to go lower because of this improving economic backdrop. And thirdly, buybacks as well as dividend growth could be quite robust in the next several years. The valuations make sense. We would continue to overweight the sector.
Financials higher by 0.5% today. Mark and Chad, thank you. And oil prices higher and are impacting the airline trade. That's what we discussed on tradingnation.cnbc.com. Check it out. Melissa, back to you.
Seema, thank you. Now to a big earnings mover that is growing profits. Shares of Scott's Miracle-Gro jumping after the company reported better than expected results on the top and the bottom lines. U.S. consumer sales surged 147%, marking the first ever profit for Scott's in its first quarter. Here for a Power Lunch exclusive is Jim Hagedorn, Chairman and CEO of Scott's Miracle-Gro. Jim, great to have you with us.
Hi, guys.
Certainly got a lot of questions, particularly, that's a shot of the screen. We're going to have Jim via Zoom or Skype or whatnot, but he's on the phone. Nonetheless, Jim, I'm going to get to the massive growth that you've seen for the first time in the first quarter, which I would imagine is a seasonally weak quarter simply because of the weather. But in terms of the enormous beat, you kept your full-year EPS outlook in line with what you had given before. Why is that? Why not raise it accordingly?
We were close to raising it. We did raise our revenue guidance for Hawthorne, which is our cannabis-related business. And the consumer business, we were super close to it, but it just is, in this quarter, this early, we'll get around to that next quarter. We put a pretty safe guidance out there at sort of the end of last year just because nobody knows what's really going to happen in COVID. So we're getting close to raising our guidance on the earnings side as well.
Okay, I do want to talk about Hawthorne, which saw 71% growth. That's sort of the indoor, urban, hydroponic gardening methods, and you mentioned that's the cannabis business. How do you think about that market? How do you think about growth in that market? Do you track, for instance, states that are legalizing? What's your primary metric?
I'd say top-line growth. It's that business, I think, has had now 6 quarters of 60+% growth. So the business is just really catching fire. We're innovating. A lot of that growth is happening in areas where we're putting a lot of technology, for instance, LED lighting for indoor grows.
But in terms of how you forecast the growth in that business, what are some of the things that you take a look at? Do you take a look at sort of the legalization sweep across the country, the pandemic maybe keeping people indoors and looking to grow their own supply, medical use? What is it?
It's all of the above. It's catching fire. And we know one thing, COVID has caused people to smoke more pot. That's for sure. In addition, if you look at like New Jersey legalizing this last election cycle for recreational, I think New York, Cuomo, I think everybody's in favor of it in New York. But if you see Pennsylvania, New Jersey, New York go, that's as big as the state of California. California is nearly half our business. So the East Coast is just really happening, and it's great to see. In California, Michigan is doing great. Oklahoma is doing great. A lot of election cycle news in like Arizona, Mississippi. So even conservative states, people are legalizing it.
Jim, if I could turn from weed to a place where you don't want weeds, and that would be my front lawn. I'm a big user of your products. You, I think, are the brand for the home gardener and the person who likes to take care of their own lawn. Does that brand power translate for you into pricing power? For example, how much are your prices up over, say, the last 5 years, or are they not?
They're definitely up. You know, if we could get 100 basis points a year, that would be good. We have already had discussions with many of our retailers for pricing for next year. But definitely the brands really matter. Last year, when nobody knew what was happening with COVID, we were pretty much alone promoting the entire category, and the retailers were really off air. Retailers got a lot of pricing because they didn't do a lot of these Black Friday events last year, and I think there's going to be a much more sort of interesting mix of promotion, social media, et cetera, in both by us and the big retailers this year.
You got a Super Bowl ad for the first time, Jim. So who are you trying to reach? The pot growers or the people with the lawns?
No, this is Consumer Lawn and Garden. But, you know, we've got about 20 million new customers in COVID time last year, and the goal is to keep them and grow the market. We think we can do that, and the Super Bowl is a part of the kind of reach we want to reach out to people who were in, convince them to stay in. You know, our polling shows like 85% of people who participated in Lawn and Garden last year intend to do it again, and a big group of that intend to do it even bigger. We had probably $200 million in the consumer business we couldn't ship last year because, you know, demand was so great. So we're really comfortable we can grow the business this year.
Jim, great to speak with you. Thank you. Jim Hagedorn, Scott's Miracle Pro. Tyler.
Already coming up, two things we talk a lot about on this network: changes in the housing market caused by the pandemic, and Bill Ackman. Today, they're part of the same story. We'll explain next.
And now, the latest from tradingnation.cnbc.com and a word from our sponsor.
Some people refer to the VIX as the market's fear gauge, but I like to refer to the VIX as a gauge of uncertainty. Because while an elevated VIX may imply that the market's headed for big moves, those moves could either be to the downside or to the upside. I'm Randy Frederick, and Schwab is the better place for traders.
Okay. Bounced a trade idea off my firm. Same old lines. I mean, show me some technical indicators, proprietary research, something.
That's why I like Schwab. They help look out for your blind spots.
Come on, Johnny, you got this, buddy. Speaking of blind spots.
It's time to trade up. Schwab helps you see the full picture with powerful intel and trading specialists who get it. Plus, get commission-free online stock, ETF, and options trades. Schwab, the better place for traders.
You need the right pieces in your portfolio to preserve capital, diversify to mitigate risk, provide liquidity, while delivering returns. Gold, your strategic advantage.
You know what's making Sarah's migraine worse?
Okay, let's table that.
But you know what gives her some relief? Using ZocDoc to book a video visit.
You'll get the prescription this afternoon. Does that work?
Yes! Oh! ZocDoc makes healthcare easy.
A brand new car loses roughly 50% of its value in the first 3 years. A used car from Shift doesn't. Second grade level arithmetic. Still valuable.
Shift.com. Used cars never felt so new.
I will pay you $10 to go put on more clothes.
But it's the first time you ever heard that one.
Everybody follow the birthday flag. What'd you call me? Oh, yes.
Underneath every surface that carries a haunted badge, there has always been the capacity to amaze. Rise to the challenge with the rugged performance of the Honda Pilot, Passport, and redesigned Ridgeline.
We're taking trucks to places they've never been before by doing what's never been done before. Being named Motor Trend's Truck of the Year, not once, not twice, but 3 years in a row.
This is Chime, a mobile bank account and debit card. With Chime, there are no hidden fees, so I never have to worry about overdraft or monthly fees. Chime also helps me grow my savings automatically. My purchases are rounded up and added to my Chime savings account, helping me to save without even thinking about it. And I can even get my paycheck up to 2 days early with direct deposit. It's banking the way it should be.
Start banking with Chime today at chime.com.
And stop overpaying for car insurance.
Well, Bill Ackman's Pershing Square Capital Management doubling down on Howard Hughes, increasing its stake to nearly 25% of the real estate development company. The stock up over 12% this year alone, as the company tries to cash in on what it hopes will be a continued exodus to lower tax, warmer weather states like Texas, Nevada. Howard Hughes is not a new position for Ackman. Here he is in 2017 at the Sohn Investment Conference.
And we retained our stake in Howard Hughes. And we've never sold a share. We never talked publicly about the company. So the question is, why are we talking about it now? The answer is, I think this is one of the most attractive times in the history of the company to invest.
All right, Diana Olick takes a look now at the real estate side of this deal. But let's start with Leslie Picker, who has more on the details of Ackman's trade and stake in the company. Leslie.
Hey, Tyler, that's right. This is a company that Ackman has been involved with for over a decade. His Pershing Square is the biggest holder, and Ackman serves as Howard Hughes' chairman. The company announcing this morning a bigger footprint in areas that have benefited from the pandemic, induced migration with the developments in Las Vegas, Texas, suburban Maryland, and even Honolulu, 2 million square feet in all. But during the first half of 2020, Howard Hughes was actually Pershing Square's biggest detractor of performance, as the pandemic caused rent collections to decline and lot sales were thwarted. Pershing Square committed $500 million to stabilize the company's balance sheet, Melissa.
So Ackman is betting on Las Vegas, several cities in Texas. What do they all have in common? Let's bring Diana Olick for more on the housing market. Diana.
Yeah, Melissa, what they have in common is that they're all desperate for more supply, which is causing prices to heat up. So, of course, it makes sense. Las Vegas was hard hit in the foreclosure crisis, but the median home price there, it just hit a record high. Listings down nearly 42%. Texas has been a favorite for relocating techies from California. Austin was just ranked the hottest market in America by Zillow and others. The median price up 20% from a year ago, and listings down 56%. Dallas and Houston are less pricey, but supply is down 52% and 33% respectively. As for Hawaii, it's one of the most expensive housing states in the nation, but supply there is more plentiful, so I'd say that would be the most risky of these bets. Back to you.
Diana, how does moving to a warmer climate appeal to you right now?
Oh, I don't know, Tyler. It does, and it appeals to a lot of people.
Yeah.
The Sun Belt states and Texas doing very well from this.
Yeah, it certainly does seem that way. And I have to say that I don't think this move to these warmer climes and these lower tax locales, I don't think that beer can be put back into the can here. I've just returned from southwestern Florida not long ago, and the numbers of people who are moving in have forced the prices up there in the 15% annualized rate. This is something I think, Leslie and Diana, that the work-at-home movement and COVID has unlocked in a kind of side effect way.
It's remarkable because a lot of people don't really know what the kind of return to normal world is going to look like, and still they're already packing up their things, moving to warmer climates, places where they think they can have a better quality of life. But it's interesting because that's already driving up the prices. I was actually talking with a hedge fund manager just the other day who is moving to Florida and said that the price for housing down there is akin to something that he would look for in the New York tri-state area, that there isn't really a bargain in real estate anymore like it was maybe a year ago or so. So that's just one anecdotal example, but it's truly remarkable. And to your point, point the idea that people are leaving with really no plan to return to at least the tri-state area anytime soon.
Yeah. Well, what we saw, certainly what I saw and my wife and son when we were in Florida, Diana, was what you've been talking about for a long time. Low inventory. There wasn't a lot available, number one. And number two, very high demand. You get that, and you got really rising prices almost into bubble territory, I guess. But if the demand is as solid as it is, it could keep going up.
Yeah, and remember, Tyler, that this demand was there even before the pandemic. We were seeing people leaving California for Colorado and for Texas, especially Austin, which was actually ranked the hottest market 2 years ago. And that's because they get better climate, they get lower prices. Now, though, you're seeing prices go up much higher, much more quickly. So the question is, can we build enough fast enough to keep prices at bay? Because if we can't and it all becomes unaffordable, then you've got a problem. So that's, I think, why investments like this, putting more supply, ever more supply into these markets is so critical right now.
Diana Olick reporting from Sarasota, as you can see right there. Leslie Plicker from the warmth of the newsroom. We'll take a quick break.
Step up, prep up to help keep you free from the risk of HIV.
Descovy for PrEP, a once-daily prescription medicine that helps lower the chances of getting HIV through sex. It's not for everyone. Descovy for PrEP has not been studied in people assigned female at birth. Talk to your doctor to find out if it's right for you.
Descovy is another way to PrEP. Descovy does not prevent other sexually transmitted infections, so it's important to use safer sex practices and get tested regularly. You must be HIV negative to take Descovy for PrEP, so you need to get tested for HIV immediately before and at least every 3 months while taking it. If you think you were exposed to HIV or have flu-like symptoms, tell your doctor right away. They may check to confirm you are still HIV negative. Serious side effects can occur, including kidney problems and kidney failure. Rare life-threatening side effects include a buildup of lactic acid and liver problems. The most common side effect was diarrhea. Tell your doctor about all the medicines and supplements you take, or if you have kidney or liver problems, including hepatitis. If you have hepatitis B, do not stop taking Descovy without talking to your doctor. Ask your doctor about your risk of HIV, and if Descovy for PrEP is right for you.
Get help paying for Descovy for PrEP. Learn more at stepupprepup.com.
When we started our company, we simply wanted better sheets. But along the way, we've realized that softer, safer, organic cotton does so much more for the planet and for humanity. It helps your home become a force for good, because home is more than just an address. Home is our soul. Boll & Branch, organic sheets, bath, and home. Right now, try for 30 nights risk-free and get free shipping at bollandbranch.com.
We were just talking about some of the stuff we have to spend money on every month.
Gas money,
buying groceries.
Sometimes I find myself strapped for cash a little bit between paydays.
Dave is an app that can advance you $75, $50.
Got spotted $75. Spot me up to $75.
Dave showed up, y'all.
I hate asking people for help, but asking an app, not so scary.
With no interest and no credit check.
With Dave, I could worry so much less.
It was so quick and easy for me.
Download Dave.
Dave, banking for humans.
Life is busy, and sometimes odors can sneak up on you. For a convenient life hack, try Febreze Unstoppable's Fabric Refresher. With 2 times the scent power of regular Febreze, Unstoppable's fabric finds, neutralizes, and eliminates tough odors trapped in hard-to-wash fabrics, like couches or smelly sports equipment, leaving an irresistibly fresh scent. And for a tropical burst of freshness, try new Paradise Scent. Stop sneaky odors from lingering in your home with Febreze Unstoppables.
.com.
Stocks with a very nice little rally going there. The Dow Industrial is up 1/3%. S&P higher as well, close to record territory, as NASDAQ and Russell also add to gains. Melissa.
And, of course, we have to look at GameStop and AMC, Tyler. Both of those shares are up. Volatile session today, up right now by about 9% and 13%. We've got Jay Klein, the former SEC chair, on tonight on Fast to ask him about what the SEC might be looking into. So thanks for watching Power Lunch. Closing bell starts right now.
Thank you, Melissa and Tyler, and welcome everyone to Closing Bell. I'm Sarah Eisen here with Wilfred Frost. Stocks in the green again. This has been a winning week. Let's look at what's driving the action. 1 hour left of trade. Energy, technology, FANG, all helping the market. The Nasdaq set for a record close at these levels. Alphabet's up 9% right now. The meme-driven retail frenzy stocks are running hot again. GME up 17%, up 9% now. It's cut its gains. Hot stocks flying, but that's not roiling the rest of the market. And some solid economic numbers helping out the mood as well. ADP, private sector jobs came in better. ISM services were also strong. 59 minutes left of trade, Wilfred. And we are set for a record close on that NASDAQ.
We are, and close to the session highs, just off them by 10 or 15 points on the Dow as we stand. Coming up on today's show, Galaxy Digital's outspoken CEO, Mike Novogratz, weighs in on the rise of the retail trader and the furious rally and subsequent pullback in GameStop. Plus cloud company Box is taking on DocuSign in the electronic signature space. We'll speak with CEO Aaron Levy about the new strategy, his thoughts on the shakeup at Amazon, and very much more. And we've got another big afternoon of tech earnings on the way. Qualcomm, PayPal, eBay among the names set to report after the close. 58 minutes and 40 seconds until then. 58 minutes and 40 seconds until the close, of course. S&P's up 0.4%. Let's focus in on the big stories we're watching today. Mike Santoli's tracking the action. Joining us to talk about Amazon and the big Bezos news is Recode's Kara Swisher. But Mike, let's start with you and the broader markets.
Yeah, well, pretty sturdy performance. As we're saying, really market making the case that last week's little shakeout was just a scare, a little bit of a fouling up of the risk models, hedge funds raising some cash, putting much of it back into the market in the same big cap stocks. Those tech platforms showing that they are huge earnings machines, especially with Alphabet outperforming today. So we have almost a round trip from last Tuesday. Basically, 38.49 is where the market kind of slipped off that cliff Tuesday into Wednesday. So we've kind of just, returned up there and are getting back up into this uptrend. I think one of the questions you have to ask is, are we just going to rebuild back into that same position of having frothy activity on the fringes of the market, having, equity exposures very high and sentiment very rich? We'll see if it takes higher prices to get to those conditions. Did want to take a look at Alphabet against Facebook. It's kind of a fascinating chart. This is since the date of Facebook's IPO. And it looks like, almost neck and neck if you consider that this is obviously, almost a 9-year chart right here. And look at the spurt that Alphabet is making relative to Facebook in the last several months. You see right here, it spent most of this time since, let's say 2016 or so, trailing on this basis Facebook. So obviously, a little bit of less of an overhang perception-wise in terms of regulatory issues, and then just multiple earning streams that Google is able to really fire on right now. Did want to take a look at mega cap growth and the valuations having moderated somewhat since the summer. Still, of course, quite expensive on a long-term basis. This is a weekly reading of the forward PE of the VanCap mega cap growth ETF. So you're at 28. Basically getting back to where we were about a year ago. It looked very expensive in here, but earnings have come through so strong and the forecasts are so strong, and the premium to the overall market looks like nothing particularly out of the ordinary. So, arguably people saying, look, a lot of crazy things seem to be happening on the small cap side, in SPACs all over the place. These old quality mega cap growth companies might actually start seeming like decent vehicles to just sort of play any kind of a resumption of the uptrend.
Mike, I guess one point was that it's a little bit healthy to have a bit of a pullback like we saw last week. The other question is, have we now bounced too quickly? NASDAQ's up 4.5% in 3 sessions.
Yeah, it's hard to say if it's too quickly. I mean, resilience is a feature of bull markets. They don't let you in. The market doesn't kind of stay in those pullbacks for very long. And sometimes I think what actually investors need is the feeling that they're not patsies buying the high. I mean, if you just get a quick 4% drop, all of a sudden you're taking advantage of what the market gives you as opposed to just chasing it. So I think that dynamic can play out a little bit. But to your point, I think if we get a few more percent up here, if we get to new highs, we are going to be in a very similar position to where we were, saying, hey, have we already paid in the market for the good news that's to come in terms of the economy and earnings from here, and valuations, of course, on absolute levels are a little bit challenging still, guys.
Mike Santoli. Mike, we'll see you soon. Amazon, worth watching today. The stock's down 1%. CEO Jeff Bezos is stepping down. He's been the driving force of that company since its founding and plans to take the role of executive chair in Q3. Taking the helm will be Andy Jassy, who currently runs their cloud computing unit, AWS. CNBC spoke to Jassy back in 2019 about the long-term vision for the company. Listen.
We're much more focused on the long term than most companies. We are trying to build a business and a set of customer relationships that outlast all of us. And as such, we think if we help our customers get more done and are successful on their own, even if it means lower margin percentages, over time will drive more absolute margin dollars, and they'll be more successful and will ultimately be more relevant.
Joining us now, Kara Swisher, Recode co-founder and CNBC contributor, has covered the company and Bezos for a while. Kara, what do we need to know, first and foremost, about Andy Jassy? What do investors need to know about him?
Well, I think he's been there the whole time. I think that's one thing you have to keep in mind. Much like Satya Nadella at Microsoft, who has been an incredibly successful CEO, he's had his career at Amazon. He came there after going to Harvard Business School when he was a very young man. And so you have to think that way, that he's been part of the, one of the things that people tend to focus on, whether it's Steve Jobs or Bill Gates, is that they're the reason everything goes up and to the right. And obviously they have teams, just like Tim Cook has done rather well for Apple, despite all the questions of whether he could do that, and the stock's never been more valuable. And so, Andy's been part of the team that brought Amazon to where it is, and especially running AWS, which is the most profitable part of the company by far. I think it represents 12% of the revenues and 62% of the profits. And so it's been a critically important business that they started from ground zero with Andy doing it in kind of a skunk works back in the early 2000s.
Yeah, he's been there virtually the whole time. One of the other factors that's reassuring, at least analysts who are publishing on this today, Kara, is the Jeff Bezos as executive chairman. What do you make of that role? How involved do you think he's going to be?
It's not chairman. It means he's going to be actively involved. I mean, he's got a lot of other interests. Like all rich people, the richest people on the planet, they want to get off of it. So he's interested in space travel and everything like that. But he does, he still will be a part of the entire part of Amazon. He's like Bill Gates in the years after he stepped down, was there very actively for a long time, including on the board, which I think Jeff will continue to be very active and influential on Andy. And he really did shape Andy's career. And so the Jeff Bezos effect will not fall away very soon, and they can always call upon him to do so. He'd already been doing this and putting Andy and others in charge of big parts of the business and wasn't as hands-on as he used to be. So he returned during the pandemic to do a lot more sort of listening tours and changes and things like that. But this has been something that's been happening for a long, long time.
Is there anything, Kara, that the company is not yet doing, a space they're not yet involved in, that becomes suddenly more likely under Jassy's leadership?
Yeah, I think healthcare. I think getting into healthcare, the idea of Amazon knows a lot about you from your buying patterns. They can tell a lot about a family and things like that. You could see them moving into healthcare very easily. They're already moving into pharmacy and things like that, but it's just a jump to other areas like that. I mean, some people say, if I can right now order an Amazon and get a ginger ale to my house in 14 minutes, it feels like. They've been offering to do vaccination help, and I have to tell you, if they had been doing it more than our federal government, we might all be vaccinated at this point. And there's also problems he has to face. Unionization efforts. Amazon is notoriously tough, and some people say dangerously tough on employees and unions. They've got to deal with the gig worker economy that they are part of. They just had a settlement with the FTC around tips for people that use their drivers and delivery people. And of course, antitrust. That's going to be a big thing. And already the FTC and others have investigations going on. And so you're going to, like all of the big tech companies, are going to be scrutinized about the data and their marketplace. So it's a big, challenging job that Andy is taking on here.
I was going to ask about antitrust and dealing in general with politicians and regulators, and wondered whether you thought taking Bezos out of the crosshairs slightly improves their chances, Amazon's chances, of not inviting as much ire, perhaps, as they otherwise would.
Well, the ire was about President Trump, who had this weird fixation on Jeff Bezos that was odd, I think, to most people, probably because he was a more successful business person. But one of the things that's really important is that Jeff doesn't want to deal with it. Did he want to go up to Congress and have to listen to them talk at him? Probably not. He probably is tired of that and doesn't want to do it. Andy's probably better suited. He's more patient. He has, I've interviewed him many, many times. I've known him for a long time, and he gives it back, and he's tough, but he's also a very reasonable person to talk to, and he's very good at it. And so, let him take it on. I think Bezos I think that congressional hearing didn't go particularly well for him or any of them when he was asked about the data exchange between their marketplace and the stuff they sell. And so he probably is like, life is far too short. I'm one of the richest people on the planet. Do I really need to keep doing this? And so he has other interests, and we'll see how that manifests. I think probably a lot around space travel. And he has a lot of other interests. We'll see where that goes.
And he's stepping down, Kara, at a time that is very healthy for the business of Amazon. An incredible record double-digit growth for the retailer, obviously during the pandemic. The cloud business continues to be a profit machine. What do you see as the biggest longer-term risk for Amazon? Is it this antitrust threat or a competitor or something else?
No, they're beautiful. They execute beautifully. This company is really, it's a very innovative company. If I had to pick one company who I think really does work on all cylinders, is this company. That said, these issues around employees and unions are problematic. There are issues around the kind of influence they have on the marketplace, the retail, and where commerce is going is a question. I think antitrust is something. I think all these companies are going to be reined in some way, and each of them has a different problem, as we've discussed before. Amazon, it has to do with their marketplace control and things like that. And so there's lots of issues. There's also tons of opportunities, and there's very few companies that can do that, especially in healthcare. You could see them get into driving. They're obviously in entertainment. They're kind of dabbling over in entertainment, and they were just nominated for a bunch of Golden Globes today, which is kind of interesting. But I think their core businesses, they're heading for the big stuff like healthcare and some other areas where they can and they've also done a lot of government stuff too. That's another area that Amazon's been trying to push into.
Yeah, with the cloud contract. Kara, very valuable to have your insight. Thank you for joining us. Kara Swisher. We appreciate it. We've got just under 50 minutes left of trading. Dow's up about 76 points right now. After the break, for better or worse, Robinhood has garnered a ton of attention over the past 2 weeks, but it's looking to grab even more eyeballs this weekend. We'll explain why and how next. You're watching Closing Bell on CNBC.
We're hoping things will pick up by Q3. Yep.
Never settle with Power E-Trade. It has easy-to-use tools and some of the lowest prices. Don't get mad. Get E-Trade and start trading today.
Este año Verizon te da más que nunca.
El 5G de la red más confiable y lo mejor en entretenimiento, con Disney Plus, Hulu e ESPN Plus. Además, llévate el nuevo Samsung Galaxy S21 Plus 5G por nuestra cuenta al cambiarte. Verizon.
My boyfriend never forgets our anniversary.
I completely forgot today was our anniversary.
Even from 1,000 miles away, he is so thoughtful.
I have no idea what I was thinking.
My doorbell rang, and there is this beautiful bouquet of red roses on my doorstep.
Then one of my buddies told me 1-800-Flowers to same-day delivery.
And I just thought to myself, I am so lucky.
1-800-Flowers. Send a smile.
Dad, it's a video call. Hold the phone in front of you.
How's that?
Get Mom.
Power E-Trade gives you an award-winning app with 24/7 support when you need it the most. Don't get mad. Get E-Trade and start trading today.
Este año Verizon te da más que nunca.
Solo Verizon te da el 5G de la red más confiable y lo mejor en entretenimiento.
Puedes ver los shows de los que todos hablan.
Con Disney Plus, Hulu e ESPN Plus.
El entretenimiento que te gusta con la red 5G que necesitas.
Planes Unlimited con 5G incluido. Además, llévate el nuevo Samsung Galaxy S21 Plus 5G por nuestra cuenta al cambiarte. Solo en Verizon.
Happy Valentine's Day!
Oh my God!
Delivery for Elizabeth.
Yes,
so gorgeous.
Accountant takes care of the rest.
"45 minutes left of trading. Robinhood entering certainly the mainstream lexicon over the past couple of weeks, but it's looking to grab even more attention on Super Bowl Sunday. Kate Rooney with the details. Wow, talk about timing, Kate.
I know it. This is Robinhood's biggest ad campaign yet, with a Super Bowl spot, and of course it comes amid the chaos of trading restrictions, pushback from lawmakers, and as well as a couple of class action lawsuits. The ad's message, you don't need to become an investor, you were born one. That is a nod to Robinhood's democratizing finance, as they put it, and bringing in a wave of new investors. The ad spending is meant to bring new customers, but some critics, including Chamath Palihapitiya, have argued that keeping up with this rapid growth and demand for some of those volatile stocks has been part of the issue for Robinhood. I spoke to a few Robinhood VC backers this week, though, who said that growth is really a good thing. They say new users last week outweighed any attrition that Robinhood saw. They saw it really as a silver lining here, and pretty much the big reason why they decided to double down and invest in Robinhood. Robinhood did bring in more than $3 billion in VC money in just less than a week. Guys, back to you.
So is what you're saying, this whole fiasco, including the fact that they had to raise billions of dollars and face liquidity problems, has it ultimately been good for Robinhood?
That's how the VC investors are framing it. They say that is the reason they decided this company was so valuable and they wanted to get even more exposure ahead of an IPO. You might see it as chaos. They say this was a test of Robinhood. They were able to keep trading online, and the user growth they compared to social media, which you'd never really hear in finance. They say it has the same engagement as a social media app, and the fact that it was #1 in the App Store for multiple days and is still up there blew some of these guys away, and they say that the round was oversubscribed because of that. But yeah, $3 billion, massive amount.
And then, guys, the thing I was going to bring up as well is they're not the only online brokerage that's got a Super Bowl ad this year. E-Trade, owned by Morgan Stanley, also have one, which is going to be interesting to see, kind of highlighting that Robinhood's not the only company that's benefited from this extraordinary trend of new account openings, and seeing that there's an opportunity to take it further. I think the other couple of points I just note from this is that E-Trade have done this before for a run during the 2000s, but initially in 1999, which I guess highlights another factor, which is this democratization of trade is not necessarily a totally new phenomenon, whichever way you slice and dice it. And then finally, just a question, Kate, whether the new account openings that all of these companies have enjoyed, maybe it's at a bit of a peak. If we're seeing 2 new Super Bowl ads from these sorts of companies, you know, it might be one of those kind of buy the rumor, sell the fact type moments. We'll have to wait and see.
That's right, absolutely. Have we seen the peak? And a lot of the brokerage analysts you talk to say they expect this to go down, and they don't think it'll go back to pre-pandemic levels. But after people go back to work, things sort of normalize here, and people aren't staying at home to day trade. They do expect some of the numbers to at least slow down a little bit.
It's just such a sign of the times, Wilfred, because if you look at who's in and who's out on Super Bowl ads, it has been the pandemic winner. DoorDash has an ad this year. Chipotle has an ad, which has done well with its delivery service. And who's out? Coca-Cola, which is usually always in the Super Bowl ad, are not, because they've been suffering with half of their business in out-of-the-home locations, like concerts and sporting events. So it's very much a story of the pandemic, and I think the retail trading aspect of it that you mentioned, Wilfred, E-Trade and Robinhood, just adds to that group.
Who's in, who's out, and who's had a decent year and got the money to pay for it. The other point, just quickly, I know we're going to leave this discussion, is how long the sort of directing and producing goes into making one of these ads, which is obviously likely to be weeks and months, not days. And as it relates to both Robinhood and E-Trade, the story has changed so much in the last couple of weeks, and you just wonder whether the whole GameStop phenomenon is just completely glossed over and ignored, or whether they adapt it slightly to reference it, whether WallStreetBets and Reddit and things like that get a mention, which I doubt they will. I think these things have been made quite some time ago. I know we're out of time, but it's a really interesting. I'm looking forward to watching the Super Bowl for these commercials more than probably anything else. Anyway, Kate, thanks so much for that. Still ahead, we'll talk much more about Robinhood and the rise of the retail trader with Galaxy Digital's Mike Novogratz. Plus, Bank of America bets big on housing. We'll speak with the firm's head of retail about why it's doubling down on promoting home ownership for low-income communities, and outlook for the economy and rates as well.
Municipal bonds don't usually get the media coverage the stock market does. In fact, most people don't find them all that exciting. But if you're looking for the potential for consistent income that's federally tax-free, now is an excellent time to consider municipal bonds from Henyon & Walsh. If you have at least $10,000 to invest, call and talk with one of our bond specialists at 1-800-376-4376. We'll send you our exclusive bond guide. free with details about how bonds can be an important part of your portfolio. Henyon & Walsh has specialized in fixed income and growth solutions for 30 years and offers high-quality municipal bonds from across the country. They provide the potential for regular income, are federally tax-free, and have historically low risk. Call today to request your free bond guide. 1-800-376-4376. That's 1-800-376-4376.
You know that tech stock we talked about? I picked up 500 shares.
You get in at a good price?
Oh, yeah.
Schwab saved you how much?
With Schwab Order Execution Advantage, you get price improvement on 92% of orders and commission-free online trades.
I'll take care of this.
Are you getting complete price transparency? Expect more from your firm. Schwab, the better place for traders.
So I have started investing. It's something that I'm brand new to. My parents didn't have a lot of money growing up. It's not a conversation we had in my house. I think I started maybe a little bit later than I should have, but better late than never.
Hi, I'm Brandon, CEO of Stash, an app that makes investing easy. With Stash, you can start investing with just $5. Go to stash.com or download the app now.
Let's celebrate Black History, but not just February.
From here on out.
From now on.
Black history is American history.
Let's uplift Black people and Black culture year-round.
To honor, to remember, to reflect.
On History Made.
And history in the making.
It's about us.
It's about America.
CNBC celebrates Black history.
Bank of America announcing today that it plans to triple its affordable home ownership commitment to $15 billion. First launched as a $5 billion initiative in 2019, the bank hopes to help more than 60,000 individuals and families buy homes through the increased commitment. Joining us now in a Closing Bell exclusive, Steve Boland, Bank of America's President of Retail. A very good afternoon to you, Steve. Thanks for joining us.
Good to see you, Wolf.
So, Steve, talk us through this initiative. So you're tripling the size of it, and how exactly will it help 60,000 people buy homes? It's more relaxed terms on lending, is it, or what exactly?
So, Wolf, when we announced this back in 2019, we had a low down payment mortgage. That's our proprietary program. We also had something we call America's Home Grant, which was a closing cost grant assistance. But we then announced down payment assistance as well. And so the combination of those two, closing cost grants that can go up to $7,500, down payment assistance up to $10,000, enabled us to help clients with up to $17,500 on a loan to get over that hurdle of down payment. We're going to keep doing more of the same because we thought it would take 5 years. And in fact, last month, we passed through $5 billion and actually 21,000 homeowners. And we see the need. We got great response from our clients. And so we thought it was appropriate to go ahead and try to triple that and get that done to 60,000 homeowners by 2025.
And what is your outlook, Steve, on the housing market as things stand? I mean, clearly it's been pretty hot. A lot of reasons cited for that, in particular short supply. Can that pace continue?
Well, you know, it could moderate some, but it's a very healthy market. Low inventory, rates are low. Even if rates were to go up somewhat from here, rates will be still very historically low. And what we're seeing is the demand. And so we have a Homebuyer Insights report where we really checked in with clients about the demand, particularly given the past year that we've all been through with the global health and humanitarian crisis that we were facing. And what we heard from first-time homebuyers, they're still as committed as ever to homeownership.
How do you square that with the rest of the consumer picture right now, Steve, and what's going on with high levels of unemployment and also even in the housing market, the haves and have-nots, those that are facing evictions?
Yeah, so, you know, this is one of the reasons why this is so important, Sarah, because if you think about it, right, we know that there are still a lot of consumers that are out there struggling, but we're also seeing signs of life. We're seeing it in debit spend, we're seeing it in credit spend, and we're seeing it in savings. And so what we see is clients who they may be ready today, we've got the right programs to help them. For the clients who aren't ready today, we're able to help them continue on the journey to getting ready. And so last year in the fall, we launched something called Life Plan. It helps clients take their priorities and lay out a plan for their life goals, including homeownership. Just since the fall of 2020, we've seen clients create over 2 million life plans. We have our clients that are taking advantage of educational materials. We have a Homebuyer Edu series on our website where you can get educated about homeownership and what you need to do to prepare yourself for it. So clients are still interested in consuming that information and preparing themselves for homeownership. And yes, we have some clients that still need to recover from the crisis that we had through the pandemic. And we're going to help those clients through that period and be there for them as they get back on track.
Steve, you guys always talk, and Brian does when he comes on, about the amazing pace of digital adoption from products like Zelle to others, particularly sped up by the last 12 months. We've also just seen Chase recently announce they're going to enter the UK without any branches. Has all of this changed your thinking about how many branches you need across America in your part of Bank of America?
What we've really seen is we've an acceleration of the adoption of the tools that we've been investing in for years. And so whether it is check deposits, 85% of our deposits are happening through automated means. Sales of products, as clients have not been able to go into financial centers, we see almost half of our sales of products happening online through the digital platforms. And then lending. Almost over 70%, approaching 80% on mortgages coming through our digital platform, 80% of our direct-to-consumer auto loans coming through digital as well. So we're seeing that expand our reach, our breadth, and our depth. We constantly are looking at our financial center network. In fact, I think it's just yesterday we announced expansions of financial centers in Ohio, and we're looking at other markets where we want to enhance our positioning. And clearly there are also some markets where we look at and we say, gosh, if we're able to continue to serve clients with the same or less footprint, that we constantly adjust.
Steve, thanks for joining us to talk about the initiative and the broader economy. We appreciate it. Steve Bolin.
Thanks.
Bank of
Great to be here.
Up next on the show, with about 30 minutes left of trade, big swings for vaccine stocks today as we get some fresh updates in the battle against the coronavirus. We'll bring you up to speed on those movers. And we are awaiting earnings from PayPal, eBay, and Qualcomm after the bell. But as we had to break, here's a quick check on bonds for you. Yields are a bit higher today, the 10-year yielding around 1.1%. The Dow's up 94, heading back up near session highs. We'll be right back.
The Bond Report is brought to you by PIMCO, a global leader in active fixed income.
Ever better. It's when disruption hits your supply chain. And Ryder makes you ever ready with our logistics solutions that put goods closer to you and the people who use them. Ever flexible. With our e-commerce fulfillment network, you can reach your customers directly. Ever innovating, so you can manufacture new products and speed them to market with our transportation services. Ever seeing, with real-time visibility into the movement of all your goods from inbound to final delivery. Ever moving, because your supply chain requires resilience, and your world never stops. At Ryder, ever better is not a tagline. It's our standard. Discover how Ryder Supply Chain Solutions can make you ever better.
I attribute my hair thinning to excess stress levels. Nutrafol improves hair growth by targeting stress as a root cause. I have better resistance to stress. It's so rewarding. Learn more at Nutrafol.com.
Flex shares are carefully constructed to go beyond ordinary ETFs and strengthen client confidence in you. Before investing, consider the fund's investment objectives, risks, charges, and expenses. Go to flexshares.com for a prospectus containing this information. Read it carefully.
As the news changes, the newscast changes.
You're ready? He's going. Look at this.
I need to be able to see the White House lawn.
Okay, so I will tell you when to roll.
We're on a mission, and we have to get it right.
The News with Shepard Smith. Weeknights.
Dad, it's a video call. Hold the phone in front of you.
How's that?
Get Mom.
Power E-Trade gives you an award-winning app with 24/7 support when you need it the most. Don't get mad. Get E-Trade and start trading today.
See that Honda badge? It reveals more than the Ridgeline's maker. It's a testament to endurance and Honda ingenuity. So when the terrain ahead is full of challenges, brace yourself. The Honda Ridgeline is about to amaze you. Rise to the challenge with the rugged performance of the redesigned Honda Ridgeline.
And now a mini meditation. Inhale serenity. Exhale whatever's happening here. Now bring your focus back to your customer, Tom. Salesforce Customer 360 helps you focus with a single view of your customer. Like Tom.
Who's Tom?
How language is learned.
Time now for our daily coronavirus tracker. New developments on the vaccine front to tell you about. GlaxoSmithKline announcing today will partner with CureVac to develop a vaccine aimed at targeting new variants of COVID-19. Vaxart stock, though, it's plunging today. That company, which is developing an experimental coronavirus vaccine in the form of a tablet, released disappointing data from its phase 1 clinical trial showing that one dose of the vaccine failed to produce neutralizing antibodies. The company says it's now assessing whether there's an antibody response from a second dose. But some promising news on another vaccine, a new study from the University of Oxford finding that AstraZeneca's vaccine not only protects people from illness, but it also substantially slows the transmission of the coronavirus, which is very good news, Wilfred.
Very good news, and suggesting as well that they should be able to develop later styles of the vaccine for the new variants by later this year as well, which again was an encouraging update to hear. Time for a CNBC News update now. Sue Herrera's got it for us. Hi, Sue.
Hello, Wilf. Good to see you. Hello, everyone. Here's what's happening at this hour. In Virginia, injuries, destroyed cars, and a damaged home after a gas line caught fire and exploded. A fire department spokesman says 3 utility workers have been hospitalized, but they are expected to survive. The city of San Francisco has sued its public school system in an effort to get students back into classrooms. City Attorney Dennis Herrera says the school district gets an F for its lack of reopening plans.
More than 54,000 San Francisco school children are suffering. They are being turned into zombies by online schooling. Enough is enough.
And more progress with training dogs to sniff out people with the coronavirus. German authorities say these dogs have a 94% success rate. They can even detect people who may be asymptomatic. That is Filou, a Belgian Shepherd, just so you know. Sarah, back to you.
That sounds useful. I can see it at airports, too. Thank you. Sue Herrera. Up next, we will break down the stocks RBC is calling hedge fund hot dogs and how the retail revolution is impacting the broader market. As we had to break, check out some of the top search tickers on CNBC.com today. No surprise, GameStop is #1, though it's only up 3.5%. Amazon, AMC, Apple, Tesla, also among the most top searched. We'll be right back.
CNBC Sector Sort is sponsored by Sector Spider ETFs. Sector Spider ETFs. Visit us on the web at sectorspiders.com.
Dad, it's a video call. Hold the phone in front of you.
How's that?
Get Mom.
Power E-Trade gives you an award-winning app with 24/7 support when you need it the most. Don't get mad. Get E-Trade and start trading today.
Service at the ready. At Mercedes-Benz, it's not just a job, it's our mission. At our place or yours, we're there. No one knows your vehicle better. To learn more, contact a dealership near you.
Refresquemos nuestra memoria. Somos Tecate, nacidos y elaborados en la tierra con la que compartimos nuestro nombre. Tecate, Baja California. Elaborados con la misma calidad desde 1944. Con ingredientes de aquí y de allá. Una verdadera cerveza México-americana. Tecate. México easy us.
At Domino's, you can carry out 3-topping pizzas for just $7.99 each. And with Domino's Carside Delivery, you can conveniently stay in your car while you do it.
Just pull up, check in online, and we'll quickly bring your food to you.
Thank you.
So you don't have to get out to get carry-out. Like Denny here.
Hey, Hamlin. I like your PJs.
PJs? Huh? Stay in the driver's seat with Domino's Carside Delivery.
I like to move it, move it. I like to move it, move it.
Ready to move on from workouts like this? Now through February 11th, join Planet Fitness for no enrollment, $10 a month, no commitment. With all this variety, you can move it in our clean and spacious clubs. And the new Crowd Meter in our app helps you find the best time to visit so you can work out with plenty of room to move. America, your fitness is essential. Join today for no enrollment, $10 a month, no commitment. Hurry, deal ends February 11th.
And now a mini meditation. Inhale serenity. Exhale whatever's happening here. Now bring your focus back to your customer, Tom. Salesforce Customer 360 helps you focus with a single view of your customer. Like Tom.
Who's Tom?
Need your company today.
The GameStop roller coaster continues. The stock was up double digits today before briefly going negative. Now holding on to smaller gains, 5% or so higher. This comes, of course, after its massive jump and fall during the month of January. Joining us to discuss the wild swings and the broader impact of the retail trading boom, Lori Calvasina, head of U.S. equity strategy at RBC. Lori, great to see you again. You've been doing various surveys and talking to your clients to see what the impact of all this has been on their portfolios. And I guess some people have made a fortune and lost a fortune on GameStop. For those that haven't specifically, what are their concerns about what it means for overall market levels?
So in terms of the big picture, when we've talked to long-only investors about this, some have been adversely impacted by not owning some of these names that have run, and others it really hasn't affected all that much. But what they all have in common is they're wondering whether or not this is telling us that there's too much risk in the market, that this is another sign or symptom of excessive exuberance. And, you know, we certainly don't completely disagree with that, but one of the things we said in the note we put out this morning is that canaries often sing early. I mean, that's sort of the definition of a canary. And when you looked back at the tech bubble in particular, which is when I came into the business, people were very upset about all the money that was washing into technology funds, but you really could have gotten upset about all the money flowing into tech funds and growth funds throughout the late 90s. And it wasn't really until 2000 that things turned around. So we do say, yes, this is something to be concerned about, but it's not necessarily a reason to say we're not going to have a good year this year or declare an end to the bull market. We just don't see that.
And in terms of your other findings from the survey, most hedge funds, it seems from the list of stocks they have with the greatest exposure to, are really still heavily weighted in the biggest cap tech stocks, as you might have expected based on the last couple of years' performance.
Exactly. I mean, we have this one list called the hedge fund hot dogs, which is basically just the most popular stocks in hedge fund portfolios in terms of the dollar value owned. And we have seen fantastic performance in those stocks since 2010, but we haven't seen great performance recently. We've actually seen those names struggle a little bit relative to benchmark, very mixed performance on the day today. And what we've actually noticed is it goes all the way back to last summer that the relative performance of those stocks peaked. So I think people are paying attention to this issue recently. One of the things we tried to highlight in our note was, you know, this underperformance has actually been going on for a few months now. This isn't something that's just because of this retail trading frenzy that we have out there.
We've all read and heard about Gabe Plotkin, Lori, but what's your assessment about how much pain overall was inflicted on the hedge fund community as a result of all this?
So I don't have a great sense on the hedge fund community, you know, any particular dollar value or anything like that. We know we did see degrossing. We do know that we did see shorts pulled off. We do know that there was I wouldn't say it was panic, but there was a lot of frustration. There was a lot of activity around this over the past few weeks. You know, I spent a lot of time last week talking to long-only managers, trying to figure out what the impacts were on that side of the business. And what we found was that the growth funds were caught up in this degrossing. So we only saw 27% 9% of large cap growth managers outperformed their benchmarks last week. And that was primarily because a lot of these popular stocks that they own, the hedge funds also own and were selling down. What we saw among small cap managers was a little bit different. Small cap value managers were telling me some of these retail names had become very big weights in their benchmark. They didn't own them, and suddenly they found that they were underperforming. Only 9% of small cap value managers beat their benchmarks last week, and that was really because of factors completely beyond their control.
Looking, Laurie, at your sort of top sector picks for the rest of this year, financials, materials, energy, it's very cyclical. It's an extension of sort of the Q4 performance we saw.
So we think that the reflation trades, there's still room to run from a valuation perspective. That's something that I've been talking to investors about a lot over the past week. People are still trying to do work on the fundamentals despite what's happening with the retail trading. But at any rate, when we look at things like small cap relative to large cap, financials versus the broad market, materials versus the broad market, we still see a very, very good relative valuation case. So we don't think that that reflation thesis is fully baked yet.
Which is why I guess you have a 4,100 price target on the S&P, which is a few percentage points higher from where we are. Laurie, are we in the early innings of a new economic cycle and bull market, or the middle, or the end? Where are we?
I think that that's a fantastic question, Sarah, and I've actually been pushing that to my clients because, to be honest with you, I am worried about a short-term pullback. I do think valuations have gotten a little stretched for the market. I think that sentiment is frothy, but I do think that you have to ask yourself, what are you going to do with a pullback? How are you going to treat it? And we would be buyers on the dip. And basically, we've been telling our clients, we think that it is much more likely that we are in the early innings of this economic expansion and that the bull market is young. We don't think that we're in the middle innings. And that's when you might start to see some of those, kind of quote unquote reflation trades, things like small caps start to underperform once you get to kind of the middle of the cycle. And we think it's still very, very early days here. So we're willing to ride out some potholes in this path of recovery from here.
Laurie Calvasina, good to see you. Thanks for joining us.
Good to see you too. Thanks for having me.
Up next, pod stocks move higher, and the key metric to watch in PayPal's report will take you inside the market zone next. And as a reminder, you can always watch or listen to us live on the go on the CNBC app. Closing bell back in a couple minutes. S&P up 1/3%.
FlexShares ETFs are built with advanced modeling to fill portfolio gaps and target specific goals, strengthening client confidence in you. Before investing, consider the fund's investment objectives, risks, charges, and expenses. Go to flexshares.com for prospectus containing this information. Read it carefully.
Incomparable design makes it beautiful. State-of-the-art technology makes it brilliant. The visionary Lexus NX.
Lease the 2021 NX 300 for $359 a month for 36 months.
Experience amazing at your Lexus dealer.
This is Theragun by Therabody, the percussive therapy device that has been the secret of professional trainers, weekend warriors, and all-star athletes looking to get to their next level. Theragun's scientifically calibrated depth and force designed to keep you moving freer and living better. Professional-grade power that's felt, not heard. Whether you're making memories, making a deal, or making history, visit Theragun.com and change the way you move.
Opening the book on 2020 payrolls. Could increasing vaccinations be a shot in the arm for employment and open more doors to build back the economy? January employment numbers, Friday, 8:30 a.m. Eastern. Watch Squawk Box.
Dad, it's a video call. Hold the phone in front of you. Get Mom.
Power E-Trade gives you an award-winning app with 24/7 support when you need it the most. Don't get mad, get E-Trade and start trading today.
Don't let the comfort fool you. Don't let the attention to detail lead you to believe that a Honda is a delicate machine. You'd be wrong. Underneath every surface that carries a Honda badge, there has always been the capacity to amaze. From the core of everything we have ever built, all the way to the top of where you want to go. Rise to the challenge with the rugged performance of the Honda Pilot, Passport, and redesigned Ridgeline.
Priceline can save you up to 60% on top hotels.
These are all great.
Because now is an important time to save. And when you get a big deal, you feel like a big deal. When you're ready to travel, we're here to help you save. Get up to 60% off amazing hotels with Priceline.
Priceline. Every trip is a big deal.
Visit tonal.com.
Hi, Mr. Wonderful here. I believe that startup investing is key to building wealth, but it's hard for everyday people to find access to these deals. Well, I've got good news. On Start Engine, you can discover hundreds of startups raising capital and begin building your portfolio today. For as little as $100, you can own a piece of the next great business. It's your turn to become a shark. Join me at startengine.com.
Hey, Dad.
Hey, son.
No, Dad, it's a video call. You gotta move the phone in front of you, like it's a mirror, Dad, you know.
Okay. How's that?
Is that how you hold a mirror?
Power E-Trade gives you an award-winning mobile app with powerful, easy-to-use tools and interactive charts to give you an edge, 24/7 support when you need it the most, plus $0 commissions for online U.S.-listed stocks. Don't get mad, get E-Trade and start trading today.
The Market Zone is sponsored by E-Trade. Trade commission free today with no account minimums.
14 minutes left in the trading day. We're now in the closing bell market zone. Commercial-free coverage of all the action going into the close. CNBC senior markets commentator Mike Santoli here to break down these crucial moments of the trading day. And today we've got Ritholtz Wealth Management CEO Josh Brown with us as well. Good afternoon to you, Josh. Let's get things off there with the broader markets. Major averages higher for the third straight day. The Nasdaq currently on track for a record close. We're up about 30% or so on the S&P, 3.3% for the S&P so far this week. Mike, my first question on this is did the pullback last week therefore flush out all of the sort of overboard aspects, the bullish positioning and so on and so forth, or are we right back up there very quickly?
Yeah, I don't think it was any kind of a comprehensive flush. I think people did pull in their risk exposures, raised a little bit of cash, and also, I think, just waited to see if anything else broke. That's always part of this, is to see, you know, if you have any victims bobbing to the surface. We got the reports of, you know, Melvin Capital losing 50% in a month. And those usually mark the time when people say, okay, if nothing else breaks from here, credit markets have been very, very firm. No real flinching there at all. So I think all of the things felt like it was nothing much changed fundamentally, and you got the easing of the volatility eruptions coming from some of those smaller stocks like GameStop, and it was fine. We can just go back to our old assumptions. I don't think it means up and away from here, because it wasn't as if we really did get people turned bearish and get a lot of people raising a ton of cash, but the market seems like it's on a little bit more solid footing than it was a few days ago.
What are you paying closest attention to right now, Josh? Is it still GameStop, which is only up 4%? It's almost like a normal day for that stock. In terms of the magnitude of the move.
Yeah.
Or is it earnings now taking center stage? What matters?
Yeah, I am following GameStop literally 24 hours a day. I can't take my eyes off it. Come on, you know me better, Sarah. I'm looking at the leadership stocks, and I'm looking at internals, and I'm making memes about GameStop. Like, I'm compartmentalizing. So let's look big picture. What the energy stocks are doing today is exactly what the financial stocks did last week, which is exploding out of a 3-week pullback. Energy stocks have been down about 13 or 14% in the correction, and now it's like it never happened. We've seen that happen for group after group. So we had this situation where we were probably very overbought right at the start of the year. There was a moment a week and a half ago where 85% of S&P 500 component stocks were above their 50-day. That's like a lot of enthusiasm for pretty much every stock. And that was corrected very quickly. We got down to 42% back at the worst of the correction lows last week. We're back at 58% on that measure, nowhere near being overbought. A lot of damage has now been repaired, and the good stocks continue to be good. People don't realize Google, how large and how important it is, but also the dichotomy between Google and Facebook. Investors are not just arbitrarily buying everything. Index funds are not pushing everything up. Google's up 40%, while Facebook is up 5% since last year. So, like, there is definitely, I think, active investing happening and people making economic decisions on what stocks they want to own. So, as long as that's the condition we're in, rotation, stocks coming out of correction, lots of things working, but great stocks working better than just okay stocks, I think that's where you want to see things as an investor.
Let's hit Spotify. Those shares are moving lower despite beating user growth expectations. Julia Borston with the details. Julia.
Sarah, Spotify shares are down about 8%. That's on a larger than expected loss in the quarter and cautious outlook looking ahead. Now, CEO Daniel Ek warned about ongoing COVID headwinds and the possibility that the pandemic pulled forward subscriber additions, noting that there is uncertainty in 2021. Now, that concern outweighing faster than expected 24% growth in subscribers to 155 million, with a total user base that includes the ad-supported listeners of 345 million. Daniel Ek was also bullish on the potential to increase prices and for podcasts to help draw in some new subscribers. He tried to reassure on the call this morning that the forecast is conservative. Guys?
It may be too conservative. The market doesn't like it. Julia, thank you very much. You know, Mike, when I think of podcasts, I would have thought they wouldn't have been that popular with people not commuting, but that is what they said drove that 24% user growth.
Yeah, I mean, if people are certainly getting into the habits of just having them rolling in the background, it would seem, while you're staring at a screen somewhere, whether you're in a car or a train or not. And I think, you know, obviously a little bit of a moderation of enthusiasm, but the stock doubled since May of last year. This has been just a roaring name in the market. It's, you know, people feel like it's potentially going to be following something similar to the Netflix path, where we wring our hands about content costs and whether they can really get paid back in the long term. I'm not saying it's exactly the same, because originals here, you don't really kind of own them the way you do in video, but it's a similar story, and you know, everyone decided they had to pretty much own it as the next thing in media. Very expensive stock, but I think this is much more just a pullback after a huge run.
Josh, where do you stand on this one?
I'm not a fan. I think it's a great company. I'm a subscriber. I love the service. But I think there are some real questions about what kind of checks they're writing for talent and whether or not there's really going to be an ROI or just a lot of write-offs. And that's not a diss, because I think instinctively they're doing the right thing focusing on podcasts. It just might not be the right way to go about it. They're giving people like the Kardashians and Michelle Obama checks or contracts, but they're not necessarily having product delivered. And just because somebody's famous and has a big following, that doesn't necessarily translate into a good product, into a good podcast that's going to keep users sticky on this platform versus Apple. So one of the hottest podcasts on the planet right now is the Joe Budden Show. And Joe very, I think, astutely pointed out that creators have too many options for this Spotify Death Star to really take over the whole podcast game. So if that's the big bet they're making and that's why you're investing, you had the stock run up, but you're not getting the fundamental news to accompany that to make you feel good about them writing $1 billion worth of checks to Rogan and Bill Singer and all the rest. So I'm not in this one. Maybe if it pulled back, I might take a second look, but I'm not convinced that this whole podcast strategy is going to move this stock substantially higher from a $60 billion current market cap.
8% of a pullback today, not enough for Josh to get interested yet. A big pharma deal is helping cannabis stocks today. Jazz Pharmaceuticals says it will acquire GW Pharma in a deal valued at $7.2 billion. GW Pharma is known for its cannabinoid-based medicines. And while all eyes have been on cryptocurrencies and heavily shorted stocks like GameStop recently, pot stocks have also been ripping since Joe Biden was elected president. Stocks like Tilray, Afria, and Sundial Growers have all more than doubled in value so far this year. The group also picking up steam this week after Senate Majority Leader Chuck Schumer said that Democrats would make cannabis reform a priority. Mike Santoli, the interesting thing about this particularly sharp run-up is that they've already had their big first sort of day in the spotlight a couple of years back and had their pullback from then. It gives it a little bit more kind of credence, a little bit more fundamentals behind it, albeit these runs have been unbelievably fierce.
Yeah, there's no doubt about it that there is at least a policy push that you can be monitoring right now. It's not just about maybe someday in the future. And yes, they are also a little bit of a hive of stocks, of people who just are very interested in the overall movement. The MJ ETF is up 9% today. You know, I think it almost falls along the lines of, the solar and the EV stocks, where people really believe like it's a huge piece of the future is in this industry. And of course, this pharmaceutical acquisition is in a somewhat different category from legalization because it's really genuinely medical, but it came at a huge premium, and I do think at least it sort of underscores some enthusiasm for the possibilities in this area.
Well, it also comes on the heels of the free Tilray tie-up, so there is deal activity in the space, Josh, but couple that with the potential regulatory headwinds with a Democrat-controlled Congress and administration. Are these stocks justified where they are? Are they still a buy, or are they just running too hot?
I'm not an expert in them individually, but I would just say, generally speaking, what should happen here is consolidation. Deal making is what should happen, because in the end, this is just going to come down to brand and distribution. It's no different than alcohol. It's no different than cigarettes a few generations ago. There'll be a handful of massive winners. It's not going to be a mom and pop industry. So I think if you're in the smaller names, you probably want to be in the smaller names because you think someone's going to snap them up. And it may not be another cannabis company that does the buying. So don't be shocked if you see more situations with companies like Ambev and Constellation Brands, et cetera. So I think you could make money here, but I really would do my due diligence on these companies specifically. I wouldn't just say, I want to own the pot stocks, broadly speaking, because they won't all get acquired. Some of them will just get stomped into the dirt.
PayPal set to report its earnings after the bell. This stock has been on an absolute tear, more than doubling in the last year, up 40% in the last 3 months alone. Analysts are looking for $1 in EPS on revenue just north of $6 billion. It's been a huge beneficiary, Josh, obviously, of the surge in online, e-commerce growth, but it was already a moonshot, basically, since it spun out of eBay back in 2015. Yeah. Is it still a buy?
The stock has been compounding at over 40% since the spin out from eBay. And what's interesting about this is that the technology people all said it was a mistake. Carl Icahn, the activist, said this will work, and he was dead right, and he doesn't know much about peer-to-peer money transfer technology, I would bet. So he deserves a feather in the cap. I'm long the stock. I bought it in the 180s, I think. I've been praying ever since for it to pull back to 200. It hasn't happened yet. I think the stock's going much higher, though. I'm not a seller, even if it pops on earnings. And if it sells off enough, I might add to it. I don't think this has anything to do with stay-at-home. I think this is the new way that we move money in this economy. Venmo is a ridiculously sticky platform. I think they'll have 400 million users worldwide before the end of this year, and it's going to be a must-own financial stock, even though it's wrongly classified as a technology stock in the index. Own it as a financial. Own it as the next century's financial.
It's going to be really interesting to hear about the monetization part of Venmo on this call. Also, of course, the newer initiatives in crypto. It's sort of stealthily, not stealthily because we all know how good a run it's had, but it's now worth nearly $300 billion. It's pushing to be one of the biggest financial companies in the country. Of course, a lot of that much more on
$20 billion in revenue.
20 billion in revenue. I was going to say, but 66, 67 times PE, so it's way more expensive than the banks. But you can understand.
Throw the PE out. Nobody's looking at that.
I know. It's anyway worth 295 billion, much more than a lot of the banks. We have just under 2 minutes left. Mike, what are the internals?
It's bigger than B of A, by the way. Not just a lot of the other banks. Yeah, the internals are sturdy, but not really overwhelmingly positive. If you look at the advancers versus decliners in the New York Stock Exchange, positive. I think Brett is probably going to make a new high on a cumulative basis today, but 1,800 up, 1,400 down. Definitely a little bit of a push-pull underneath the surface. Take a look at kind of the stay-at-home versus reopening flavor today. There had been a bit of a push in terms of outperformance by those going out. The leisure and entertainment stocks up 1%. Work from home not really doing much today. Volatility index has come in hard. So we did, again, have that little scare, that little eruption of volatility, a little bit exogenous last week. And it's coming back down below 25. So, again, it's confirming this calming down, this tension release we've seen in the broader averages, but not really falling down again into that what used to be the normal zone under 20 just yet, Sarah.
Under 1 minute till the close, we are up for a third day in a row. It has been a strong week so far for stocks. The Dow's up 58 points, sort of in the middle of the range of where we've been all day long. The S&P 500 up 0.2%, but still up 3.25% so far for the week. The NASDAQ has been the big winner. It's up more than 4% so far this week. and it is higher again. As far as the standout sector, though, it's energy today. That sector up 4.25% thanks to oil prices, which have surged today. They actually closed at a one-year high on some stockpiles, and of course OPEC keeping its production cuts. There goes the bell. Forgot to mention the small caps, but they're the big winners today. The Russell 2000 closing up 0.4%. Remember, it was the only one of the big averages that closed higher for the month of January. Wilfred.
Welcome to the Closing Bell, everyone. I'm Wilfred Frost, along with Sarah Eisen and Mike Santoli, CNBC senior markets commentator. We've closed with the NASDAQ composite just down by 2 basis points or so. The S&P up by 10 basis points, the Dow up by 10 basis points itself. So a little bit of a gut check there in that final hour of trade, as you can see nicely from that chart on the S&P 500. The Dow high of the session was over 100 points, closing up by 35. But of course, it's been an incredibly strong week so far. The S&P's up 3% for the week, the Dow's up 2.5%, and the NASDAQ up 4%. Energy was the best performing sector today, up 4% itself. The worst was consumer discretionary. Investors, of course, waiting a trio of big earnings reports. Qualcomm, PayPal, eBay, all due any minute. We'll break down those numbers for you as soon as they're released. Plus, Galaxy Digital's Mike Novogratz tweeting, quote, "All squeezes end with greed and gravity. Don't overstay your welcome." He'll join us to discuss the retail trading frenzy and much more coming up shortly. Josh Brown from Ritholtz Wealth Management is still with us, and Degas Wright from Decatur Capital Management joins the conversation as well. Mike Santoli, I'll come to you first of all, and I mean, you mentioned it there in the internals. How bullish is it to see the VIX pull down so aggressively over the last couple of sessions, and does it suggest that we've got through this shakeout and there's some kind of open field in front of us?
It's certainly a positive. It's down a lot in a short period of time because it did pop well above 30. So that's always a supportive aspect of when you see these markets recovering. You do want to see the implied volatilities bleed down. But again, they were almost too high last week relative to how much the market was down. So I still think we're dealing with a market that hasn't fully calmed down the way you would potentially expect it to, given where the indexes are relative to the old highs. Also, 7th day in a row where we've actually had a bit of a weak close, sell off into the close. I don't know if that's just rebalancing flows naturally moving away from equities, or it's just, you know, the market's at a high and we have to sort out these levels and spend some time here for a little while. But overall, as I said before, credit looks very good. Treasury yield curve steepening. You got the 30-year pushing 2% on the yield. So it seems like things are, you know, lining up behind the bullish case. But, you know, the market's got to prove it here. All we did today is go back and almost get back to where we were last Tuesday.
Degas, how do you feel about the overall market, given the strong week we've had and the weakness we had before that, stemming from some of the retail trading activity and the mania?
Yeah, so Sarah, what we're seeing right now is that we're in this choppy market, and you know we're at about 3,800. We're seeing that we could pull back to 3,500, but at the end of the year, we're going to be probably 4,000 plus. So this is going to be a choppy market. There's going to be some consolidation, and we're just telling our clients is that if your forecast is out for 6 months and you need your capital, you probably want to put some protection on. But if you're a long-term investor, and most of our clients are, we're saying that on dips you can actually buy into this market and really buy some good names going forward.
Josh, before we get to today's earnings movers, wanted to get to yesterday's, in particular Alphabet jumping 7%. It seems like you wanted to report your sort of cloud-based tech earnings this week, not the weeks prior, because Apple, Microsoft, for example, didn't really perform that well after blowout earnings, but Google certainly is.
It tells you how rational investors are. Not only is the earnings report matter, but you're exactly right, Wilf. The context in which you report that number matters too. So today's a more favorable day. Alphabet is just knocking the cover off the ball. Search advertising returned, third-party advertising returned, and YouTube has never been stronger. Google told us that they now have more 18 to 49-year-old regular viewers on YouTube than every single television network combined. So as a result, they're eating all that advertising revenue as well. And then the wild card with Alphabet, the other bets category, not much on Waymo this time. That's something I'm excited about. But either way, you got very strong results. You got more financial disclosure than historically. And now they're talking about this new figure, backlog, for the cloud business. And we haven't really heard them talk about backlog before, but that number is also enormous. And Google's cloud, which is definitely not up there with Microsoft's or Amazon's yet, seems to be gaining. So I think you're seeing that reflected in the share price.
Big mover today. Google and Microsoft higher. Interesting split. Amazon, Tesla, and Apple were lower. Qualcomm earnings just out. Stock looks like it's under pressure. Josh Lipton with the numbers. Josh.
Sarah, Qualcomm reporting Q1 earnings per share here of $2.17. The street was at $2.10. Revenue $8.23 billion. The street was at $8.27 billion. For Q2, they're looking for between $1.55 and $1.75. That's above forecast. For revenue, $7.2 to $8 billion. Unclear if that's comparable to the analyst forecast. Digging into the segments, QCT, so the chipset business, $6.53 billion in the quarter. QTL, so that's the licensing business, $1.66 billion. Heading into this print, the stock had rallied about 30% over the past 3 months, about more than 80% over the past 12 months, but now sharply lower here in the after hours. The call starts at 4:45 Eastern. Back to you all.
Josh Lipton. Josh, thank you very much. Down almost 7% after hours. Mike, the setup, which Josh alluded to, is pretty important here.
Yes, it was. It certainly was at a high. It came out of the low 150s just last week. So certainly was up on a perch. Also, you know, the semiconductors, I mean, they've obviously been this great leadership group. They also were down today. It just seems as if some of these areas are getting a breather, and software has taken a little bit of the lead in the last few days. So could be one reason for the reaction. But, you know, when you have raised guidance and then you get a negative result, it shows you which way people were probably leaning.
Degas, what's your view on some of the chip names?
Yes, so what we see, and one of the reasons why we think Qualcomm may be pulling back now is that it's a very competitive market. Obviously, you have NVIDIA that they compete with Broadcom and also Taiwan's MediaTek. And so it's a very competitive market. Also, and another thing is that the debt to capital ratio for Qualcomm is really high relative to the rest of the industry. It's about 0.85 to about 0.35 for the rest of the industry. So we see that that could be some weakness in Qualcomm. However, we see strength in the semiconductors long term. NVIDIA, for instance, KLA Corp, Texas Instruments, all of these are very solid companies. And because we have to remember that this is the Internet of Things. And these companies are fueling that, and we think that this is still a good space. You just have to be very careful as you select your semiconductor companies as you go forth. And so we're looking at Qualcomm being weak at these points, but we have other companies in the semiconductor space that are very strong, continuing to be strong, even in this pullback.
Let's get to eBay, jumping, what, 10% in after hours. Why? Deirdre Bosa's got the answer.
Well, very briefly, it has beat across the board. Well, eBay earnings, EPS coming in at 86 cents a share. That is a 3-cent beat. Revenue also coming in higher than expected, $2.9 billion versus the $2.7 billion expected. GMV, this is gross merchandise volume, an important metric. That was up 21% in the quarter, $26.6 billion versus $25.2 expected. And this is key. eBay increasing its dividend by 13% and expanding its buyback program by $4 billion. So that may also be why you're seeing this huge jump in shares. It's up 16% year to date, so the gains continue. However, over the last 12 months, keep in mind that it is underperforming some of the other e-commerce names like Etsy and Wayfair. We'll continue to dig into this, and I'll bring you any other things that I find, including guidance. Back to you.
Dee, thanks so much for that. Mike, the top and bottom line beat's not that big relative to the 10% jump.
No, but it's the value name in e-commerce. I mean, it actually has a sub-market PE of like 17 on a forward basis. So it's essentially priced for not really having very much growth relative to the overall industry. So this would imply, you know, that was genuine financial upside. And then, of course, it always has been a capital return story. So the buyback and the dividend, enough of a pleasant surprise for it to kind of go revisit its 52-week high at this point in the low 60s.
Is it enticing, Josh? 28% revenue growth for eBay, as Deirdre mentioned, after having lagged some of the other online names like Etsy?
Yeah, it's been a winner, and I haven't been in it, so I guess I've been wrong to ignore it. But this is not in my wheelhouse. I really don't understand the allure of sitting around buying other people's junk all day long. So I think it'll remain a value stock. They had an opportunity, according to one recent downgrade from a Wall Street analyst whom I agree with. They had an opportunity to reposition and have like a shift in strategy, given like how popular online shopping all of a sudden became this year. Like it became the national pastime. But I think as we get out of our homes and we're doing less of that, laying on the couch buying garbage, I don't think that these stocks are going to be able to lap those quarters and have great comps. So if you missed it, like I wouldn't be like, oh my God, I have to own this thing. It's just, it doesn't excite me. I'm happy for them. I'm glad things are going well. I don't see this one surviving in the next phase of growth for the real economy. I don't think people are spending all their time on eBay like they were.
That is Josh's guidance for the year ahead for eBay. What, Deirdre Bosa, is the company's own guidance?
Yeah, more conservative than the company's own guidance. This may be another reason the stock is surging. Q1 revenue guidance above the estimated range. Q1 EPS guidance also well above the range, guys. Back to you.
So the stock's up, what, 8%?
Yo, talk to me this summer when we're having New Year's Eve every night of the week.
But Josh,
and we're at concerts and baseball games. Talk to me then.
You've also missed Etsy, which has been a humongous winner in the market.
I agree. Can't own them all, Sarah.
We're making note of this. 6 months' time, 2 quarters' time, Deirdre Bosa, Josh Brown, we'll check back in with these numbers. But today it's moving up and it's surprised to the upside. Josh, I just wanted to pivot back to one of your calls more broadly, which is energy up 4% today. Are you saying you like energy names and you're buying them, or just an observation of how strong that kind of...
No, we're broadly diversified, but we don't have an overweight to energy, and we're not tactically trying to catch bottoms in crude oil. I have no idea how to do that. So that's not the game that I'm playing. So we have as much energy as exposure as the broader markets have. So days like today, when energy outperforms everything, if you're not overweight, you're like, oh, I should have more energy. But there aren't a lot of days like today. We do have an overweight to emerging markets and have for a while. Emerging markets are far outpacing the S&P year to date. I know it's only February 3rd or 4th or whatever it is. But I think you get some energy exposure being in those names. MSCI China, by the way, up 15%. MSCI emerging markets up 8%. S&P's up about 2%. So you've got to have a push and pull in your portfolio. You can't be overweight everything. And there are days where things that you're not overweight really shine, and you just have to like say, okay, that's the nature of the game.
Josh Brown, dig us right. Thank you both for joining us. We appreciate it. Another busy earnings session. Up next, we're still waiting for numbers from PayPal, which we'll share as soon as we get it, plus Mike Novogratz on whether the game is up for GameStop and other companies caught up in the short squeeze frenzy, even though many of those stocks closed higher today. Plus, Fox CEO Aaron Levy will be with us to discuss his company's brand new bid to take on DocuSign. We're back in just 90 seconds on Closing Bell.
This CNBC program is sponsored by PIMCO, a global leader in active fixed income.
Your daily dashboard from Fidelity. A visual snapshot of your investments, key portfolio events, all in one place. Because when it's decision time, you need Decision Tech. Only from Fidelity.
Interactive Brokers charges 1.59% for a $100,000 margin loan. Do you know how much your broker charges? Upwards from 6.82% at Fidelity or Schwab to as high as 7.45 to 7.75% at E-Trade or Ameritrade. Move your account to Interactive Brokers and save at least $5,200 or much more if you're trading big bucks.
Medical school was very stressful. I lost a lot of hair during that time. Nutrafol is 100% drug-free and it's natural. You can't argue with clinical proof. Start your hair growth journey at Nutrafol.com.
Hi, Mr. Wonderful here. I believe that startup investing is key to building wealth, but it's hard for everyday people to find access to these deals. Well, I've got good news. On Start Engine, you can discover hundreds of startups raising capital and begin building your portfolio today. For as little as $100, you can own a piece of the next great business. It's your turn to become a shark. Join me at startengine.com.
Another volatile day for those Reddit retail trading stocks. GameStop closing off its earlier highs, finishing a little bit higher than 2%. And despite today's drop, the stock is still down nearly 72% for the week. Joining us for more, Michael Novogratz, Chairman and CEO of Galaxy Digital. Mike, it's good to have you. How did you get involved in all of this? I think of you in Bitcoin. Is this related? When did you start tweeting and getting really into the Reddit retail trading craze?
Well, you know, my son, who's 18, warned me a few days before the whole squeeze. He said, "Dad, you got to see what's going on." And so I watched kind of first with amusement, right, as a bunch of young kids, you know, were relatively savvy and figured out how to really squeeze some of the best hedge fund managers in the world. What fascinated me was, as the squeeze went on, it became a social movement, right? And it became David versus Goliath, right? The little guy versus the big guy, the generational millennials and Gen Z versus the baby boomers. And then it got really nihilistic. It got, I don't care if we lose money, we're going to burn down Wall Street. And, you know, when Robinhood had its issues with not enough regulatory capital because it was growing so fast, it got ugly. There were death threats. There was just an anger that I don't see in markets often, right? It was an anger that was reminiscent to the anger at the Capitol 3 weeks earlier, where they were tearing down, you know, our sacred institution. And so I found the whole thing fascinating. I found it frustrating as well, in that there were senior people, right, guys that should know better, that were egging on this horde. And it wasn't the social side, but I was like, GameStop was trading $20, $30 billion a day. And so guys that got in early, great, but you were bringing in all kinds of new participants at levels that were guaranteed losers. And so now we've had to go from 500 back to 100, on its way back to 46. And, you know, there's a lot of people that lost a lot of money that didn't have to. And, you know, listen, that's the markets. You can say we're all big boys, but it felt like we worked the little guy into a frenzy, you know, the retail investor, and they sucked in tons of new people at bad levels.
Right. So did you have a position at any point in all of this? Because I was wondering, because you did put out that tweet in the middle of it, comparing it to Black Lives Matter and comparing it to the Capitol insurrection. So just for full transparency, were you just an observer, or do you have positions?
When it got very high in stupid levels, I was lucky enough not to be short. You know, I don't spend that much time in the stock market. I did a lot of selling of the XRT, which is the retail, you know, ETF, which has a lot of GameStop and other names like that in it. And, you know, I was on your sister, you know, show in the morning, and it was very clear. I was like, people are going to lose all their money if they're buying it here. And that wasn't to say people that shorted it weren't smart. They were great. But guys getting into it 2 or 3 days later, you know, those shorts never work. Stocks without a purpose, right? Meme stocks, you know, don't work because the people that are in them decide they're going to sell them to take profit so they can go buy a car or you know, or a new suit, or, you know, depending on how much they had. And the guys that bought them, as soon as they start going down, are like, oh, what did I just do? And so, you know, as I said, greed and gravity take over. And, you know, it was a kind of classic, you know, pump and dump. And we see it in the crypto markets often, right? You saw it with a crypto called Dogecoin, which was literally set up as a joke and got up to an $8 billion market cap.
Do you think there are similar themes at play, Mike, in terms of, broadly speaking, the type of people and the movement that drove GameStop higher all of a sudden, and what happened to Bitcoin, particularly the latest leg of Bitcoin that got it above 40K?
Yeah, listen, I think the underlying spirit is the same, of people being sick of the center, people being sick of the guys in the middle getting all the perks, right? The top 1% getting to buy IPOs and getting easy access to private equity and venture funds, feeling like the game is rigged. And that was that sentiment that comes out. I would really differentiate between some of the good cryptos. Bitcoin was really built with the purpose of being a store of value. So, you know, Bitcoin has a purpose, Ethereum has a purpose, where GameStop at 25 billion had no purpose, right? It was just a meme. And so I felt bad for the people buying it because I knew they were going to lose their money, where the money going into crypto really is that same revolutionary spirit, but they're buying it because they kind of believe in this whole new architecture that's being built.
So I get that difference totally, but despite that, you did put out a tweet earlier in the week, all short squeezes end with greed and gravity, don't overstay your welcome. Do you apply any of that sentiment to Bitcoin, you know, the don't overstay your welcome point in terms of...
I don't yet. But listen, so there was a squeeze in a token called the XRP, right? It went from 25 to 70, and I was like, yeah, it's going to go right back down. And it went right back down. Same with Doge. And so even within crypto, there are things that got squeezed that don't really have the community building on it, don't really have the purpose. Are a lot of people in Bitcoin? Yes. Are a lot more people getting into Bitcoin? Shockingly so. You know, Michael Saylor, who runs a MicroStrategy, right, who's famously gotten into Bitcoin with his corporate, has a 2-day online seminar for CFOs and CEOs. And it literally, there were so many people trying to get on it today, you know, the internet broke a few times. I mean, he's had over 1,500 CEOs and CFOs, you know, dialed in all day, learning about how he bought Bitcoin, why. You know, I'm speaking on his thing tomorrow at 4. And so he's got service providers, and there's an unbelievable appetite right now for corporates, for institutions, for big banks to learn about this system. I mean, I literally spent all my day literally on the phone or on Zooms educating new investor groups. And so I think we're really early still in this shift in crypto.
Well, sort of on a related note, but back to the Reddit drama for a moment, the SEC is going to be looking into this. We know that, whether anybody had ties to the company or whether there were big institutions sort of egging these retail traders on or posting on social media. Are you looking at that as a Bitcoin investor for a precursor on what could come? Do you expect a more tough regulatory regime from the Biden administration on Bitcoin?
I don't. Listen, you know, Gary Gensler is the new head of the SEC. He taught a class on blockchain at MIT. I was actually a guest lecturer here once. Gary is very fair. He's very progressive. I think if anything, he's going to look at the banks as these big rent takers and say, well, why are we charging so much on ATM fees? You know, he understands crypto. I think he'll regulate crypto in a fair way. I think there'll be a good set of rules, and I think all systems need a set of rules. And so the more clarity we get, what was frustrating with Jay Clayton is he never said anything. And so the crypto group was trying to figure out what was okay and what wasn't okay. The moment there's a clearer set of rules, you're going to see a ton more acceleration.
Going back, sort of similar, Mike, to my last question, but not quite the same, is do you fear the sentiment might shift, even though people might have bought the two assets for completely different reasons, long-term versus short-term, etc.? Do you fear a shift in the retail investor's mindset if they've experienced losses for the first time in a big way over the last month that maybe they didn't over the prior year or two, and that could affect whether it's Bitcoins of this world or Teslas of this world or the broader markets in total?
Listen, you know, we are in a asset-led bubble collectively fueled by Chairman Powell. And so the one risk that equities have, that Bitcoin has, that the whole system has is we're going to see spectacular growth coming out of COVID, right? If you see the graph of COVID, it's starting to plunge. And so between people who've got it and vaccinations, I don't know if it's April or May, some period in late spring, early summer, there's going to be an explosion of pent-up demand. We're already seeing, you know, tightness in industrial numbers, right? Even during COVID, we stopped producing a lot of services, right? People stopped going to hotels and whatnot, but the good stuff never slowed down, and the supply chain did, and manufacturing, you know, so there's inventory shortages. One of my favorite statistics is 25% of all homes built haven't been built. 25% of all homes bought haven't been built yet. Right? And so there's this backlog in housing. And so we're going to see a complete explosion of the economy. It's going to be hot. If Chairman Powell keeps his foot to the pedal, right, stocks are going to fly. If he flinches and says, oh man, I know I said 3 years without raising rates, but this feels kind of dangerous, and decides to, you know, take the punch away from the party early, tapers early, or decides to raise rates early, you could certainly see a giant reversal in sentiment, right? Everybody is betting on the fact that Powell is going to keep rates low forever.
That's sort of what I don't get, though, Mike, because Is it a macro story or not for Bitcoin? Because you just said that it's because there's so much adoption and all these institutions are looking at it and all these companies are looking at it. If you really feel that way, then it shouldn't trade like a macro asset like the dollar based on what the Federal Reserve is doing.
Sarah, there are two stories at the same time, right? There's an amazing macro backdrop to Bitcoin as a store of value, right, as a hard asset. And there's an amazing amount of adoption. It's why Bitcoin is digital gold. I think Bitcoin could rally even with gold going down. Now, if gold goes down a ton, it's going to certainly dampen how enthusiastic people are for Bitcoin. They're buying it because they are worried about the debasement of currency. They are buying it because they see, Canadian debt printing more debt in 1 year than they did in the entire history of their country. Same thing going on in the US, right? We're running $4 trillion deficits. Like, that's the story that's getting people to buy. And they're saying this is a better store of value than the ones we used to have. It is millennials and Gen Z's kind of money of the social network. It is a more transportable and storable, digital gold than gold. And so this transition is happening. It's happening at accelerated rate because we have this beautiful macro tailwind. And so the only real giant risk is if the whole world's wrong and that tailwind turns into a headwind because growth is so strong that Powell slams on the brakes, right? Yeah, then I don't think Bitcoin will go higher.
Mike, always great to catch up. Thanks for joining us.
Thank you, guys.
Mike Novogratz there. PayPal earnings just crossing. Kate Rooney's got them for us. Hi, Kate.
Hi, Will. PayPal with better than expected earnings and hitting some new records in terms of revenue and payments volume here. Non-GAAP EPS was better than expected. That came in about 8 cents above what Wall Street was expecting. That grew about 30% or 29% year over year. Revenue topped $6 billion for the first time ever for PayPal. That came in at $6.1 billion. Again, better than expected. Account growth. PayPal added 16 million net new active users in the quarter. They now have 377 million accounts total. PayPal is giving full year guidance. That was better than expected, 25.5 billion there. And Q1 guidance also looks better than expected. The company is expected to grow revenue at 28%. Total payments volume up 36% year over year. And crypto engagement. We don't have any metrics on cryptocurrency. Remember, they launched that option to trade things like Bitcoin in the fourth quarter. They do say those who are trading crypto are twice as engaged as the average customer. Will, back to you.
Kate Rooney, thanks so much for that. PayPal at 1.4% in after-hours trade. FANG Focus up next. Mike Santoli will have a look at the market's slightly less extreme concentration in the FANG stocks and what that could mean for investors. And looking for more opportunities like GameStop or AMC? Well, CNBC Pro did a screen of small-cap stocks with significant short interest, but also have upside compared to the sell-side price targets. So hated by hedge funds, liked by analysts, essentially. Names include American Eagle, Winnebago, and Jack in the Box. And the full list is available, cnbc.com/pro.
Use a single HR software? Nope. We use 11. 11.
Why do an expense report from your phone when you can do it from a machine that jams?
I just emailed my wife's social security number to the entire company instead of HR, so please come back.
How hard is your business software working for you? With Paycom, employees enter and manage their own HR data in one easy-to-use software. Visit paycom.com for a free demo.
Han, first off, we love each other.
I love Made In. I love what Made In represents. With the product, you could tell that there's extreme craftsmanship.
You would think a pan is a pan until Made In came along, and I went, wow, these things are something better.
The pots and pans that I'm using on an everyday basis are going to create wonderful products in my kitchen.
Those are the pans that we use at Alinea. We're going to have the best pans in the world at one of the best restaurants in the world.
We're hoping things will pick up by Q3. Yep.
Never settle with Power E-Trade. It has easy-to-use tools and some of the lowest prices. Don't get mad. Get E-Trade and start trading today.
Step up, prep up to help keep you free from the risk of HIV.
Descovy for PrEP, a once-daily prescription medicine that helps lower the chances of getting HIV through sex. It's not for everyone. Descovy for PrEP has not been studied in people assigned female at birth. Talk to your doctor to find out if it's right for you.
Descovy is another way to PrEP. Descovy does not prevent other sexually transmitted infections, so it's important to use safer sex practices and get tested regularly. You must be HIV negative to take Descovy for PrEP, so you need to get tested for HIV immediately before and at least every 3 months while taking it. If you think you were exposed to HIV or have flu-like symptoms, tell your doctor right away. They may check to confirm you are still HIV negative. Serious side effects can occur, including kidney problems and kidney failure. Rare life-threatening side effects include a buildup of lactic acid and liver problems. The most common side effect was diarrhea. Tell your doctor about all the medicines and supplements you take, or if you have kidney or liver problems, including hepatitis. If you have hepatitis B, do not stop taking Descovy without talking to your doctor. Ask your doctor about your risk of HIV and if Descovy for PrEP is right for you.
Get help paying for Descovy for PrEP. Learn more at stepupprepup.com.
When you order today.
Tonight, reopening schools. Why the CDC director says vaccinating teachers is not a must. Plus, who gets what from the president's relief plan?
The facts, the truth, the news with Shepard Smith, 7 Eastern, CNBC.
Welcome back. A busy afternoon of earnings. Qualcomm, the loser, missing on revenues, and the stock's down 7%. PayPal a bit higher, beating on the top and bottom lines. And eBay jumping on strong earnings and guidance, trading up nearly 10%. And now Grubhub numbers are also crossing, and Kate Rogers has them for us. Hi, Kate.
Hey, Wolf, the company coming in with a worse than expected quarter here. Loss per share, 41 cents. That's compared to analyst estimates of a gain of 5 cents per share. Revenues, $504 million, lower than the $506 million estimated. Active diners here, 31.4 million. That's up nearly 40% year over year. But the company is saying that commission caps that have been instituted in a lot of cities to try and help independent restaurants that we all know are really struggling during this time wound up hurting its profit here. Cities have capped commissions on deliveries to around 10 to 15%. So Grubhub, other delivery companies are now having to pass some of those costs on to consumers or eat them up themselves. And that is now weighing on the earnings here that the company just reported. So the stock taking a hit in the after hours here. Back over to you guys.
Kate Rogers. Kate, thank you. Let's go back to Mike Santoli now, taking a look at market concentration of big tech giants. Mike.
Yes, of course, it was the big story last summer in that huge NASDAQ rally. We got to a vast historic extreme. This is the top 5 S&P stocks as a percentage of the overall index, well above the year 2000 peak by this measure. And, you know, we did come off that. The market did broaden out. The percentage allocation to those big 5 stocks has eased back a little bit, although perked up right here recently, as you did see the moves in Alphabet and some of the other big mega cap stocks on earnings. So they also provide a tremendous percentage of the earnings. But if you looked at this long term, you said, you know what, maybe I'd rather own the equal weighted S&P 500 index, which you can do now through an ETF. Here's the very long-term performance of the equal weighted S&P against the market cap weighted. And it looks like, you know, this should seem like it's massive underperformance, but on a long-term basis, the equal weight has done really well. Look what it does. It bursts higher after a bear market low. That was the early 2000s. This is after 2009. And then as the cycle matures, as the bull market matures, it moderates and the market narrows. So who knows where we are right here, if this is actually going to follow that path. But that is why some people are thinking that we're ripe for outperformance by the kind of more egalitarian, equal-weighted version of the S&P, guys.
Mike, thank you. Taking aim at DocuSign and Adobe. Up next, Box CEO Aaron Levy on the company's big deal to enter the e-signature market. Plus, we'll get his take on the future of Amazon as CEO Jeff Bezos prepares to step down. We'll be right back on Closing Bell.
We all look at the same world, but we all look at it in a different way. Some just see beautiful lines. We see character. Some see a new motor. We see a new era. Some see what's there. We see beyond today.
Needles. Essential for pine trees, but maybe not for people with certain inflammatory conditions, because there are options, like an injection, Xeljanz. The first and only pill of its kind that treats moderate to severe rheumatoid arthritis, psoriatic arthritis, or moderate to severe ulcerative colitis, when other medicines have not helped enough. Xeljanz can lower your ability to fight infections. Before and during treatment, your doctor should check for infections like TB and do blood tests. Tell your doctor if you've had hepatitis B or C, have flu-like symptoms, or are prone to infections. Serious, sometimes fatal infections, cancers, including lymphoma, and blood clots have happened. Taking a higher than recommended dose of Xeljanz for RA may increase risk of death. Tears in the stomach or intestines and serious allergic reactions have happened. Needles, fine for some things. But for you, there's a pill that may provide symptom relief. Ask your doctor about the pill first prescribed for RA more than 7 years ago. Xeljanz, an injection.
You could think getting commission-free trades is as good as it gets, but you know better. At Schwab, free means more. You get commission-free online trades and quality trade executions on our powerful platform. Plus the satisfaction guarantee. Expect more from your firm. Trade up to Schwab, the better place for traders.
Hi, Mr. Wonderful here. I believe that startup investing is key to building wealth, but it's hard for everyday people to find access to these deals. Well, I've got good news. On Start Engine, you can discover hundreds of startups raising capital and begin building your portfolio today. For as little as $100, you can own a piece of the next great business. It's your turn to become a shark. Join me at startengine.com.
Shares of Box higher today after announcing it's acquiring e-signature company SignRequest for $55 million. Box CEO Aaron Levy joins us now in a First on CNBC interview. Very good afternoon to you, Aaron. Good to see you again.
Hey, thanks. Good to see you.
So talk us through this entering the e-signature market. I'm also interested that, following your tweets and stuff today, that this seems to be something you're going to offer for free to your existing clients. Is it already becoming kind of that commoditized, this service?
Well, actually, I don't think about it as being commoditized as much as our strategy at Box is we want the end-to-end platform for helping customers power all of their workflows around content. So that's everything from ingesting files to being able to collaborate on data, to being able to secure that content, and then ultimately drive mission-critical workflows around the critical content in an enterprise. And so for us, e-signature capabilities are just a really important pillar of that full journey that content goes through in a business process. So as we saw in 2020, customers all around the world were calling us saying, hey, we want to be able to go and automate and streamline our digital workflows, and e-signature capabilities are an important part of that. So that's why we decided to actually include this functionality in our business subscriptions and bring this the value of Box Sign to over 100,000 customers globally.
Do you think that there will soon be lots of companies offering the same service as opposed to the way that at the moment we all use DocuSign or perhaps one or two others?
Well, I think Box probably plays a unique role in the market where we are already the content cloud for over 100,000 customers. So we are the platform where companies are managing their most critical documents and mission-critical data in their enterprise. So I think it's a fairly unique situation for us to be able to include this within our Box subscription plans. And I don't necessarily think that will be a broader trend in the market, but obviously remains to be seen. But certainly for Box, we wanted to enter this space and be able to add way more value to our customers to help them really begin to streamline more and more of their digital workflows in the cloud.
I'm just looking at a stock chart, Aaron, of your company, Box. Over the last year, it's really not done much and is lower over the last 12 months. If you look at so many other cloud stocks, technology, software as a service stocks, they're all higher. They've all boomed as a result of the work from home, the stay at home, the move into cloud. Why hasn't yours?
Well, we have seen, I think, a healthy amount of growth throughout the past year. We did experience some headwinds in some parts of our business. The small business segment that we serve certainly was dealing with some of the real challenges of COVID, especially in the first 2 quarters of last year. We also mentioned on our last earnings call that our professional services revenue, this is really our consulting business where we help customers deploy Box, that actually had lower revenue because we saw more of our revenue coming in from existing customers that were expanding their existing usage of the product. And so they weren't requiring the same level of professional services. So, I think we're certainly happy about the performance and the growth that we saw over the past year, but we know that there's way more potential in bringing Box to even more customers and being able to expand even more broadly within the customers that we already have. And that's what products like Box Sign are all about, and ultimately building out this vision of being the content cloud for our customers and powering the end-to-end workflows for their content management.
I was wondering, Aaron, what your take was on the leadership transition at Amazon, and if you see it as a sort of another big vote of confidence in cloud more broadly. We've seen some cloud leaders take over at a number of these big tech companies now.
Yeah, I mean, I think at this point, you know, we probably don't need that much more endorsement for the industry. This is certainly the computing paradigm of the future. There's no question that we're certainly not going back from cloud computing. But Andy Jassy is an incredible leader. He's built an amazing business at AWS. He's a great partner of the startup and technology ecosystem. So I think he was probably a fantastic choice to run Amazon, irrespective of running the AWS business. But it also clearly is a testament to how powerful cloud has become at Amazon and how important they see that in the future of their business.
Are they a friend or a foe for you, Aaron? And how does Jeff Bezos not being at the top make a difference in that?
Well, I think they are a friend. We use their technology. We are, I think, significant partners in terms of how we work together. We absolutely enjoy all the benefits that that they've been able to deliver to the market in terms of lowering the cost of computing, creating more scale in internet computing. So we're really big fans of their mission and what they've delivered. And again, I think Andy has been just, again, a huge champion of this revolution. So him at the top of the company, I think, is a great sign for where Amazon is going.
Aaron, just quickly wanted to get your take on the craziness we've seen in GameStop share prices and the driving factors behind it. Do you celebrate all that's happened, or is it something that concerns you that there's a bit too much risk being taken?
Yeah, I think certainly the movement and the idea that individual investors can band together and, you know, ultimately, you know, share investment tips and potentially invest in companies that maybe are mispriced by the market. I think that's a positive thing. I think that what's really important, though, is that investors understand the risk of you know, when you start to have valuations that might begin to be dislocated from the fundamental value of the organization. I think that's always a risk in the investment community, whether it's individual investors, hedge funds, any type of investor. So I think the movement is a really powerful sign about the future of investing. But obviously, I think individuals need to just make sure that they're being very thoughtful about their individual investment decisions.
Aaron, thanks so much for joining us. Much appreciated.
Yeah, thank you.
Still ahead here on Closing Bell, we'll discuss PayPal's earnings beat with an analyst who thinks the stock can still rally a further 10%. It's up 2% in after-hours trade.
Municipal bonds don't usually get the media coverage the stock market does. In fact, most people don't find them all that exciting. But if you're looking for the potential for consistent income that's federally tax-free, now is an excellent time to consider municipal bonds from Henyon & Walsh. If you have at least $10,000 to invest, call and talk with one of our bond specialists at 1-800-376-4376. We'll send you our exclusive bond guide, free, with details about how bonds can be an important part of your portfolio. Henyon & Walsh has specialized in fixed income and growth solutions for 30 years and offers high-quality municipal bonds from across the country. They provide the potential for regular income, are federally tax-free, and have historically low risk. Call today to request your free bond guide. 1-800-376-4376. That's 1-800-376-4376. Enterprise Artificial Intelligence has the power to transform the most complex organizations and the world, delivering medical supplies where they're needed, keeping our armed forces at the ready, cleaner, safer energy, all thanks to 1 billion predictions per day. C3.ai is AI at a global scale, harnessing the power of data to build a better future. C3.ai. This is Enterprise AI.
Total market coverage in your hands. Now on the CNBC app. Up-to-the-minute updates, breaking news alerts, everything you want to know when you need it. Stay connected, stay informed.
Dad, it's a video call. Hold the phone in front of you.
How's that?
Get Mom.
Power E-Trade gives you an award-winning app with 24/7 support when you need it the most. Don't get mad, get E-Trade and start trading today.
Service at the ready. At Mercedes-Benz, it's not just a job, it's our mission. From our expert technicians armed with state-of-the-art tools and technology to genuine parts. One knows your vehicle better. To learn all the ways we can be at your service, call, click, or visit a dealership near you.
The world turns around and around. Very far away.
Dylan Blue, Pour Femme, by Versace.
And $100 off.
Welcome back. Time for a CNBC News Update with Sue Herrera. Hi, Sue.
Hello again, Wilf. Hello, everybody. Here's what's happening at this hour. Members of far-right groups involved in the Capitol Hill riot may be charged under a federal law usually used against organized crime. Reuters says the Justice Department is considering the use of the RICO statutes that call for long prison sentences. Groundbreaking for President Obama's library is set for this fall. The Obama Presidential Center will be built on the south side of Chicago on a 19-acre site. Virginia's Senate has passed a bill which would abolish the death penalty, a major change for the state that is second only to Texas in its number of executions since the death penalty was reinstated in 1976. Virginia's House and governor must still approve the measure for it to become law. And in the UK, a nationwide round of applause, a big clap for the late 100-year-old veteran and healthcare fundraiser, Captain Sir Tom Moore. Prime Minister Boris Johnson took part, so did healthcare workers and evening commuters as well. Moore's family members say they are incredibly touched by the tribute. You are up to date, Sarah. I will send it back to you.
He's an international hero.
Oh, absolutely.
It's amazing.
And so inspirational and a good soul. And I was so glad that he was knighted by the Queen. I just was.
Yes. How about that? He's made it through a few news updates this year. Sue, thank you very much.
You got it.
Or in the last year, I should say. Up next, shares of PayPal are moving after reporting earnings up more than 23% revenue growth. Looks like fourth quarter payment volume rose 39%. The stock's up 2% after hours. We're going to dig in behind those numbers as to whether the stock is still a buy after a monster run. We'll be right back.
CNBC News Update is sponsored by Comcast Business. Bounce forward at ComcastBusiness.com.
I was very proud of the way that our teams pivoted overnight to working from home at scale.
With Salesforce, because of the technology and the cloud scalability, more and more people could participate in giving their customers assistance in a very timely, accurate fashion.
Salesforce is a great partner, and the solutions today are going to continue to evolve and improve based on what our customers are telling us.
This is Decision Tech. Find a stock based on your interests or what's trending. Get real-time insights in your customized view of the market. It's smarter trading technology for smarter trading decisions. Fidelity.
Obsession has many names. This is ours, the new Lexus IS.
all in on the sports sedan.
Lease the 2021 IS 300 for $359 a month for 39 months.
Experience amazing at your Lexus dealer.
So, what's your plan for retirement? See the world? See the grandkids? Keep doing what you love? However you plan to retire, you need to be prepared. Do you have a financial plan? Do you have a tax strategy? How much of your portfolio can you afford to withdraw? Learn more about these and 96 other retirement topics coming your way in this free guide from Fisher Investments.
If your portfolio is over $500,000, call for Fisher's 99 retirement tips. Our free guide shows you how to make your retirement more secure, even in volatile times like these. Call 1-800-940-1144. We'll also send you a timely bonus for a world upended by uncertainty. Fisher's Stock Market Outlook shows you where we believe this market is going and why. Get the insight you need right now. Call for your 2 free guides. 1-800-940-1144.
Don't just retire. Retire well.
The highest level of performance requires agility, speed, and skill.
This is the A game. Welcome.
Where intuition is inherent, where systems learn to become intelligent, automation is effortless, and technology and people are one in an enterprise.
I know the A game, and the A game is business at its best.
We call this the Autonomous Digital Enterprise from BMC.
PayPal shares up 2% after hours, beating revenue and earnings estimates. The stock building on a year of epic returns, more than doubling in the last 12 months. Guidance also coming in above forecasts, and for the quarter, payment volumes rising 39%. Joining us now is Managing Director at Wedbush Securities, Moshe Katri, with an outperform rating and a price target of $275 for PayPal. Moshe, how much longer can they continue to put up numbers like this?
Oh, we believe that given the ecosystems that the company's building in front of merchants and consumers, revenue growth could actually accelerate. On top of that, you have scale for margin expansion, given the fact that e-commerce volumes typically carry much, I would say, premium fees. So top line growth accelerating, better margins. You have 70 million new accounts that were added last year. They still have to get monetized. So from our perspective, you have an earnings power for the stock of $9 to $10. The 275 price target that we have is probably conservative compared to our peers. So in our view, the stock will continue to work higher.
Where are we on the curve of monetization, particularly apps like Venmo? Is that already starting to pick up, or is it still a little way off?
Sure. Venmo is only one of the things that they're trying to do in terms of the consumer-facing platform that they have. There's bill pay, there's P2P, there's money transfer. These are all kind of different services that they're trying to sell their active consumer base. Venmo is very early in that process. It only has about 60 million active users. And again, that's out of 380 million that the company has as a whole. So there's more to go there. There's more to go in terms of margin expansion, specifically from scaling the scale that you're getting from Venmo. This is only one part of that business. The other part of the business is merchants. They cater to 28 million merchants, and they're still building that ecosystem of services and solutions that are selling into that merchant base as well.
Moshe, thanks so much for joining us. Much appreciated.
Sure.
So to come, more on this afternoon's big earnings movers. We'll dig into eBay and Qualcomm results moving in opposite directions.
It started in 1898, helping clients and communities invest in hospitals and schools, roads and bridges, farmland and forests, small and large businesses, and sustainable cities around the globe. It continues today, more than 120 years later, investing to make an enduring impact on our world.
10 years ago,
We found a Loan Depot because we were confident we could deliver the American dream of home ownership to individuals and families across the nation.
Serving more than 27,000 customers a month, lowering payments, providing jobs, and investing in neighborhoods and communities nationwide.
We know what it means to put down roots and bring dreams to life.
At Loan Depot, we know
home means everything.
Tonight, reopening schools, why the CDC director says vaccinating teachers is not a must. Plus, who gets what from the president's relief plan?
The facts, the truth, the news with Shepard Smith, 7 Eastern.
We're hoping things will pick up by Q3. Yep.
Never settle with Power E-Trade. It has easy-to-use tools and some of the lowest prices. Don't get mad. Get E-Trade and start trading today.
I think the sketchy website I bought this turtle from stole all my info.
Ooh. Have you looked on the bright side?
Discover never holds you responsible for unauthorized purchases on your card. That's my turtle.
Fraud protection. Discover something brighter.
All right. Who can break this down for me?
Ooh, Coach Saban. I crushed out to the mailbox, and there it was. A medical bill for $1,200. I had no idea I'd have to pay that.
That's right. It's hard to know exactly what your health insurance is going to cover, so you gotta protect your blind side. Aflac. Aflac pays you money directly to help with expenses health insurance doesn't cover. Really?
Aflac. Get help with expenses health insurance doesn't cover. Get to know us at aflac.com.
How language is learned.
Up next, two social stocks with massive 12-month returns due to report earnings tomorrow. We'll preview what's to watch from Pinterest and Snapchat. And February is Black History Month, and we're honoring some of our CNBC contributors. Here is host of NBC's American Ninja Warrior, Abkar Baja Biamir, on his professional inspiration.
Two people that really inspire me, I'd have to say LeBron James and Maverick Carter. I love the teamwork that they have. You can see the camaraderie, you can see the business partnership, but I think the overall message is you can bring and trust people from your community to move you forward. That's the big inspiration in their partnership.
This is what community looks like. Caring for each other. Protecting each other. And as the COVID vaccine rolls out, we'll be ready to administer it.
Sales are down from last quarter, but we're hoping things will pick up by Q3. Get it? Sorry about that. What? It's.
You all right?
Never settle with Power E-Trade. It has powerful, easy-to-use tools to help you find opportunities, 24/7 support when you need answers, plus some of the lowest options and futures contract prices around. Don't get mad. Get E-Trade and start trading today.
The holidays weren't exactly smooth sledding this year, eh, Santa?
No, but we came through smelling of mistletoe.
The Now platform let us identify problems before they became problems.
If only it could identify where my ball went.
Oh, this you?
Nah, mine had green lights.
Whatever your business is facing, let's workflow it.
Maybe I should workflow my swing.
Service now.
Keeping your oyster business growing has you swamped. You need to hire.
I need Indeed.
Indeed you do. The moment you sponsor a job on Indeed, you get a short list of quality candidates from our resume database. Claim your $75 credit when you post your first job at Indeed.com/promo.
Hi, Mr. Wonderful here. I believe that startup investing is key to building wealth, but it's hard for everyday people to find access to these deals. Well, I've got good news. On Start Engine, you can discover hundreds of startups raising capital and begin building your portfolio today. For as little as $100, you can own a piece of the next great business. It's your turn to become a shark. Join me at startengine.com.
Healthy Returns events give you an edge.
February 9th, join Healthy Returns Spotlight for exclusive access to the most influential voices in healthcare. Register now for this virtual event at cnbcevents.com/healthyreturns.
Tomorrow we get earnings from Pinterest and Snap. Julia Boorstin has a look at what to expect, Julia.
Well, Sarah, Snap and Pins are both expected to benefit as ads rebound from the slowdown we saw earlier last year. That's a rebound that benefited Google and Amazon in this past quarter. Now, Snap's projected to grow its revenue 53% in the quarter. Pinterest is projected to grow its revenue 61%, as both are expected to benefit from direct response ads helping drive e-commerce during the holiday quarter. Now, the two stocks have both soared over 225% in the past 12 months, with buyer overweight ratings from about 2/3 of analysts. Now the question is what the outlook is and whether the past year's gains can continue into 2021. Sarah.
Julia Boorstin. Julia, thank you very much. Mike, as we look to tomorrow and figure out whether this win streak can continue, it's been 3 days in a row now coming off of last week's weakness. You know, I was just looking at the 10-year Treasury note yield. Really hasn't done much, 1.13%. What's the primary driver? Is it the realization that earnings are coming in better than expected, fundamentally driven by improvements in the economy like ad spending?
I think it's confirmation of the general consensus, even of a few weeks ago, that the economy is definitely getting into gear. Vaccinations are spreading, cases are coming down. So the Treasury yield staying above 1.1%, I think, is net bullish. As I mentioned, the 30-year up close to 2%, yield curve steepening. All that is fine. We have had a fade in the last couple of days. I think earnings are largely baked in, even though they've been incredibly positive. Also, look at some of the knock-on effects from PayPal not DoorDash, coming off of Grubhub, as well as some of the takeaway from the miss on Qualcomm as well in those sectors.
We are out of time here on Closing Bell. Thanks so much for watching. Fast Money starts right now.
I'm Melissa Lee, and this is Fast Money. Tonight's trader lineup: Guy Adami, Tim Seymour, Karen Feinerman, and Dan Nathan. Tonight on Fast, here come the regulators. Treasury officials demanding answers as a Reddit rebellion fuels wild market swings. So what needs to be done? What should be done? What can be done? Wall Street's former top regulator, Jay Clayton, will join us straight ahead. Plus, we are tracking the after-hours action in Qualcomm and PayPal, both stocks on the move after reporting results. Their calls are underway. We'll bring you the headlines. And later, a $7 billion deal lighting up the cannabis space. How to trade it straight ahead. But we start off with game stopped or game on. Check out today's price action. Wall Street's hottest stock, maybe once hottest stock. GameStop gaining more than 2%. While other heavily shorted names like Koss, AMC, and BlackBerry also posted gains. Robinhood easing some trading restrictions today, allowing users to buy fractional shares in GameStop and AMC. But these stocks are still down big for the week. So what is the current state of this Reddit rebellion that has captured Wall Street's attention? Let's bring in Bob Pisani. So, Bob, we got a couple of big questions for you. Number one here, can we actually say that the rebellion is over based on what we've seen over the past couple of days, when we know that restrictions have still been in place on trading the stock?
I think we found, I don't think the mania is over, but it's found a level, and I think it's subsided. I mean, just look at the volatility today. It was remarkably low. And I know you mentioned restrictions, but what restrictions? I mean, there's some on Robinhood, but it traded almost 50 million shares. I mean, a heck of a lot of people are trading Robinhood stock. It's not a bunch of Russians sitting out there. So there's very few restrictions out there, and I don't think that's a big inhibition for the stock right now.
Has short interest come down enough to the point where we say that short squeeze is over? We know that it's dropped significantly over the past week or so, down by more than 50% or something like that, but it's still pretty high.
It's a moving target. I see different numbers every day, and it's actually fairly difficult to get a real accurate number. Clearly, we can say it's way down. Now, here's my bet. I bet you'll see new shorts on this that will start coming in. I wouldn't be surprised if we got a level at 50% and it stayed there for a long time, because a lot of people still feel even at $90, this thing is ridiculously overpriced. There were plenty of people who had $10 and below numbers on this just a few months ago. So it's a moving target, but I wouldn't be surprised if there were new shorts coming in the weeks ahead.
All right, last question we have for you tonight, Bob. Regulation, where would it come from? Who would be the target?
Yeah, Yellen's really being smart here. She's being a leader. She's going to channel all this energy in. She just knows what she's doing. I'll tell you what the concern the street has is this could morph into some kind of broader investigation. So FINRA has always, and they're the regulators of the brokers, FINRA has already said, we're looking at gamification of trading. That's a hornet's nest, because immediately you can start saying, is the site you have suitable for your investors? Do you have balloons going off when people make a trade? You have hot trades of the day at the top? Would this induce people who would not normally make these trades to do that and engage in behavior that is not suitable for their type of investing? That's a real hornet's nest, Melissa. Now, I know the SEC is looking at market manipulation. That's a different story. I think that's going to be a very tough case to prove. I'm not sure that what happened here with Reddit confines with the normal indications of some kind of pump and dump operation. I think they're going to have a hard time proving that particular one, Melissa.
Yeah. Bob, thank you. Bob Pisani. Okay. So that brings us to the question we started this whole show off with, and that is game stopped or game on. What is the state of the rebellion right now? Guy, what's your 2 cents on this?
It's not going away. Maybe it's slowed down, but the world's changed, and it's interesting that Bob mentioned the gamification of Wall Street, because that's a term we used, I think, 7 or 8 months ago when we had Dave Portnoy on the show, talking about how in the absence of sports, people were finding the stock market, and it was effectively the gamification of trading, investing, whatever term you want to use. So I think, listen, if things had lasted a week, a month, maybe I'd say it's going to go back to the norm. This has now lasted over 7.
Hello, hello. How are my levels? Welcome, welcome. Hello, everyone. Hello, hello. How are my audio levels? I had to mess with some stuff, so let me know if I sound all right here. Perfect. Still got ASMR level audio. I haven't received any painting updates yet. Let me just double check. Oh, actually, we do have a painting update. I'm going to wait a little bit till more people come in, though. Hello, hello. The meeting was good. It was across town, so of course it was quite a while for me to be gone. I tried to get back as early as I could. 155,000 subscribers. Thank you, everyone. If you wouldn't mind just giving this stream a like now that I'm back, we can boost this up a little bit more. Almost at 156,000 subscribers. Yeah, AMC's looking great. Let's pull this back over, just in case you haven't been watching this for long enough. Let's see here. After hours are down 1.5%, but 14.5% for the day. We can't complain there, can we? Let's see. I haven't really looked at these much in the last few hours. GameStop up 2% for the day. Wow, so AMC was the winner of the day, I guess. Pretty much everything else is up, though. Those of you who jumped in on HCMC really hit it off today. Welcome, welcome. Thank you, Daryl. Mic check 1, 2. Check, check. How are we feeling today after this AMC rally? Feeling a little bit better than yesterday? I'm feeling a little bit better. Let's see how we got some people joining the stream again. I'm not sure. Do you guys have any recommendations to... I'm sure there's a lot of people who joined the stream and they're like, what the heck's going on here? There's no one even here. There's no way for me to say, hey, I'm back. Anyways. Yeah, I'm still down too. Let's see exactly what I'm down. Let's see here. I am down. It's definitely worse off yesterday. So today I went from negative 1,000 on my AMC holding to negative 560. Oh, man. Oh, we got a screenshot here from, wonder if I can show this. One of my workers just sent me a screenshot. A bunch of my employees were watching this stream earlier today, and they took a funny screenshot. I don't know if you can see this. No, probably not. Just got sent a screenshot of someone who super chatted $4.99 because I look cute, and they were all laughing about it over in the office. That's pretty hilarious. So we have a painting update of the Tarzan painting. Once some more people jump in here, we'll unveil that. I took a look at it. It's looking pretty good. There's no OnlyFans here. However, if I really wanted to make some money, that'd probably be the way to go. Up 14.7 for the day. Really cannot complain. There were so many people who were saying it was going to tank even further today. So I'm glad for all of you who are watching that that is not the case. You might focus? Hopefully. This is a good point. The first organism in space was actually a chimpanzee. So let's make like that chimp and take this straight to the moon. Is this not? Do I need to turn up the volume a little bit? Let me know. I just had to mess with all this mic setup, so if I need to change any levels, let me know. Someone says, you think the squeeze is tomorrow or Friday? I wish I had that knowledge. If I had that knowledge, I would be letting you guys know, but anything I say would be a guess. It might not even happen Friday, if we're being honest. It could take a week. It could take 2 weeks. Video quality is low. Let's see here. I can see if I can have someone come in here and refocus it. Let me switch back over to this real quick. Alrighty, let's see what WallStreetBets has got to say this afternoon. Oh, we got the YOLO update here from DFV. Let's see. He's up $254,000 today. Hopefully you can see that. 254,000 on the day. Still up 1,000% overall. And total portfolio of $22 million. If you're not familiar with him, he took about $54,000 and turned it into $48 million on GameStop stock, and now it's back down to $22 million, and he is still holding. He says he's going to back off of the daily updates because this screenshot that he's doing every single day is far too much work. Oh, you're going to refocus it? Okay. I'm going to get the camera refocused here. I'll be right back. Doesn't seem too bad in the zoom in.
Yeah.
Maybe it's lighting.
Who's saying first?
Let's see. There was just a few people in the chat.
Can't see those ivory greens, huh?
Yeah, I guess not.
That's for some
All right, let's see here. Oh, there's my Shark Boy and Llama Girl. Let's make this full screen. Yeah, that looks better. It must have just been a little bit fuzzy. Thank you.
Try to get past the leg.
Video compared
I'll
to
be
you.
here for 10 minutes.
Okay, cool. Thank you. Okay, we got half of you saying the quality's good and half of you saying the quality's bad. Let me turn up the mic just a tiny bit. All right, the mic's a little bit louder now as well. Now the stream is not pre-recorded. Looks good, looks good. How long will the stream be today? I'm not sure. Quality's fine. I'm going to do some stimulus updates later on here. We got some stuff to talk about there. Audio's good. Okay, everything sounds and looks good. Thank you very much. Thanks for bearing with me there. All right, let's see what's going on in this post DFV. Let's see. What's an exit strategy? This guy is just crazy to me. Let's see. Yeah, I hope he keeps doing daily updates or posts something on YouTube or something. I mean, what's he doing all day long besides looking at his fat bank account? But he's still in. Anyways, most of you are holders of AMC anyways. I feel like this was people waiting for me to finally get back on this stream. The stream has now been going for 8 hours. 8 hours flat. I don't know how many of you have made it through that whole time, even while I wasn't here. You guys are the real MVPs if you've been here that whole 8 hours. I don't know, I'm still thinking about doing a potential just stream marathon tomorrow. I would like to see some AMC billboards, if we're being completely honest. Once we get back up to 2,000 viewers, I'll unveil my Tarzan painting progress. Not my painting. Someone is painting me as Tarzan battling the hedge funds. And it's pretty hilarious. If you have any memes to send me or good articles for today on AMC or GameStop or anything that's going on, email that to maxmahershow@gmail.com. Let's check what the total buys and sells here on Fidelity were for the day. Look at that. GameStop up to 73% buys. Still only a 2.6% change on the day. It just seems odd to me. AMC, 64% buy. So that just slowly increased throughout the day. Let's see what we got here article-wise. Headphone maker cost adds 28% to $25.59 today. Oh, movie theater chain AMC added 15% to about $9 a share. That's kind of non-news. Let's see. Maybe I should edit the title so that we know I'm actually back in streaming. Welcome everyone who's joining us back. Alrighty. After hours, looking okay. I'm sure most of us are still down on our portfolios unless you bought really early. I know there's some of you out there who bought at around $5. Someone says, how can you have 70% buys and only a 2-point gain? We had someone earlier who commented a potential reason would be people might be buying really small amounts of shares. You know, they might buy 1 share of GameStop, where they may be selling more than that, or, yeah. It doesn't make total sense to me either, but that's the only reasonable explanation I've heard so far. Share price of $12.80. You bought in at $12.80 at AMC. You know, there's a lot of people who bought in at like 15. I think my average price is like $10.99 or something like that. Yeah, I missed it. How did we do on these 1 at 1, 2 at 2, 3 at 3 business? I wasn't really able to, let's see here, 10:30. Oh, I'm not depressed. I'm feeling good. So this would have been 130. Okay. So I guess the 1 at 1, 2 at 2, 3 at 3 probably worked out here, judging by this chart. Crazy volume. I mean, at 3 o'clock, we saw 51 million shares volume. That's more than double normal average volume. Or we're actually right about double. I think normal average volume is 27 million a day. We had 51 million in this hour. Let's see if I can do the day. How much volume was in the day? So today we had 217 million shares in volume. And that's insanity. Just a little green guy. Got more and more people joining the chat here. Welcome, welcome. If it were to get squeezed, how high is the potential of the stock to go up? I mean, theoretically, it's an infinitely high level. It all matters as to when people start selling, when it becomes squozed, as they say. Basically, because what happens is you have all these shorters who are trying to buy back shares, and if there's a bunch of people just sitting with shares, and you're like, not going to sell, then the price just keeps going up and up and up until someone eventually sells. You know, and people will sell along the way up. But theoretically, so many people will need to, or so many shares will need to be bought during the squeeze that it'll just shoot up. And that's why people like with GameStop are saying that we could see upwards of $1,000, $5,000. I don't think that's going to happen with AMC because they have so many more shares. Like, I don't remember exactly, but like 4 times more shares. So it's there's more buying. You would have to have way more pressure to make the price go up that high. Plus, it's not as shorted. But if it were to squeeze, I guess it wouldn't be impossible for it to hit $100 or $200 or something like that. But that would still be pretty insane. I'm not saying that that's definitely going to happen. Okay, so we got 2,000 people here. We'll do a Tarzan painting update. Let me pull this up out of the email. Excuse all my tabs. I probably look like a psychopath with 50 tabs open. Okay. Oh, actually, it looks like it's done. Oh, no, it says almost done. Okay. So Christopher here is almost done, he says, with, looks done to me. With me as Tarzan, we were talking about Tarzan yesterday, versus the theoretical hedge funds, which he turned into a tiger. Okay, so we're going to pop this over. And here we are. Me as Tarzan. This is so hilarious. This is just started yesterday because of this, because we were talking about Tarzan. Oh, that's awesome. If anyone else wants to make some art, I will showcase it on my streams, because this is just hilarious. If someone wants to make me as the Geico caveman, be my guest. Just go for it. Make me the Geico caveman. So let's see the resemblance. I'll do a... Wait, I gotta turn this way. It's pretty close. He might be a little bit more pale than me. Okay, let's see what other emails we have here. Thank you, Christopher. He says it's almost done. I'm not sure what else he has left to do. Got a bunch of emails here. Let's see, we got someone who said they're trying to sell $270 puts on TD Ameritrade expiring Friday, and they said they're not taking put orders due to security of being hard to borrow. Huh. I'm assuming that's for GameStop, but I have not seen that. Has anyone else had issues getting put orders through? Let's see here. Okay, this is titled A Great Simple Explanation of What's Happening with GME and AMC. So let's take a look at this. What am I looking at? The chart shows outstanding shares of the company GameStop in black, and the percentage of those shares failed to deliver in red on any given day. So you can zoom in using the buttons above the chart. I don't see any buttons above the chart. Okay. Understanding the relative value, i.e. the percent of fails to deliver to outstanding shares, gives a better picture of the scope of the issue. Not enough people are talking about this. Would it be okay if 1%, 2%, or 4% of your bank deposits failed to show up if 3% of planes crashed? Okay, someone actually sent me this video earlier, so I guess we'll check it out.
On the left has savings, the fellow on the right has stock. Grandma's going to buy the stock with her savings. The money in stock has to change hands. That's called settlement. In most countries, they change hands 2 or 3 days after the trade. That's called T+2 or T+3. And importantly, the money and stock change hands simultaneously. In the U.S., however, while we operate on a T+3 system, the mechanisms for exchanging money and stock have become divorced, so it's possible for money to settle whether or not the stock settles. In reality, grandmas aren't calling strangers making stock deals. We have stock brokers. Stock brokers work in places called broker-dealers or BDs. Merrill Lynch, Goldman Sachs, Bear Stearns, E-Trade, they're all BDs. I'll represent them as blue circles. There are about 2,000 of them in this country, arranged in a hub and spoke system around a central organization called the Depository Trust and Clearing Corporation, also called the DTCC. The DTCC acts as a central back office for Wall Street, where 3 days after a trade, when it's time for money and stock to settle, it settles at the DTCC. How does it settle? Trades can be settled through the DTCC. In reality, however, settlement usually occurs within the DTCC. Grandma's talking to her broker, the fellow on the right talked to his. These brokerage houses have accounts at the DTCC, and when their customers are trading out at the spokes, what really happens is the money and stock shift around within accounts at the DTCC. There's also something called X-clearing. That's when two broker-dealers settle directly with each other external to the DTCC. 2.5 billion shares per day trade on the New York Stock Exchange and NASDAQ. These trades settle through the DTCC, within the DTCC, and back and forth directly among broker-dealers via X-Clearing. Let's get back to our simplified system of grandma and a stock seller and see how the system handles delays. Suppose they do a trade when it's time to settle. Grandma's money settles through the system, but something comes up that blocks the fellow from settling his shares through the system. There could be all kinds of legitimate problems. He might be using paper stock and it's stuck in a bank vault, or it's at home lost in the closet or something. Maybe he signed the wrong piece of paper on some form. For one reason or another, he can't settle the trade, and you don't want the system to just grind to a halt. So the system creates an IOU. But note, it's not an IOU for money. It's an IOU for stock. It gets sent through the system. Grandma doesn't see that as anything other than normal stock. Her brokerage account says that she holds stock, not an IOU for stock. In most respects, the whole system just sees this as normal stock. It's only in the back offices that keep track of what's a IOU and what isn't. Assume that on day T+4, T+5, the blockage clears up, the fellow is able to send his stock through the system, and he wipes out his IOU. Great. Imagine, however, that a guy is issue some stock IOUs to as red, just to make them easier to track. How does this look at our hub and spokes loophole? In 2006, people are saying naked short selling, and they're saying fraudulent stock transfer. There are subtle differences, but the common denominator is that the IOUs are not sincere IOUs. They were strategically created. We're going to mark them as FTDs for failure to deliver and paint them as red just to make them easier to track. How does this look at our hub and spoke system? Notice the miscreant on the right has the red desk. I'm going to paint his BD red too to signify that the BD might be a crook like his client, or maybe the BD is the crook. Maybe the BD's honest, but it's a broker who turns a blind eye to his miscreant client because the client is, say, a big hedge fund that gives him millions of dollars a month in commission. So he starts trading with Grandma. The FTDs flow through the DTCC and bounce around within the DTCC. If, say, for every 100 legitimate shares, there's one FTD, the system's going to keep on working. It's not going to grind to a halt. But if we ever reach the point where for every 100 legitimate shares, there's 50 or 100 or 200 of these FTDs, it'll become like sand in the bearings of the economic engine. Now look at the effect on a company. I'll show you basic supply and demand curves. Imagine there's a stock with a certain amount of demand out there, a certain amount of supply, and the point where they meet is $40. The miscreant shows up and starts gaming the system. He sends out FTDs. Since the system sees these FTDs as normal stock, he's increasing the supply of stock, of a parent stock. And when you increase supply, you shift the supply curve to the right.
Sorry, this is
he
almost
does it
over.
again, generating FTDs, shifting the supply line to the right as he goes. Eventually, he shifts the supply line far to the right. Now notice where the supply and demand lines cross. Of course, the price collapses. The $40 stock turns into a penny stock. Most investors think penny stocks are the Wild West. They stay away, so demand dries up. As demand dries up, a ceiling forms over the stock. The FTDs in the upper right started off life as stock IOUs and sincere stock IOUs, but IOUs just the same. Now that it's a penny stock, these FTDs become penny IOUs. Penny stock, penny IOUs. The fellow at the right has the money, the firm's a penny stock. A vicious cycle ensues where the company collapses. Other businesses stay away from the firm. They say, gee, it's a penny stock. Is it going to be around? They stop doing.
Okay, that's enough of that for now. Okay, so what are threshold securities? So it says GameStop has been on the New York Stock Exchange threshold security list for 37 consecutive days, excluding weekends and holidays where the market was closed. What are threshold securities? Threshold securities are equity securities that have in aggregate failed to deliver position for 5 consecutive settlement days as a registered clearing agency, e.g. the National Securities Clearing Corporation, totaling 10,000 shares or more and equal to at least 0.5% of the issue's total shares outstanding. Michael Burry, the hedge fund manager of The Big Short, tweeted about GameStop. Below is a screenshot, as he is known for deleting his tweets. The original tweet has since been deleted. May 2020, relatively sane times for GME. I called in my lent out GME shares. It took brokers weeks to find my shares. I cannot even imagine that the S storm in settlement now. They have to extend delivery timelines. Okay, so we can see here how the fail to deliver compares to other companies. This section is under active research. Oh, so we don't even know. Okay, so basically the fail to deliver seems suspiciously high, which could indicate funny business. And this is on GameStop. All right. Until we have more proof that there actually is funny business, or this is weird relative to other publicly traded companies, I don't want to put too much stock into it being true or not. I think we covered this, that GameStop is hiring some new board members. I think they were hiring a CTO. Chewy founder, he's on the board. I think he replaced some board members. They're trying to do a technical rally, trying to be the hub for all things gaming. Also, Robinhood is hiring for a lobbyist. There's a lot of people who believe in GameStop just as a company beyond the crazy times that we're in right now. I know most of you are holding AMC, so I won't spend too much time. We got an email. He says, if you were in the stream earlier, this guy says, I'm the idiot who called the dude Mike earlier, but here's a meme. He called him Mike Portnoy instead of Dave Portnoy. But here's a meme anyways. Let me zoom in. Accurate. Put those stimmies to use. Let's see what other emails we have here. If you have any good stock memes, AMC memes, go ahead and email those to me, maxmahershow@gmail.com. Don't email maxmaher@gmail because I don't know who that is. And apparently they received a ton of emails yesterday and they're not happy about it. Or, you know, I guess if you do email them something funny, then forward their response and your email to Max Maher Show so we can look at that and laugh about it. Okay, this person wants me to bring up the fact that most brokers have stock lending programs. We talked about this a little bit, but most brokerages like Webull, this is Webull, you're auto set to be able to lend out your stocks to shorters. So you'll want to make sure that you're not doing that. I can't remember the exact path to take in the settings on Webull, but someone can probably comment it down in the chat because it was like 5 clicks to make sure that you're not lending your shares to someone who could potentially short. You want your shares to be in a cash account. Some brokerages you might have to call. I would just do a quick Google search, whatever brokerage you use, to make sure that you're not doing any stock lending. So it looks like Fidelity also does stock lending. Let's see. And TD Ameritrade also does. So I'm sure most brokers do. So see here. I don't have stock predictions on any stock. You know, whatever I say would be a guess. As much as I wish I had the answer, I unfortunately don't in most cases. So as many times as you want to ask, you know, I'm just going to say I'm not sure every single time. All right, let's go back over to see what we got on Reddit here. Let's see what they have on the... Where's the daily thread? GME overnight thread / SEC intern meet and greet. Let's join that. So Starving 030 asks, is there any truth to the 220% shorts for GME now? If so, how does that affect the little guy? We're just really not sure. We looked into that earlier. I probably still have this tab up. Yeah, here we go. This is why I keep up all my tabs. So you can see here that the short interest is reported twice a month. And the last time it was reported on the 29th of January, and the due date was on the 2nd of February. So, you know, between then is when the dates are, or the short interest is reported. So anytime after these dates, it's just estimates based on trading volume as to what people are surmising as the short interest rates, which, if you don't know what short interest is, it's basically the percentage of shares that are shorted. So we've seen reports, let's see. Reports come all across the board here. So on this site, looks like a short decrease of 13%. What was the website we were using? This one. Here we can see, I think this is the one, yeah. So this one says short interest is 226%, which means 226% of all the shares are shorted. There's 69 million shares, I think. So that's like, what, 140-ish million shares shorted. We just don't know for sure if that's totally accurate. A lot of the mainstream news is reporting that's like 40%. Other people are reporting that it's like 121%. I haven't seen a source with that, but I've seen that number float around a lot. It's just hard to say exactly. I think it's estimates, and it'll only be estimates, honestly, until we hit, you know, February 12th to February 17th. I wish there wasn't even this range. I wish it was just due on that day. So it's a little bit concerning to me that short positions could change a little bit, and we wouldn't fully realize it. I mean, if there was a huge buyback, we would notice that volume change. Then we'd see some buy pressure, but it's a little bit frustrating that we don't have that in real time every day like we wish we would. Someone says those spike glitches earlier were short shares buying $16 limits. Please raise your limits to $100 minimum. I can't confirm or deny if that's true. Thank you for addressing stock lending. I've been trying to inform people margin accounts will also lend out cash positions, not financial advice. Just my own personal experience. Interesting. I haven't heard if they'll lend out cash positions or not, but I would assume for most brokerages you can turn off lending of shares without having to even call. I mean, why would they want to have to take a phone call every time someone turns that off? It would make sense for them to just be able to turn it off online. Yeah, you guys have all been lured into this cult, this stock cult, where we're all going to get rich. Someone asked, what are the chances of GameStop getting up to 160? I mean, we've been more than double 160, so I mean, I would not be surprised if we saw it again sometime this week in 160. If I had to put a number, just I guess because you super chatted, this isn't advice or don't take my word for it, I'd say it's probably a 50% chance that we see numbers that high again sometime this week. Thank you for all these super chats. Yeah, I know for sure on Webull it's really easy to turn off share lending. Let me just see if we can find a quick solution. Let's see if this tells us how to turn it off. No. Turn of. Oops. Yeah, I don't have a good source. If someone wants to comment it, I'll say the process for Webull. I know yesterday we did that, but it was fairly easy. I just don't remember exactly how. So we're still floating around the same numbers here for AMC, down 2.5% after hours, which, I mean, who knows about after hours, how accurate they really are. I swear that wasn't a yawn. GameStop down 1.76%. So someone says on the phone app for, I assume for Webull, it says click the center button, click more, and it's on the third row. Someone also said I had to call my brokerage Fidelity. They will lend out your positions if you simply just have a margin account. I had 100% equity and saw specific stocks gray. Let's see here. Just saw an email pop up. Okay, so I just received a screenshot. I can't show it. He wants to remain anonymous. It said, "What's up, man? Please keep the name anonymous. I'm holding 45,206 shares of AMC at a $4.95 cost average. Blessed to be in this situation at just 22 years old. But I truly believe with patience, we will all make bank. Thanks for the stream. You've kept me believing and given me something to listen while at work." All right, so here's a picture. I can't show you this, but he sent me a screenshot from yesterday where he was down $247,000 and still holding strong. That is insane. Wow. Some of you guys have some just iron nuts. That's all I got to say. All right, going back here to good old Reddit. Oh, here we go. Someone said we will turn off the share lending. Open your app, main screen, more option. That's next to the transfer option. Click stock lending program in green text. So just more options and then stock lending. It's 2 clicks on the app. So someone asked, so the hedge funds can redeem their shares if they want, but they have to pay interest on losses, ? So you don't necessarily have to close your position on the expiration date. To my knowledge, they can keep on paying interest, and that was a common confusion that we thought that the positions would close last week for a lot of like GameStop. So I'm pretty sure they can keep on paying interest. It's just a matter of how long do they want to keep on paying interest on their borrowed shares and tanking, basically. Yeah, this is a great question. You think these hedge funds are baffled by how many people are still holding? They've got to be, honestly. If they really are doing all the tricks, that the assumption of all the tricks with, you know, the short ladder attacks and all that, they've got to be like, I cannot believe these people aren't selling. It's like everyone I know is holding at least a share or you know, some small fraction of a share. Yeah, I think this is important. This is not a fast race. And this also goes for AMC. I mean, most of these Reddit posts have to do with GameStop because I don't think they like the AMC talk there. There's a lot. I think there's a lot more talk on AMC on Twitter and TikTok for whatever reason. 7.5 hours staring at a graph for it to go up by 1 point. Yeah, 8.5 hours on this live stream. But at least with AMC, we're up 15% or something like that. This is very important. Even though this is very attuned to GameStop, just remember they pretty much move 1-to-1 or very close to 1-to-1 with each other. So if GameStop goes up, pretty much AMC also goes up. I guess with the exception of today where AMC jumped up a little bit more, but a 15% increase when your share price is $8 doesn't make a huge difference price per share wise. So this person in the super chat said, bankrupt by lockdown, 2K left in the bank, threw it on GME yesterday as an FU to the system. I'm holding. Well, I'm not recommending you do that. That's for sure. You, sir, should pay your rent. Well, also what's funny with this is, with this whole situation is, yeah, there's certain hedge funds that we're taking down, but there's other hedge funds that are making bank off of all this. I mean, the biggest institutions aren't necessarily hedge funds, but I mean, the biggest winners aren't necessarily hedge funds, but are institutions. Probably not all of you have seen this, but let me pull up a little document that I put together yesterday. Let's see here. Okay, so this is the GameStop's biggest winner and biggest winners, and this is as of Friday, so I can change the prices a little bit. I'll change the prices to reflect pretty much today. See, GameStop CEO George Sherman, 2.3 million shares, bought in at around $9. Total value buy-in $20,700,000. Right now he's sitting on $209 million, even after the decrease. I mean, as of last Friday, it was at 325. Oops, opposite. He was at 726 million at one point. This guy is in a real sticky situation because as the CEO, you don't really want to sell your stock because it just doesn't look good. At least you don't want to sell off a significant chunk of it. But you know he's sitting there, like this guy's not a billionaire. I'm sure he's worth multiple millions. But you know he's sitting there thinking like, man, I would sure like to take a chunk of that 726. But it just doesn't look good. So I really wonder what he did. We'll have to wait to see some quarterly filings. But most of the other winners are asset management, hedge funds, those type of big institutions. They actually sold, and they sold at 340. They're the 9th largest shareholder. They had 3.3 million shares. Bought in $5, turned 16 million into 1.1 or 1.122 billion. Absolutely Insane. Next, we have this guy, Donald A. Foss, who is a entrepreneur out of Michigan. He started like a low credit service business, I think, for auto loans. Took it public and then retired in 2017. This guy got real lucky. 3.5 million shares bought in at $4 a share. This was as of Friday. Took 14 mil up to 1.1 billion. I don't know if he sold or not, but as of right now, he took that 14 mil still to 336 billion. Absolutely insane. Most of these other ones they're just management companies, but you can see they hold very significant holdings and are all up in the billions. Vanguard Group, number 4, they have 5 million shares. Took 54 mil up to 1.7 billion as of Friday. As of today, up to 530 million. Vanguard, actually, though, they hold GameStop in 40 different funds. So there wasn't any one fund that was very GameStop heavy, I'm assuming. BlackRock, they hold 8.6 million shares of GameStop, and they also hold 6.3 million shares of AMC as of a filing that was submitted yesterday. So BlackRock is winning along with the individuals here, and BlackRock is the biggest asset management company in the world. So we're not necessarily sticking it to the big guy because I think pretty sure this is literally the biggest in the world. They have like 6 trillion in assets, 8.6 million shares. They brought their at the current price around $100. They brought 87 mil up to 700 mil. As of last Friday, when I first put this together, they took 87 mil to 2.7 billion. And then we have Ryan Cohen, who is the individual who made the most out of all this chaos. Holds 9 million shares, and he's got a seat on the board. He's actually a big reason why this is all happening, because there's a lot of people who believe in his strategies and where he wants to take the company. But this was as of Friday. Turned 75 million, which is pretty much nothing to a guy who's worth like 2 or 3 billion. 75 million to 2.8 or 2.9 billion, an increase of 2.8 billion. Just wild. Average buy-in of 843. Number 1 is Fidelity Investments. They hold 9.5 million shares. And again, that's in a whole bunch of different funds that they own, they operate. And Fidelity is where we've been getting the data here on the buy and sell orders. So in the super chat here, it says, if your broker doesn't give you the option to not lend out shares, that is, I believe you can put an order in and then they can't lend those out because those shares are tied to an open order. Okay, that's interesting. So if you were to set like a real high sell order, they may not be able to lend out shares. I know this is kind of a stretch here with Google, but we'll see if it says anything in here. No. I don't think we're going to get an answer very quickly here. If anyone has any articles to answer this, if a broker can lend out shares, if you have a sell order, let me know. It would make sense if they couldn't, because if there's a sell order, the system probably isn't smart enough to know that there's a crazy high sell order so they can still lend out shares. Let's see. Is it true that putting a high limit sell order will prevent shorts from borrowing your shares? This says it's completely untrue. It says you must request a certificate of your stock in order to be in possession and keep them from being borrowed. Most brokers do not do this because they make a percentage for the transaction. With a fully funded account, you can collect these interest rates / rebates yourself. Your broker is the holder of the position and the rights and the reserves the right to loan your shares any given time. Well, this person says any sell order will make your shares essentially equivalent to already being sold. So that doesn't help us at all. If someone has a link to that, email it to me, maxmahershow@gmail.com. Sorry if that confused anyone. I'm glad I scrolled down a little bit further. So GameStop went up a tiny bit from where we were at earlier. Now they're just down 0.5%. AMC is down 2.34%. Not yawning, I swear. Just under $9 per share here. Silver, which no one wants to talk about for some reason, up just a tiny bit after, and up a tiny bit during trading hours. Well, I guess silver doesn't have after hours. Express had a pretty good day. Nokia, kind of flat. I swear that wasn't a yawn. Well, Max dress up as Tarzan on the stream. I'll dress up as Tarzan if we break $50. That's what I'll do on AMC. How many AMC shares do I have? I have 305. Thanks to you guys yesterday, I bought, I think, 130 more or something like that. When we broke 150,000 subscribers, I bought another $1,000 worth. Those shares are up a little bit because I think I bought them at like $8, but all it did was bring my average down to like $10.99 or something like that. Look at the buy versus sell. We were just looking at that, but GameStop buy versus sell, crazy high, 73 versus 27. AMC 64 to 36. Pretty wild. Look at this. HCMC, which they had a real good day today, up 17.8%. 89% buy today. That's pretty wild. Pretty wild. So most things were up for the day. I know Amazon was down a little bit earlier today, but check Sundial. Sundial's right here. Pretty much all the stocks that that people mention frequently, I have pinned right here. If you're curious where exactly they're at. But Sundial, looks like they've had a few good days recently. Holy, plus 48%, down 14%, plus 16%. Wow, they're all over the place. Nokia's right here as well. All right, I think I got a bunch of emails in, so let's check out some of those. Someone just asked, related to the AMC squeeze, are hedge funds waiting to see a critical mass of available shares for sale before we get to the top of the squeeze, dollar-wise? I mean, if the hedge funds are trying to buy out their positions, I guess they would wait for the price to go lower and, yeah, have more available shares. But we really can't can't really know what they're doing. You know, in a lot of these instances, we would assume they would have already just bought out of their positions. But the thing is, the higher the price gets, you just have more people shorting the stock. I guarantee when GameStop was at $400, there was tons of people shorting that. So that just ups the short interest. Let's see here. All right, we got a meme here that someone wants us to watch, so I suppose I'll oblige. We can give this thing a watch. That was a bit annoying. Midnight meme review with Max. Okay. Okay, we got another. Just a real quick GME AMC meme from Gimpy the Gamer. What else we got here? Okay, we got something else to check out here. This is just a post, so I mean, bear in mind, this is just what someone says. Here's what's happening now. After Monday and Tuesday, $543 million worth of short shares started accruing interest because we are finishing above their price target. If we close above $6 today, so this is for AMC, I guess. Actually, I'm not sure. I guess it could be either. It must be GameStop, actually. If we close above $6 today, another $554 million of short share interest begins. 543 plus 454 equals about $1 billion. We are choking, and the tap out is coming. This is why Mark Cuban said, just hold. He understands. Interesting. I'm not sure how they're getting the exact interest of each share, because the interest is different based on how many shares are already shorted. So if anyone knows where to get that data, send it to me in an email. maxmahershow@gmail.com. Yeah, I got that same screenshot a few times, actually. So someone says they talked with TD Ameritrade today, asked if my shares were being borrowed and sold. They told me that shares cannot be borrowed unless I have bought the shares on margin, which I have not. Okay. So let's see here. It says it's the best hope for GameStop now. Over under on AMC hitting $10 by close tomorrow. If I were a betting man, I probably would say it'll hit, it'll go over $10 tomorrow, but of course that's just my own guess. Let's see here. This says this is your best hope now. We're up over 1,600% in January alone. This was as of yesterday, I guess. The stock had been the most heavily shorted on the market, therefore, when a herd of retail investors started buying up shares, an epic short squeeze ensued. So this person's saying, don't count on a squeeze 2.0. To understand why we shouldn't expect a fresh iteration of the GameStop short squeeze, we should explore how these work in the first place. When shorting a stock, you borrow shares and then sell them. To cover your position, you buy shares, returning them to the owner. Your profit or loss is the difference in the price, minus the interest that you pay, of course. In GameStop's case, retail investors bid up the price first, sticking short sellers with massive paper losses, trying to avoid further damage. The shorts simultaneously ran for the exits, sending shares higher still. This is a short squeeze, and it can last as long as a significant number of shorts are covering their positions. However, short sellers may have already mostly covered. According to Bloomberg, a Bloomberg article citing data from IHS Market only. Okay, I need to look up this data because there's a lot of people saying that Bloomberg's article on this is not accurate. I mean, we were just looking at another article that said 226% short interest. But let's read through this just because it's good to have perspectives on both sides. We can't just ignore anything against it. For perspective, it was over 100% short interest this last month as the squeeze started. Okay, well, so basically they're saying your best, this guy is saying your best chance of making it big on your investment is just to hold. But I've heard a lot of people say this 39% figure is not accurate. So let's look up IHS Market. And see how they got this. Let's see here. Put the short interest, shorted by 23%. The January 15th short interest data was published on January 27th and showed that the short interest had only declined by 9.4 million shares as of mid-January, confirming the signal suggested by the share borrowing data that the majority of short positions remained in place as of January 15th. The number of shares on loan declined by another 19 million shares from January 22nd to 28th, suggesting that a larger portion of the short position was covered amid the surging price during that week. It's worth pointing out that the total short interest or shares of loan were a tiny fraction of the traded volume in this time. Okay, but how do they get the data that it's decreased that much? Sorry for the dead air. I'm just trying to do a little bit of reading here. There's AMC down there too, which we'll look at in a second. I don't see. Thanks, Trey's Trades. If you guys are looking for a channel who is covering these things, he just did a super chat. He's worth a follow. The only limit would be short interest couldn't increase by more than the share amount. In practice, many investors only make up a portion of their holdings available. I'm not seeing where this data came from that they're citing, though. What was the exact percentage? Save this. Sorry, real-time research might not be the most interesting content, but we'll find an answer here. So 39% of free-floating shares. So let's just see. See, 39% isn't even referenced on the website that they're citing. This is 35%. Let me see. Yeah, not that either. Short interest in shares of GameStop fell to 39% of the float from 114 in mid-January, according to IHS market data. Am I missing something here, or it says it's according to the data? We look at the data here, and it does 39% isn't even referenced on this whole page. There's not a 39 on the whole page. The short interest data was published. This is one legitimate concern. When we look at the days to cover ratio, the days to cover ratio is based on the average trading volume. And recently with GameStop and AMC, the trading volume is so much more than the average. So trading volume, let's see. Before I go back, just so I can finish this thought. So you can see here, the trading volume for GameStop today was 41 million. The average is 24. The days to cover ratio is based on the average. So this is important because let's say the days to cover is this high 226 number. If we take, or what's the total? There's 69 million shares. So that would be how many shares are shorted. 156 million with this current average divided by that's 3.8 days. Now, how do they get a 2.5? This should be called like the true average days to cover. Let's see what AMC. So it says their short interest increased 15%. Trading volume today, 217 million shares. Which I feel like, what was it here on? Yeah, 217. Okay, that's accurate. So AMC has, looks like 339 million, yeah, 339 million shares. So if we go, it says it's, where's the percent shorted? We gotta go back. If we use this info, saying short interest, 38% of the shares are shorted. I can't remember the total shares. It's been a long day. 339 million shares. So we take 339 million and we got that's GameStop. 38% of those. 128 million. Where's that other page we had? No. Alexa, none of that. Oh, there we go. So daily volume today of 217 million. So that would mean the days to cover would be just over 1 day. I'm not sure where they're getting this 0.6 nonsense. But that means a good thing for anyone holding AMC, because if it were to be squoze and there was a rocket in price, there's an entire day's worth of trading volume that would need to go through in order for every one of those shorted shares to be repurchased or to be purchased back. This obviously, I don't know where they're getting these numbers from, because that's not even based on the average. That's not based on the average either. So anyways, going back to this data, I'm a little frustrated with this data because this 39% figure that keeps getting floated around is nowhere to be found. If every holder is willing to lend 100% of their holdings and no holders were restricted from trading or lending, then the only limit would be that the short interest couldn't increase by more than the total shares outstanding in each day. This is important to realize that there is not a logical inconsistency in more than 100% of shares outstanding being short. As an example, imagine that there is an investor who owns 100% of the outstanding shares of a firm and a short seller who every day borrows 100 shares and short sells them back to the long investor. Eventually, the short seller will be short 100% of the shares outstanding, at which point the long investor will be long 200%. On that day, the long investor would have custody of 100% of the shares and could lend some or all of them to the short seller again. In practice, many investors only make a portion of their holdings available. Some don't lend at all. Others own shares in margin accounts, which they may be lent depending on the usage of the margin debt. So there are far fewer than 100% of the shares to start with, and the purchaser of shares from a short seller may not lend them, both of which result in uncertain supply of shares for the short sellers to borrow. The supply of shares from beneficial owners in securities lending programs can be tracked as a real-time indication of availability from institutional owners of shares. Still not seeing anything about where they got the 39% short interest from. I mean, we literally read everything IHS has to say about GameStop. Let's just double check. I don't know, guys. Something fishy's going on here. Either I'm completely missing something, or I have no idea where they're getting this 39% figure from. That's cited in literally articles across the entire internet of the short interest for GameStop. This is what I was talking about yesterday, where, I mean, one reporter could have looked at one of these graphs and, I don't know, got 39% or something and reported it on Bloomberg, and then Yahoo Finance and CNBC and everyone else, Fortune.com, they all just report on the 39% short interest, which I'd love to be corrected here if we can find the actual data behind it. Someone says the video that I showed explains it. It doesn't explain how they got the 39% short interest. It explains how shorts work, though. So we have here something about AMC, so let's check this out. AMC Holdings serves as a reminder that short interest may be more than it seems. Firms in the movie theater business have been popular shorts since the pre-COVID era, and AMC was among the most heavily shorted firms in terms of both borrowing the firm's bonds and equity at the start of 2020. Bond borrowing substantially unwound during March and April. While a contingent of directional equity short sellers likely remains in the trade, a portion of the recent AMC short position is likely related to hedging the firm's outstanding convertible debt, which was converted on January 27th. So this just explains why the share borrowing price could have increased. Yeah, this is pretty frustrating. Literally all articles are citing this. Let me just double check that. Okay, so did they cite their sources anywhere here? You know, you'd think if they're using this data to literally write an article, they would cite where they received that data. That would just make way too much sense. Anyways, something fishy, if you ask me. All right, let me check my email real quick. See if we got any updates here. Yeah, we know what short percentage is. We just don't know where this 39% figure came from. We also don't honestly know where the 226% figure came from, because the numbers aren't reported anywhere, because they don't have to report for another 12 days or something like that. Okay, let's see what this... short interest. Sorry, sometimes I get sent links to things that just lead nowhere. Anyways, in summary, something's fishy. And the short interest lands somewhere between 40% and 226%, which doesn't help us at all, because that could be a days to cover ratio of half a day to 6 days, which makes a huge difference as to how long the squeeze lasts. My email is maxmahershow@gmail.com. AMC is pretty much the same as it's been in the last couple hours. Dang, it feels late. It's only 4:30. Guess the stream's been going for over 9 hours. I have, oh, sorry, I thought I had that pulled up. Losing my mind over here. Oh, last of the coffee. Yeah, I hate to see that. Can we get a recap of the day? I can do a little recap. Let's see here. We'll do it hour by hour. We'll do AMC since I think most of the people here are holding AMC. We started out a little down from the day before. Saw some big drops. Everyone was scared. Everyone was crying. We thought maybe the world was going to end. And then it was basically flat for a couple hours, and it was kind of boring, to be honest. We saw a little bit of a sell-off, and then come around 12:30 noon, there was this rally. There was this rally to buy one share at 1, 2 shares at 2, 3 shares at 3. And really, I think that's what made this day a win, to be honest. Because as soon as people were saying that here in the chat, it shot up, basically. That was the turning point. Let me pull up another graph. Someone says, I hold 3,200 shares of GME, still feeling cute and confident about the price the next few days, holding till I get blisters. Give me a good answer, please. You didn't ask a question. You got to ask a question to get an answer. Who's my Wi-Fi provider? Cox Communications. However, they went out yesterday briefly, and luckily the stream didn't completely end. someone sent me a screenshot on Yahoo Financial that shows, what is it, 38% short interest. However, what I'm wondering is where are they getting these numbers from if it's not reported for another 12 days? Oh yeah, some of you wanted to see that Tarzan update again, who just came in here. Let me pull that up again. I gotta find it. Got a lot of emails here. Yeah, so those of you who are new here, we had a viewer yesterday, Christopher, who decided to paint me as Tarzan fighting the hypothetical hedge funds. Hedge funds being a tiger. So there it is, for those of you who wanted an update here. And we have a few other emails. Let's see. Just taking a look at this site. This is for AMC. Yeah, is word on the street to do another 1-at-1 tomorrow with AMC shares. Thank you, Death Hunter, for the super chat. And thank you, Sleepless Hustler. Bottom of the page. Okay, let me check that out real quick. Let's see here. Okay, so here we have at the bottom short volume. So it looks like 61 million shares shorted today. And this is for AMC, by the way. Let's see if I can just... Here we have short volume for GameStop. Thank you to everyone who has subscribed today. If you haven't subscribed yet, just go ahead and subscribe. You got nothing to lose. You can subscribe for a low, low payment of $0. And if you hate me in a month from now, you can always unsubscribe and leave a mean comment. So there you go. There's my pitch. Yeah, BlackRock is our friend, I guess, right now, because they own pretty much the most, close to the most shares, both of AMC and GameStop. The meeting went fine. It wasn't anything crazy. We do have some stimulus updates, which I could either do here on the stream and clip it, or I could just do it later on today and post it as a video separately. I know you're not here for stimulus updates, but there is some news to cover there. Yeah, this is the best group ever. You guys are very positive in this chat. You don't see that online very much. Thank you, Dennis. Says, will it break even at $132 for GameStop tomorrow? I mean, it's hard to say. Where do I see GameStop going? I think we had a pretty good day for both of these, and people are going to go in tomorrow kind of ready to buy or ready to rally. I'm not sure how many people. It seems like everyone's holding. I'm not sure how many people are even able to buy, but I think tomorrow will be a good day, to be honest. I think I'm getting a hang of this whole streaming thing. Thoughts on Sundial? I get asked that like every hour. I mean, my thoughts on just cannabis in general, obviously there's a lot of talk about sundial growers, so maybe they'll be the ones to make it big. But just like anything, there's going to be one or maybe two huge winners. Is it going to be sundial? I don't know. You probably don't know either. But if I were to look for the best cannabis company, I would try and search for the one who's positioned to blow up the most, positioned to grow more than anyone else. What exactly that means in the cannabis industry, I'm not really sure offhand because I'm not an expert at the cannabis industry, but there's going to be one or two huge winners, and everyone else is kind of going to be the long tail where they don't make nearly as much money, and that one or two winner is going to be they're going to 100x their price. I can pull up any XE. I can put it on the watch list for you. Okay. I'm going to check the emails again here. See if there's anything we haven't covered. Let's see. So we got a real investigator here. I just got Rick rolled. That was good. That was good. You know what? I gave you kudos way too early. I said we have an investigator here. I admit that was pretty good, Lorenzo. He says, here's what I was able to find when I emailed a journalist one of your articles, and it's a spreadsheet with Rick Astley in it. I can't even be mad. That was pretty darn creative. Oh, here's the stock lending program on your app. this is for Weeble. Thank you for that, Andrew. I appreciate that. Okay, so here is a short squeeze interest chart. It says it plunges, but look at source, Bloomberg, IHS Market. Yeah, Bloomberg is citing IHS, and IHS it doesn't even mention this. What's even going on here? This is nonsense. Someone asked, can I cover what can go wrong? I mean, you could lose 90% of whatever the share price is, very worst case scenario. Thank you, Jesus, for the super chat. All right, I think I'm going to call it a day on this stream. I'm going to do another stream tomorrow morning. I'm going to start as soon after 7 a.m. as I can. I'm in Arizona time, so that's half hour before market open. I'm going to do another stream. So make sure you are subscribed. And also I'll schedule the stream so you can set a reminder if you want. But make sure you're subscribed, and we'll see you tomorrow. I just might do a marathon stream and just see how long I can go. And we'll have some fun with it. So before we go, like this stream if you enjoyed it. Say your last goodbyes until tomorrow. Send me some emails if you have some stuff you want me to cover tomorrow, maxmahershow@gmail.com. Or if you want to paint something or draw something, we'll showcase it on the show tomorrow. And yeah. Good night, everyone.